Screw it. Live again. Live again. I just need to I honestly just have like a 24-hour stream just going, like no matter what. But I wanna edit my comments. I wanna edit my comments. Should I just do that? Should I just like have a 24-hour stream just nonstop and then just hop on? Can you imagine? That'd be crazy. Whoa, 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 whoa. Am I even live right now? Yeah, yeah, yeah. Sorry, I gotta change the. I have to go in there and then I have to change the comments within here. Which I know it is what it is. Something that I just started to do just to kind of like block my mind, you know? And yeah. I was listening to a Twitter space today. It was really good. It's about pushing people away and having hobbies outside of trading. That's what made my mental log on today. We're gonna continue to go into this fractal. I just kind of went over. Hey, appreciate the sub. I just went over this day, and I'm gonna annotate this and deep annotate this. I kind of feel like putting some jazz on. I'm gonna put some jazz on for sure. Just put on some chill jazz in the background. It's not an actual breakaway I got. Jeez. $9.50 macro. We have manipulation up into this order block. Is this NFP's delivery? Do I have these new week opening gaps on? Oh, this is a 5 minute imbalance right there. Let me come back below true day. There was a new day opening gap though, or is that on NQ? NQ distributes from new day opening gap. NFP is likely not a trending profile. We're likely just gonna seek liquidity. It's a good liquidity study. Breakaway gap comes good draw on liquidity. Change day delivery. This nice gap right here. We get a stop on around 50% accumulation. the 150. $250. Market on close. Then you have the 350. Buy side taken. Buy side taken. What does that make this? A breaker? Oh. 2022 model. Simple. Allow the volume imbalance to get traded to. Your stop could just be at this high. If you get stopped, you get stopped. It's simple as that. We didn't trade into a 15-minute gap. Do you have SMT here? No. I thought it was that for a second. We didn't have SMT. I do want to look at the 1 hour. I want to see where we had manipulation. 8 a.m. manipulation, 9 a.m. distribution, 11 a.m. rejection block, and then we distribute lower. Short-term sell side. Short-term sell side. We have this volume imbalance here. Do we? Yeah, it's a volume imbalance there. Volume imbalances, for my case studies, like to get traded to within the last hour macro. '22 model. Just trust it. Kind of want to replay this just to burn it into my brain, you know. Oops, that's not what I wanted to do. Okay, we delivered buy side. We have low resistance liquidity, and we have this volume imbalance here. We're in, sorry, excuse me. My 250 macro is opening up. Okay, we're taking buy side again. Alright, we have displacement here, so this now becomes a breaker. We've had a market structure shift and buy side taken here. We have liquidity that is yet to be engaged here. Dang, I keep on doing that. I'm selling. Just trade into a fair value gap. This is the 2022 model right there. We're still within this breaker. Okay, this is just a retracement. Also another entry. Also, we're taking this high here. We left equal lows. And then now we have an imbalance here. Pair that with this mitigation. See if we deliver to sell side. Okay, we just had a retracement into this fair value gap here. Also another volume imbalance. It was nice to see this 2022 model play out. Buy side. Some really nice PA for ES. I want to listen to this Twitter space. It's May 13th, which I'm pretty sure is Monday. Yeah. Wait, that's May. Wait. Oh, that's May 13th. No, there's still time for that. I thought it was March 13th. March 10th. Okay. I thought I was gonna listen to that, but not. Alright, next day. Nice price action there. Beautiful. Okay, so we have displacement. Wait, what type of new week? So we gapped higher. Now we're below this gap. So we're probably gonna displace lower. We do a lot of trading within that new week opening gap. We have a smaller gap on NQ. Okay, we're in a deep discount. All previous new week opening gap access support here. We have like a higher time frame draw. Not really. So we're relative to this liquidity here. 8 a.m. we have manipulation. 9 a.m. we have distribution. 10 a.m. distribution. 11 a.m. or 11 a.m. distribution. Pretty fickle PA here. So we're in a deep discount. Consolidation into here. What type of news? No red folder news. Before a Fed announcement. Or we just had a Fed announcement. Before CPI. So no red folder news before CPI. Oh. How many handles is this? 20. Oh, that's plenty. The next lecture is the 15th. New month. New month opening gaps. So I have those books too.
youngest still, he's a little bit slower than the average person. I mentioned he was harmed by a vaccine when he was born. And while he's not terribly slow, he's noticeably slower than the rest of my kids. Bright child, very artistic, very creative, but he's slower academically. And sometimes he still talks to me like a little kid. And he'll ask me, he'll say, Dad, if you could be a superhero, what superpowers would you pick? And it's almost like he forgets that he asks me this question. Every 3 or 4 months, he'll ask it, and I'll tell him, something different because I know he's asked the question before, but I want to treat it like it's a new conversation and a new opportunity to broaden his opinion about what it is that we're talking about. So because of that conversation with my youngest son, it made me think about this tonight and how I came up learning these things, developing these things, being inspired by how these markets really book price and really taking a step away from what everybody else and what I was introduced to, like everybody else is. You read the same stuff. Everybody looks at the same thing, the same books, the same strategies, the trend lines, and all that stuff. And there are people out there that make money with that. Absolutely. But my opinion, and this is simply my opinion, it may differ with you, and you may not agree with what I'm about to say, but just because someone makes a lot of money, I don't really think that makes them a market wizard. It makes them an extremely profitable trader. Absolutely. That's skill. That is absolute skill. There's no denying that. But I don't really see that as a market wizard. To me, that conjures up ideas of precision, accuracy, foresight, higher strike rate than the average trader, knowing not to go into areas where it's not likely to do well. Where other traders that are extremely profitable, they'll take more losses because they're comfortable with taking losses and they're comfortable with coming out of drawdown. Whereas, in my opinion, a market wizard would be abstaining from that and knowing when not to do those things. So when I was a younger man, I made a list of things that I wanted to really focus on. One of them, obviously, I mentioned this many times in passing. And if you're a new listener, I'll just toss it in here because you may not have heard it yet, but you probably will if you go through all the stuff that's on my YouTube channel. But one of the first mentors to me, and I've never met this man, so please don't bother him like other people have done. But Larry Williams, I purchased everything that man put out when I was younger. Whatever he did, I bought it. If he had an article that he did, wherever he did anything, I got it. He was like, he was like my Babe Ruth. He was like my Rocky Marciano, my Muhammad Ali. He was the person that I aspired to be like. I wanted to be like him, not in the sense that everybody looked up to him because he took 10,000 to 1.2 million dollars in a year, but because he had tools that I felt were market wizardry. What tools am I talking about? Mostly what he has written in his book, How I Made $1 Million Trading Commodities Last Year. It's a 1970s book, but 75% of that book is still relevant today. I don't subscribe to the lunar phases and all that bullshit, but all the other stuff, the chapters that he dubs his $1 million tools, they absolutely are exactly what they are titled. If you're a commodity trader, that stuff still works. Most of my understanding of what a mega trade is comes right out of that book. And what I've done is I've heard him in his lectures and his keynote speakings and everything that he's ever talked about and taught on. And wherever that man said he had a difficulty overcoming this, or he tried this, it didn't work for him, so therefore I used that. Well, if he couldn't do it, let me see if I can go in there and figure that out. Because I've always been a person that loved puzzles, jigsaw puzzles, crossword puzzles, word searches. That's how my mind thinks. I'm extremely analytical and I'm obsessive. So if I hear someone say they have a issue and I have an affinity for them, my whole point of doing it was I'm going to fix this problem for them and I'm going to share it with them. And they're going to appreciate me because I've done it. That was my 20-year-old mentality going into most of what I was trying to do as an initial trader, trying to figure out these puzzles. And one of his lectures, he mentioned how it was a short-term trading. I don't want to call it a workshop. He was standing up on like the stage and just talking to the traders and such, and kind of like an auditorium event. And it was on the topic of short-term trading. And he mentioned how he had no real understanding how to figure out how to buy at the low on bullish days. He would always buy on strength. Most of everything he did, all of his trading systems were buying on strength, buying on strength. If it opens below the previous day's low and it rallies up 20% of the previous day's range, he's buying strength. Well, that's to me, that's chasing price. And that's why he has these really large stops, $2,500 per contract. That to me, that's a lot. It's very forgiving when you are very confident that you think it's ultimately going to go a certain measure of handles or range. But I never felt comfortable with that. I tried very hard to use his mechanical systems and his rule-based ideas, and I couldn't make none of that work. It didn't fit with me. And to me, it highlighted this need to be a market wizard. I wanted to be with that title, Jack Swagger's book. I wanted to be that title in flesh. or they wouldn't even understand it because most people, unless you are a trader, everyone we tell when we say we're investing and trading, day trading, right away they know you're off your rocker. There's something different about you. You're eccentric. That's a nice way of saying you're fucking nuts for wanting to risk your money like this. You have to be a special type of person to believe in yourself doing this and making money. The average person just can't do that. So you should feel good about yourself because you're cut from a different kind of cloth. And when I was younger, I knew that about myself. I knew, even though I felt overwhelmed when I would blow my initial accounts and I was frustrated, I wanted to just work right away. I'd go back to my notes and think, okay, what is I'm trying to do? Where am I going to focus? And I wanted to come up with these approaches that would zero in on very specific turning points in the marketplace. Because I knew, because of my personal losing trades, my stop loss would many times be the very turning point in the market will go the other direction. And I think to myself, okay, if this is a net sum zero game, every loser, there's a winner on the other side of it. Okay. How on earth can I be using everything in these books, going from system to system, using everything? I followed these rules. I followed them and they didn't deliver. So it made me wonder if I'm this inconsistent as a new trader and I'm doing the same things over and over again, I need to come to a point where at the moment I feel like I need to be doing what these books tell me to do, I need to stop right then and there and flip the script. If I feel like I have to be a buyer based on that bullshit that I was looking at all those books and trying to utilize, stop. Look for what would exist at the opposite spectrum at that very moment. What signatures in price action would I see if I'm ready to take that trade? If I am committed emotionally and psychologically to follow the rule-based ideas that these retail concepts are supposedly teaching us, at the very moment that I have committed, I'm about to take the trade, then I have to stop. Turn everything upside down, quite literally, and then look for what it is in the chart at that moment. And that is exactly what I was doing on America Online when people were watching me on that message board, run up trade after trade after trade, calling everything in advance. And anybody that would have did trade for trade, everything I said, would have done $90,000 in 1 month without any pyramiding. And that's what got my attention, or that's what got everyone's attention, and started following me. Like you're all following me now because you see me doing things with precision. Every single person that's came to me has come to me by way of seeing something I've done, or you were shared a video of me executing on something. And you noticed that that's something different. That's different. Sure, people buy and sell, they make money, it's wonderful. But they're not doing these same laser guided entry points, pyramiding and building up and building up and building up and going right to the same thing all the time. Targets filled, targets filled, targets filled. You're not seeing $15,000 max loss days in the same week multiple times. You're seeing levels, thought process, narrative, walking you through every individual candle, and the logic that it should deliver to. And it goes against everything that every book that I've ever purchased tells me. So I sat down, and the first thing I figured out was my power three. Larry Williams says he couldn't figure out how to buy below the opening price on bullish days. Nothing, nothing he had allowed him to do that. That's his words. Was he lying and he did it, surreptitiously in his personal trading? We got to take him at face value. He said he didn't. And that's what I did as a 20-year-old. He says he didn't. So that was a personal challenge to me. I'm going to conquer that for him. He was my hero. I wanted to do that and say, here, look, here's my contribution for producing all this material. Who at the time, as a young man, I felt like he did this just for me. Like all the planets aligned. This was the answer to prayer, much like what all of you say about me. I was in awe of his works, his books, everything he did. I was not that impressed with his 10,000 to $1.2 million. I was not impressed with that because I understand that that is absolutely nuts. That's not trading. That's gambling with charts. That's what that is. Anytime you are competing in a competition like that, the only thing you're showcasing is your ability to gamble. Now, if you want to have a competition where precision entries, lowest drawdown, accuracy, then absolutely, that's a trading competition. That's where world-class precision would shine. Because anybody can get lucky over leveraging accounts and doing dumb shit. If you've ever traded long enough with live funds, you probably experienced a run where you kept doing something too much leverage, too high a number of contracts or positions in Forex or shares in a stock. And you had this windfall victory. And you think to yourself, shit, if I could just do that like every other day, unrealistic expectations. So trading competitions, while they're wonderful, they're very entertaining, they're not really showcasing trading skill because anybody can over leverage on one windfall price run. And Larry Williams even said that about himself in 1987. He caught a good lick in the marketplace. That was his exact words. So I never looked at that and said that was an inspirational thing to me. I mean, I have to recognize it. It's the longest standing record in Robin's Cup. No one's ever come close to it. But I was more impressed with his tools, how he utilized open interest and how he looked for accumulation and distribution. And his accumulation distribution formula, while it worked a lot as a commodity trader, I saw it, it was there. It made me think about measuring accumulation and distribution, whereas I never would have ever considered it had he never brought it up in his teachings. So it brought this insatiable desire for me to go in pursuing how to track these smart money traders. When I came up with smart money concepts, just like my name, Inner Circle Trader, Larry Williams as my initial mentor, and I call him my mentor because I subscribe to 90% of what he ever said. Now, I probably use about 4 to 3% of whatever he's used and taught in my own personal trading today. But you can see his fingerprints and his influence over me. And I have still a great deal of respect for him. I'm so thankful that he put his work out there because he could have just said, fuck all of you. And I'm making my money and there it is. But it's a lot of money to be made when you're teaching. I've seen that. Lots of money. It's real, real easy money to do that. But you have to have something that's worth learning and you have to be able to show that it works. And that's one of the wonderful things I get to do with all of you. I show you real time. I call it live. I walk you through it minute by minute and you see it every single day. But these tools where he had his inner circle workshop, well, like I mentioned in Corb's interview, I've mentioned also in passing when I was on Baby Piss when they were asking me where to get a name from. That inner circle workshop, I was like, shit, I didn't go to that workshop. I wish I could, but I'm going to be the inner circle trader. And now I am. Smart money concepts. Sounds cool, doesn't it? Well, that was inspired by that book written in 1970 by Larry Williams. His smart money tools. His smart money tools, open interest, accumulation distribution, commitment of traders, and premiums. Premiums in the sense that you're looking at the commodity market and you're looking at a normal carrying charge market where the contracts, for instance, like if you're looking at oil, okay, crude oil, you're looking at the nearby contract now, whatever it's trading at. We'll just say, I don't know, because I'm not looking at oil. Let's say it's $100. And then the next contract in the future that would be traded when the nearby contract expires, it should be like $102. It should be more money going in the future. But if it ever reverses, that is considered a premium. And it's an inversion of normal carrying charge market pricing for the delivery contract months or a futures contract. And that means there's a real high fevered pitch demand, real demand. So supply and demand does work in that asset class. There's a real supply and demand need for commodities. You need it. You need oil. You need gold. You need grains. You need meats. You need coffee. I don't drink it. It's horrible. But people, they need to have that for their fix and caffeine shit. So all of that is a real supply and demand asset class. You can measure real supply and demand there. You really can't measure real supply and demand with a share of stock or a currency. There's a synthetic approach to doing it, but it's not the same as seeing it with a market like a commodity market, grains, you know, real tangible things, grocery store items, basically sugar, cocoa, coffee, orange juice, meats, cattle, hogs. So I have a lot more tools and concepts than Mr. Williams introduced to the trading universe and
here
community. But I
inside this order
absolutely
block,
subscribe to those that he taught.
and it's actually a 2-minute chart we're looking at here on the right hand side, and I'm aiming for
Not too exciting this
the
one.
39.12 buy side liquidity. I'm going to see it trade back up into that volume imbalance. If the volume imbalance will support price, then I'll feel like I'm on side. We have a buy side imbalance, sell side inefficiency. 2 candles to the left, that big green candle. And we might drop down into that BISI before running out 39.10 level.
SAA for homeowners. So I have a lot more tools and concepts than Mr. Williams introduced to the trading universe and community. But I absolutely subscribe to those that he taught because they are essentially how you can carve out the understanding of real supply and demand in the commodity markets. But I never felt like that was enough. I always wanted to do more. I wanted to over deliver and have an arsenal of weapons. One weapon that was good for when the market's going to reverse and go lower. One weapon that I wanted to use when it's going to reverse and go higher. One weapon when I'm going to trade in a trading range. One weapon when it's going to be an extremely hard, one-directional trending model. Very little retracements. And I set out to look for these things that would repeat over and over and over again. I paid so much money for old data, charts and chart books and things, all kinds of statistical data on every market, everything. Palladium, platinum, copper, oats, granola, flaxseed. Those things are very, very thin as a commodity market. But I had all that shit because I was completely immersed in this. I lived in property seeds. I'm with you every day.
Hit that volume imbalance. New week opening gap. We open up in a premium. We trade away from that premium. Trade to a level.
Market wizardry
I have SMT.
that I knew. I wanted to know I had a tool for that. We hear people say, "Oh, it doesn't matter what the market's going to do. Prices are going to come off a ton of shit, and you did this, that." You're fucking right. You're damn right. That's exactly what I spent my entire fucking adult life doing. I got tested to the fucking edge. And I'm sharing it before that happens, proving it, and you can't find it anywhere else. As much as other people out there, you got $500,000 left. Okay, let's start doing this. Let's pull the number of people saying, and people taking it on YouTube. I'm going to pay $500,000. No, fuck that. It's there's something behind these catalysts, these triggers that cause us to get in a trade, to place a stop wherever we're going to place a stop, to risk as much as we're going to risk, and to target where we're expecting to see market trade to as an objective or a terminus. And largely, if you look at what we have put up with retail horseshit over the course of your career and mine, it's a lot of bullshit out there. It's a lot of bullshit. And think about how much you talked yourself into believing that nonsense, hoping that it was going to take you out of your job, when you really had no fucking proof that shit was going to work. It was just a whim, a hunch. Oh, it's a hope, a wishful prayer. Man, I hope these moving averages and animal patterns lead to me making money so I can get out of my job. I hope these Gartley patterns deliver, these butterflies and bats.
Gartley patterns.
So I decided that I was going to spend my life pursuing real precision-oriented things. And I wanted tools that would tell me when to do something and when not to do something, and it would not be ambiguous. So I sat out and looked for when the high of the week would form and when the low of the week would form and what days they would form. And where was I inspired by that? Larry Williams. He would have this thing called Trading Day of the Month. Now, they weren't all that accurate, but the major turns, and let me paint a picture for you. Imagine a seasonal tendency for the S&P and the bond market over the course of each individual month. So if you have trading days for the month, we'll say an average of 20 trading days, Monday through Friday, 4 weeks or whatever. And what the market typically did, he crunched the numbers and he spit out this data that said, by far and large, this is usually what the S&P and or the bond market would do for this month of the year. And when I first saw it, I was like, oh shit, I'm going in there. And every single day, if it was a down tick on the line chart, that's basically what he was showing you, then I would sell short. And I got my ass handed to me. And then what I started doing was, and it really wasn't a smart thing to do, but I was impulsive, obviously, as a young man, and I was trying to make a lot of money real quick. But I noticed that the key turning point for each trading day of the month template that he produced and shared, if I just focused on the highest one when it was ready to go down, I was waiting for that one to occur, and the next day, then I would look for the trade to go short. So I was using it as a confirmation. But it really inspired me to look for things that would tell me what? A roadmap. Not only over a seasonal tendency that I get and have openly shared and told you, Steve Moore, for more research, you can Google him. His service is the absolute fucking bomb for seasonal tendencies. It is so good. I wish I could say more about it to make you understand how good. I've used this man's shit since 1995. There's never been anyone that came close to him. And what he's done, his material and the work in seasonal tendencies is the highest degree. And I get absolutely nothing for saying it except for the fact that I'm so thankful that he didn't keep it to himself. And what he sells it for, dirt cheap. It's ridiculous. It's crazy because he could sell it for a lot more. If the traders that looked at it knew how to utilize it, because the way he teaches it, in my opinion, it's not how I use it. But he talks about the best seasonal tendencies, kind of like filters it out for you. But that whole approach to thinking about seasonal tendencies like that, and then over the month, what does the S&P do for that particular month? Where's the main high and where's it usually go overall? If it's going to be a big down swing, the 5th day of the month, and it just keeps on going lower into the remainder of the month, that tells you it's going to be a really bearish month typically. And I'm not here trying to share or teach Larry Williams stuff. I mean, I don't know if you can Google it or find it anymore, but it was all part of his workshop. And that idea inspired me to go in looking for things that would give me an insight. And I literally scoured every fucking time frame on the S&P and on the bond market. I literally stripped those two markets down to ticks for years of data. I would have that shit in books, in spiral notebooks with me in my truck, delivering candy bars and fucking tasty cakes, coffee, and sodas and shit. And when I had 1 or 2 minutes sitting at a stoplight, that page was already open for me to start looking at shit again. I was a nut with it. I needed to constantly be a sponge. And every time I saw something, new ideas, I wouldn't say epiphanies, because there was a lot of things that I thought I was being led to look into, and they really didn't pan out. They were just dead ends. But over the course of 15 years, 18 years, most of what I have today, that is who I am, was derived from all of that shit, digging into things that really was an inspiration to be nothing like anyone else. Like I wanted to be able to sit down with a Larry Williams, you know what I mean, and say, here's what I've done. And I knew if I ever had an opportunity to see this man, and I just have to tell my oldest son, yesterday I said, he's in his 80s and shit, so he's old. But I would love to meet him, shake his hand, and then show him what I have done. And say, look, your shit's awesome. In the 1970s, I was fucking brilliant shit. But look what the fuck I've done. Look at this shit. Look at this. This is nuts. Like, how many times have you seen me call the high and the low of the day? Now, granted, I was off by a point today, okay? It happens. I've already made concessions with that and told you, hey, look, sometimes I'm off a little bit. But I do this day in, week out, month, year, everything. I've been doing this for years. Quietly, in my own little corner of the community as traders. Until I stepped out there, none of you knew me, and you didn't know this stuff was possible. If someone would have told you that you could forecast how the market's going to gravitate back to, think about those pivots, okay? Think about the 4 traders pivot numbers. I've used them, and many times the market would just smoke them, go right on through, and it's like they weren't even there. So what happened? People started doing what? Tinkering with it. Here's the version of floor trader pivot numbers. This guy's version of it. And this guy. How many fucking floor pivot numbers do you need? It's the same one that's always been used by the floor traders when they were in open out for IPITs, in the circular tail chains, in CDOT. It's the same fucking plain Jane pivot numbers. Okay. What happens is people take something, they tinker and tinker and tinker and tinker because they want to leave a mark on the industry. They want to be worshipped. And I wasn't really interested in all that. So I had all these tools, I had all these weapons of mass destruction. And the only person I was interested in sharing it with was Larry Williams. That was really what I was doing. I was building up this volume of work to say, look, this is what you fucking caused in my life. You inspired me to do these things. And I've never met him. And I know he's heard about me because trolls and such have commented and told, hey, Ice-T said you mentored him. And he's been honest. Look, I've been honest. I've never met him in my life. I've never met him. But he has been, like, I've never met none of you. But I'm your mentor. I'm teaching. I'm actively teaching you. I couldn't recognize you in a group of people as a person that listens to me. But you know that you are a student of mine. And if you introduce yourself, hi, I'm so-and-so. I listen to your mentorship lecture work, and this is what I'm doing with it, or this is my opinion about it. I would recognize you that way. But until the trolls went and started messing with him and his wife, unfortunately, harassing him, that moment where I could sit down with him and say, hey, look, you were very inspirational to me when I was a young man. You were a catalyst to cause me to go in and look for shit that is off the beaten trail. And for someone
315 macro opens, and we just immediately use this
place. These people out there just going after your stock. And I've said this publicly, not to be disrespectful, but he's fucking wrong. Okay, there's an entity out there that does that. Okay, and you're hearing it. So the point is, he inspired me to dig into things on a very deep and technical, pursuit. And I learned how to really call the highs and lows of the day. Where when you think about, like, when we were younger, back in the 90s, and I'm saying that, man, some of you probably are listening, you're older than me, and have traded using pivot numbers and shit like that, and you're laughing to yourself, I was using that shit too back in the day. But it wasn't really consistent with getting the high and low of the day. Usually you get one or two of the levels be hit and then be it. Usually the one level, S1 or S2, support level, one of them would be real close to the low of the day, sometimes. Then other times, it wouldn't be anywhere around it. So I was really never satisfied with that. I believed, as a young man, once I started digging into the data and started seeing shit, I'm like, okay, this keeps repeating. I see this. Like, I fucking see this thing, okay? This little thing that I called and dubbed the fair value gap. It's much like when, well, it was my nephew, well, not my nephew, my cousin, Aaron, my Uncle Stan's son. When I sat there and watched him coming up, and he used to read these little highlight books called Highlight, and it's kind of like a children's activity book. It would be mailed to your house every month. And in one page out of this book, I like to get it before he did. Before he came home from school, I'd already look at it, and I wouldn't mark it up, but I would look at it because there's a page in there that is a hidden picture book. And what it is these little things. It's like sometimes they'll draw a cup or a candlestick, a literal candlestick, not a chart like we look at candlesticks, or a shoe or a needle, something like that. And they hide that picture inside of a picture. So I've always been into shit like that. Like, I look for that kind of stuff. I'm analytical. I'm looking for patterns within patterns. I'm looking for shit that isn't typical. A puzzle. So when I started looking at price action, I was convinced that if I looked at it hard enough, studied it long enough, and turned every fucking thing that I've ever learned as a retail-minded trader, the shit that we're told to look for, what would be the fucking opposite of that? An indicator tells you what? If it's saying it's overbought, and retail's going to say it's time to look for bearish divergence and it's going to go lower, well, shit, I'm going to go in there and I'm going to look for a drop down into a fair value gap when it does that, and then I'm going to buy that motherfucker, and I'm going to reach for buy side liquidity. Because that's exactly how I lost my ass in my real accounts as a 20-year-old. That shit. Don't believe me? Go on your fucking charts. I'm not going to repeat it. You can rewind this when you listen to it on somebody else's YouTube channel, because I don't put these up on my YouTube channel. That costs too much. It's
wow.
Okay, I don't give a shit.
80 points.
You do not put my videos. There's a guy out there right now. Let me just say it right now. There's a guy out there that's taking my videos. I'm about to rip your shit down off of YouTube. You're taking my videos and you're trying to compress all the talking points out of it and just get to nuts and bolts. And I'm about to put a copyright strike against you. You know who you are, so take them off your channel and there won't be a copyright strike. I don't let anybody take my videos and re-upload them. I don't want you to do that. You've not been given permission to do that. Don't do it. But these Twitter spaces, I don't give a fuck how many of you do it. I don't care. I will never put them on my channel. So if you want to monetize them, you want to get grocery money off of it, God bless you. Go do what you want to do with it. I don't care. So.
Whoa. Do you think he's gonna? You think he's coming after me? Do you think ICT is coming after me? All I'm doing is studying. Hopefully he doesn't come after me and try to get me. I doubt he will. I love you, Michael.
Repeating phenomenon in price. And I started seeing these things.
That sounds like.
I was looking at open, high, low, close bars. So
not like that,
though. Strain on one's eyes. And I was never really early on a fan of candlesticks. Because I thought it was like a cop out, like this is like preschool. Who the fuck wants to look at that? A real chartist looks at the left tick, which is the opening price, one single line up or down, which is the open high. The high and low, and then the right tick to the vertical line that creates the high and low. That's the closing price. That's open, high, low, and close. So I put off using candlesticks for a long time. I wish I would have done it sooner. My vision probably would have been spared a whole lot of fatigue over the years looking at that shit. But I was looking at fair value gaps through the lens of the open, high, low, and close bar. It looks a little bit different. You got to really look at the ticks on that little tiny vertical line that makes up the bar interval, whatever time frame you're looking at. And there was charting packages that sometimes didn't have the closing price. It just gave you, I'm sorry, the opening price would just give you the high and low and close. So we didn't have all the benefits. But here's the thing. Here's the thing, okay? Why would some charting packages, some charting platforms, not show you an opening tick? Think about that. That was a fucking clue to me. I'm like, why isn't this showing an opening tick? It just gives me the high and the low and the closing price. What the fuck? Where's the opening price at? Where do we start trading at? And it made me think that they're hiding something. The conspiracy theorist in me started thinking, okay, they're not sharing that. So what the fuck's up? Just like the commitment traders report. We used to have to get that like every 2 weeks. And then it became an every week thing. But we still had to wait. It was a delay. It was a delay. It was a delay. And we had to wait for the volume numbers, what the real volume number was for the previous day's trading. We had to wait a day later. Why can't you have the fucking data today? Like, why can't you have that today? It was all these delays. So you're right now, you're fucking spoiled rotten and you don't even realize it because you have all of this information right in this little thing that I'm talking into right now, this stupid fucking cell phone. You have the world at your fingertips. Swipe here, click here, boom, 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 open up an app. You got information immediately that we did not have in the 90s and for folks that were trading before me. They didn't have it. Dinosaurs. We were fucking dinosaurs running around printing out the little tick. We had to guess on the chart. When we did our charts, we fucking wrote that little line, squiggly bullshit, on a graph paper. We guessed, okay, this is about where the opening price would be here in relationship to where we closed yesterday. There's no fucking measurement perfectly doing it. It's just eyeballing it.
That's
you know,
crazy.
the folks that's been around for a long time, Ken Roberts bullshit. We had to update our charts by hand. And some of you are so fucking impatient and entitlement minded, you can't even appreciate the level of technology you have today that I know I didn't have when I first started. So you can't track 20 motherfucking markets if you're doing the chart by hand each day. You'll never get anything done. And we updated what? Our stochastic indicator. Yeah, all that shit had to be done by fucking hand calculation. Okay, this is where the average would be here. The D line and the K line, this is where they would be. Yeah, man, that's how it fucking was. It's worse than your grandfather walking to fucking school and the store with no fucking socks on and flip flops and knee deep fucking snow. You heard the stories too. Everybody hears the bullshit, right? But in trading, this is the real shit. This is how it was. It was some archaic fucking shit that we had to deal with. And data was a premium commodity. If you could get your hands on data, that's what we were pursuing all the time. And I poured myself into that. And I started seeing these things repeating by reversing everything that retail would expect every trader using it would be doing. Just because an indicator says it's over fucking bought does not mean that's a short. Just because it's overbought and then it diverges bearishly doesn't mean it's a short. Even when the market's going down. It doesn't mean shit. It doesn't mean anything. It just means that you looked at a number of candles in that interval of time, you crunched the numbers, you beat the shit out of the data, and you finally made it submit to whatever output you want. That's what indicators do. That's all it does. And when you hear somebody say, we're optimizing our, you're bullshit, you're form fitting is what you're doing. There's no optimization. It's form fitting. That's what you're fucking doing. So when I looked at data, and I looked at times where everything in my rules using retail bullshit said, okay, this is a buy. At that moment, I stopped, turned everything upside down, and I would go into the price action and say, okay, where is the fucking short? What things keep fucking repeating that caused this market to tear my ass up and go the other direction? And then it appeared. Order block, breaker, mitigation block, fair value gap, institutional order flow entry drill. What you know is a flagship, well, no, it's probably not the flagship pattern anymore on my channel, but the optimal trade entry, that logic, I saw that formed on a corn chart. The very thing that I looked for, I'm sorry, that's not true. I'm thinking of the reflection pattern. Reflection is the reverse of the optimal trade entry, where it makes the higher high, usually forms the breaker. And some of you are like, oh, what did you just say, a reflection pattern? That's some old school shit, man. But those patterns, they were found by looking at shit opposite to what we're told to do. And you see when I'm executing. Just read the comments. It's fun reading it. I love it. Because they're like, how the fuck is he doing that? Right. And that's exactly what I was saying to myself. How the fuck am I losing all the time? I bought all these books. I'm following every fucking rule these guys are saying. And every fucking time I do this, it's going against me. How the fuck's that possible, right? That's what most of us would think. If you're trying to stay in this, the smartest people are the ones that know they can't do this and they stop. That's wisdom. That's not weakness. Because if you know you can't do this, you want to know as soon as you possibly can come to that conclusion, so that way you don't waste any more money, no more time, and no more peace of mind. But if you listen to things like I'm doing right here, you're a fucking trader. Nobody would listen to somebody bloviate like this unless they absolutely fucking love trading. They love everything about it. They love the analysis. They love the lifestyle. They love every detail, everything that makes up this industry and what it is. You live and breathe it. You don't really like me. You just like the fucking shit that I'm sharing with you because it's empowering. You know a superpower when you fucking see it. And that's what I'm sharing. I'm teaching you how not to be a victim to fucking retail kryptonite. This Superman ain't got no fucking concern or worry about retail bullshit. That's never going to beat this. And because this is the market, that's why I tell you all the time, don't be fearful. Because this market wizardry is going to keep on fucking rolling. Even if people come up and say, oh, well, everybody's doing this now, you're becoming the new retail. No, because there's a new round of suckers coming into this that don't know what they're doing, and they're buying all the bullshit. They're buying harmonic pattern courses. They're looking at bullshit they call harmonic, algorithmic horse shit, and it loses their fucking money. You put that against something like this. This is beating its fucking ass. Day in, day out, month after month, year after year, the data doesn't fucking lie. Period. Receipts every fucking day. Every fucking day. Proof, precision, foresight. It's all being shown to you. You cannot fake this. You can't fucking Mickey Mouse it. It's 100% in your fucking face. You can't hide from it. And why people want to wrestle with it, and it's like, oh, well, this is a fad right now. I guarantee you, they're going to talk about this shit even when I'm gone. When I'm no longer among you, okay? They're going to talk about this stuff. It's changed everything. And you watched it. You're part of it. That's exciting. Like, you were here when this shit happened. You're living in a fucking Gann moment. Think about that. Like, you're here. That's not an inflated, egotistical thing to say. It has nothing to do with me. It has nothing to do with me. It's this phenomenon, this approach to deciphering price, reading it, forecasting it, and engaging it on a level of precision that is unfucking rivaled. Period. I don't give a fuck who you like, who you love, who you supported, who's taught you how to fucking trade. There isn't a motherfucker walking around on this spinning rock that can come close to this fucking level of precision. And I'm standing out here on fucking Twitter waiting. And ain't nobody coming here doing shit. So yes, indeed, I'm enjoying myself. I'm loving it. I am having such a fucking wonderful fucking time. I got a fucking heart on every fucking day of the week when I'm out here with y'all. Because you want to know why? Because there's a little bitch down Texas that can't fucking step. And I'm waiting, Vinny, bring your bitch ass. Let's go. Stop leaving stupid fucking voicemails on my fucking phone. Nobody's blocked you, bitch. Nobody's blocked you. You are fucking a bitch. You don't have fucking leaderboard so I can light your ass on fucking fire. You will be famous. I guarantee you'll be fucking famous. Everybody will remember your fucking bitch ass as the failure that never could. So please, buddy, bring your fucking shit. I will grind your ass to fucking powder and then light your shit up. Come on. Come on out there in the real fucking world in a real competition. Because I am showing you, you can't come close. I'm playing with you still. I'm baiting your fucking ass. Please, let me show the world how much of a fucking fraud, unprofitable little bitch that you really are. Please, let me. You should have already been on that fucking leaderboard. But you can't. You can't do it. And all these little fucking sock puppet accounts that you have that I'm talking to, you think I don't know I'm talking to you? I know I'm talking to you. Yeah, I know it's you. And you're scared. I ain't scared. I can say your fucking name every fucking day. I don't give a fuck. Ain't nobody worried about you. Nobody wants your fucking algo box. Nobody thinks it fucking works, and we've already seen you shit yourself. And you had one profitable day, one. Max loss, max loss, max loss. Oh, shit. Yeah. Oh, yeah. And what do you see ICT doing? Calling the fucking shots. Every fucking day. And I'm not even bringing up my heavy hitting shit yet. You fucked with the wrong one. Bring your bullshit lawsuit, motherfucker, because I'm going to tear your fucking ass up in court, and I'm going to reverse that motherfucking shit, and I'm going to put your ass up in the annals of fucking history as the biggest fucking clown that ever fucked with me and my fucking family, because I'm going to tear your shit up. You think silence is weakness, bitch? I'm fucking waiting. Don't send me no voicemails or some Mickey Mouse shit. Just bring it. I'm ready for your ass. I am fucking ready for you, fucking clown. Had to get that off my chest. Little bitch sends me a voicemail. Like I'm supposed to be scared. Motherfucker, please. You can't even fucking trade. So I'm looking for details in price action that tells me, with a high degree of precision, that I am absolutely in a moment, in an instant, where there is an arm wrestling match between people like Algobox, retail shit, harmonic this, and moving average horse shit, golden crosses. That's all dumb shit. Proof. Look at his live stream. You'll see it fails. It fucking fails. It's not precise. He'll show you shit after the fact. I'm calling it live, minute by fucking minute. Hello. That shit is the real poison. That's the stuff that you're gonna fall victim to trying to trade with. And when there's an arm wrestling match between real algorithmic theory and price delivery, which is what I'm teaching you, when that is up against anything else is fucking losing. Have you ever fucking seen? Now, this is nothing about me. Take me out of the equation, okay? Because I'm sure this sounds like a chest beating thing. The only thing I'm beating my chest is I'm ready for this fucking competition, bitch. Please bring your shit. You're supposed to be in it. If you don't fucking join that fucking leaderboard and fucking win it, Vinny, you already said you're in it. So everybody's gonna say you blew in your account. You're on the hook, bitch. You better do it. You better do it. Because you have now co-signed. You've done it. Why aren't you in there? I'll trade. There's real traders out there doing that shit right now. You ain't stepping in that world. Because you can't fake it. You can't reset your simulator account. You can't hide your bullshit stats. It's out there for everybody. And I'm out here without seeing it. I'm calling this shit. Oh, but you're not pushing a button. I don't need to. I'm giving you every fucking tick before it happens. You can't come close to this with anything. Any of you. Not one of you out there can come close to this. But have you ever seen anybody share a level of consistency, precision, and theory that repeats every motherfucking day? Have you ever seen that before? Because that's what market wizardry looks like. That's what it looks like. You're handling it. You're seeing it. You're seeing fucking proof of it every single fucking day. And I'm choking these motherfucking bitches that had all this shit to talk about before I came back to Twitter. I told you I'm here. I'm here. Oh, I can trade better than you. Show me. Oh, my Velcro balls just dropped off. Sorry. I'll talk to you again when I have something else to say in response, but I can't show you my trades. I'll show you my day. I'll show you my trades one day. The fuck out of here. It's clownery. Everything else is nonsense. It's fucking bullshit. These people's egos are fucking crushed. You're learning how to do what these motherfuckers never imagined was possible. And they can't stand it. And that should give you a fucking sense of satisfaction alone, because they see you leaving the ranks of retail theory and dumb bullshit that has no real reason for making the price go up and down. Your indicators, those moving averages, anything harmonic, none of that pushes price up or down. It's not having any effect on fucking the price movement. It's doing nothing. Has absolutely no fucking clue that that shit even exists. It's not referring to any of it. But isn't it fucking strange? Isn't it odd that the things that I'm showing you, I even gave you the fucking chart before the week even started trading. Here you go. Here's new opening gaps. Have this in your chart. And I shared it before I started this stream tonight. That's what you want your floor pivot numbers to look like. But they don't do that, do they? Oh, shit. This is the kind of fucking stream, this is the kind of fucking space that gets you fucking fired the fuck up because it's proof, it's fucking evidence, and it's undeniable. And ain't a motherfucker that can say anything about it. They can come around and they can tweet and they can sell the bullshit. Oh, but you didn't do this, ICT. But you didn't do this. I ain't seen a motherfucker call it tick by tick like I'm doing. Ever. It's never happened before. And I told you all, I could do this shit. But here's the thing. Guess what it doesn't do? It doesn't make you a better trader. And that's why I never had to fucking do it. Because if it would have made you a better trader, I would have done it. I'm out here stunting every fucking day to show this little bitch down in Texas he got nothing on me. And everybody that's ever supported him, Tom Dante, oh, Ben, take on ICT. Bitch, please. There ain't no competition. All of you that ever had said anything about me, come together. I will beat your cumulative fucking returns in that fucking Robbins Cup, or I'll delete my fucking YouTube channel. How about that, bitch? How about that? Catch me outside, bitch. How about that? Now, is that confidence for you? Because I guarantee you bitches can't do shit. Now, I'm all in, bitch. Let's go. Let's fucking go. Let's fucking show the world who the fuck knows what and who can do what. Call my bluff, motherfuckers. Try it. Mickey Mouse, bitches. Market wizardry is what you're seeing. You're seeing a level of technical fucking science that, yes, it absolutely feels overcomplicated. It feels like that because you're learning a language. You're learning a language that you've never been exposed to. None of you have been. Not one of you have ever seen this before. You see a rectangle, you think it's supply and demand. No. You see me talk about a specific candle. Oh, that's a supply and demand zone. No, it's not. That's a change in the state of delivery. Where that candle's opening is, that is the change in the state of delivery. And there's 3 reference points. There's 3 specific price levels that you need to know about in order block. Look at supply and demand zones. Who the fuck knows what you're going to do with that? Where's your price? What price are you going to look at? Which one are you not going to consider at all, ever? That's how you know my theory is not supply and demand, and I'm cutting through candles. I'm telling you the high tick and the low tick of the day. I'm telling you the moment when the volatility is going to come in the marketplace and start running towards the objectives I've already given you. That's what market wizardry looks like. That's what it looks like when somebody knows what the fuck they're doing. Today, I recorded something that you would have never seen if I didn't want you to see it. If I didn't want you to see it, you never would have saw any of it. But I want you to see it. You saw me put the trade on. I told you the level. I said it goes to 4,000, I think 4,000.75. I said it kills the short idea. Whenever I tell you that, that's a stop loss area. That's not me telling you to take a trade now, but I want you to track the ideas I'm giving you. If it goes back to those levels, you got to think about it as, okay, that will be a stop out. You shouldn't have a trade on. You shouldn't do that. But it went to it and stopped me out. But when it hit it, it returned back into the range that I would consider still worthy to take the trade. And that was a run on liquidity. In that instance, I was liquidity. It took my balance at the open position. I had already took a partial off, and it came back and stopped me out. No problem. Didn't skip a beat. Okay, check. Everything's good. I'm going back in. You're going to see me do that.
I need to be saving the
I
good
see something,
trees.
okay, this no longer is valid. Something else has changed, and now I'm going to go the other direction. Well, guess what? You can only learn that by experience, seeing it. And when I'm calling every individual PD array, when I'm talking about specific pools of liquidity, you're measuring the algorithm's interest in getting to that level or not. If I like a buy-side liquidity pool, I'm watching it. If I say, this is the drawn liquidity, then that's directional. If I say, note this buy-side, that means we're watching to see, does it have an interest to get up there? Once it gets there, then the insight that we get after it hits that, then it'll give me the next idea about what I want to do. I'm waiting for more information. So please, motherfuckers, okay, stop coming into my fucking comment section and replying, talking about, oh, well, he's calling this and he wasn't really sure about this. I know exactly what the fuck I'm looking for. I know exactly what I'm looking for. But I'm also teaching you how it is I'm interpreting every single price fluctuation, every pool of liquidity, every inefficiency. I'm looking at those very specific points in price action. And I'm waiting for price to get to that level. If I say the words, this is the objective, or this is the draw on liquidity, that's absolutely one fucking sided. That's where I'm expecting it to go. You've seen me physically say those things in my tweets today. You saw that happen. They were not ambiguous. I favor the short side going down into 39.88. That is. Good morning, folks. Just waiting for an audio check. You guys can hear me on Twitter. So, yeah, heads up. 5 if you hear. I can hear myself on the playback, so you should be seeing and hearing me fine. Thank you, Leon.
Oh yeah.
Thank you. All right, so we're running a little bit late here. I got a new microphone. Okay, so I'm trying to make sure everything's set up appropriately and we've had a large
50% or
expansion,
25% of that opening range gap.
and we are looking at the ES future contract for June delivery. So on TradingView, your symbol, so we can track it on your own. That's your symbol right here, okay? So you enter that into TradingView. If you have live data, you'll be able to see what I'm showing you here. Otherwise, just track it with what I'm showing on my stream. Alright, so one of the things I'm looking at is this low here. And I'm going to have these in a color I usually don't like to use. Not that there's an issue with it, but okay, so right now on the daily chart, this is our dealing range. And dealing range is where we are in terms of the high and the low is most salient at the moment, meaning that yesterday's up close, that high is important to me, and this low is important. This is the dealing range that we're presently within. We've already worked this wick here today. Right now on the daily chart, this is our dealing range. And dealing range is where we are in terms of the high and the low is most salient at the moment, meaning that yesterday's up close, that high, that's important to me, and this low is important. This is the dealing range that we're presently within. We've already worked this wick here today, so I'll be watching to see if they want to revisit that as well. Okay, so the consequent encroachment of that wick comes in at 38.67 and a quarter. The low came in at 65 even. That way we can delineate what that level is when we drop in the lower time frame. Okay, so it's this consequent encroachment of this wick here, and with this information here, if we happen to trade lower, and I don't suspect that we are right now, but if we happen to go below this low, then my attention goes over to here. Okay, but let's drop into hourly chart. All right, so that we are right now, but if we happen to go below this low, then my attention goes over to here. Okay, but let's drop. Drop into hourly chart. All right, so we had a difficult time trying to get through the 72s. This higher here comes in at 70 and a quarter. High yesterday came in at 72.50. Failed here, rolled over. There's a lot of news about obviously the banks failing and such, and it looks like the narrative is they're trying to get folks upset, worried, and instilling fear. So we're not worried about any of that stuff, but because you're not going to stop if it does. So worrying about it doesn't make it any better. One of the things that I'm looking at is obviously there's a lot of smoothness up here, and with the drop overnight, we've taken out these lows here. So right away, I want to let you know that I'm in no hurry today to draw a hardline bias. Yesterday, I did a fairly good job of walking you through live action multiple times, pretty precisely. So if you haven't gone to my Twitter yesterday, you might want to do that and drop the tweets into your TradingView chart, and you'll see that the precision was on par. This magnet thing is strong. Take that off here for a second. Okay, so what I'm looking at these lows here and this low here. So it's kind of like three lows relatively equal. We went down below that so far today. We have SIBI here, sell side balance, buy side efficiency. So we're watching to see how much of this range in here we want to revisit. Right now I'm showing electronic trading hours, so I'm going to toggle to regular trading hours. So you can see the difference in here. This is where we're opening versus where we closed yesterday. So there's a significant discount from yesterday's close to now this morning's opening. When it's this, well, prominent, I would look to the low of the last candle. So we'll be noting that here as well. So this is what I'm typically doing in the morning session that you don't see all behind the scenes and such. I don't have these levels really drawn on my chart unless I'm recording an execution so that we can kind of like follow along. But the logic is we could revisit this here, and that, in my opinion, would be a gap closure. It doesn't require going all the way back up to yesterday's closing price using regular trading hours, okay? So, in short, what I'm saying is we have a soft bias to return potentially to 39.1450. That's my interest. That doesn't mean I'm going to go long. It doesn't mean that you should go long. It's just that's what I'm watching. That's what I'm monitoring. So at that level here, I'm going to make that level black just so I can keep track of what it is for me. I'll make it a little bit thicker than I normally would. Okay. All right, so now notice also, by having that 39.1450 level annotated, which is the last candle of yesterday's trading before the session ended for regular hours, that also is really close to what on this candle's wick, consequent encouragement. So while it could dig up into this range more, it could go as far as this previous day's last hour trading candle and what happens to be consequent encouragement on that wick. So let's drop into a 15. On a day like this, where we have such a huge move overnight, your first rule of thumb is slow down. In fact, it's better for you to actually anticipate trading the afternoon session, because the morning session, usually it chops around, it gives false moves, then consolidates, and just does a lot of potentially seek and destroy. Seek and destroy is where it goes above short-term highs, below short-term lows, and goes right back to the middle. And then later in the day, there's this big expansion move where it draws to liquidity that hadn't been tapped for. The rule of thumb is slow down. In fact, it's better for you to actually anticipate trading the afternoon session, because the morning session, usually it chops around, it gives false moves, and consolidates, and just does a lot of potentially seek and destroy. Seek and destroy is where it goes above short-term highs, below short-term lows, and goes right back to the middle. And then later in the day, there's this big expansion move where it draws to liquidity that hadn't been tapped for a while. So I'm not comfortable yet giving you a bias. Like when I tweet, I'm pretty much confident about what I'm saying because I wouldn't tweet it otherwise. And it's predominantly correct. Here, the rules and protocols that we're utilizing is right out of the notes what I teach on my YouTube channel. My students have been with me for a long time. They know this is not something being form-fitted for today. Whenever there's a large move or a large range, the very next morning session, you have to be very careful not to try to go in and chase because we've had an expansion.
That's when he talks about this mitigation.
Look at the ranges here from these candles, the sizes. Okay, relatively small. And then as it drops, it gets large. So we had this big movement lower, attacking sell side. We've not been able to trade above the 39.7250 level. We failed to get above that here. And just overall this weakness rolling overnight. Because it's moved so many handles, and a handle is a point. One point would be 38.71 to 38.72. That's 4 ticks. We've moved about 90 handles or so. Just almost about 100 handles. That's a significant price move. And to do it all in one session overnight, in the London session going into the early hours of New York session. You just want to be careful. Don't try to chase it, in other words, and try to avoid trying to pick a reversal either. If I could go back in time and show you where I've done the most damage to myself, it's trying to chase these moves after they've happened. And you just got to be very, very careful not to do that. So I'm going to walk you through this morning as best as I can based on what we're looking at. But my interest, and I want you to know this going forward, my interest is in the afternoon session. So 2 o'clock to 4 o'clock in that 2-hour window. So you're probably asking yourself, why didn't you want to just do a live session then? Because I have a family and I have things I have to do today. So I'll be tweeting to everyone through my phone, walking around looking at charts from my phone. But it's important for you while you're here going through this mentorship to learn how to navigate. So that way when I stop doing these at the end of the year, second week of November, you'll have a procedure to follow yourself and rules that you've utilized, watch me utilize, and you'll understand why those rules and procedures are even in place. So there's a there's a fair value gap that lines up exactly with this mitigation block. Now, mitigation block is, think of like a breaker. Most of you understand what the breaker is. It's a high if it's bearish, a high, a low, and a higher high, and the low in between. Inside that low, when you drop down to a lower time frame, the down close candle in that low, that would be the bearish breaker. In this case, we have a high, a low, a lower high that eventually went through. That is mitigation block. Mitigation is a failed breaker, but they operate the same way. So in other words, treat it like real support and resistance. It's not a matter of looking for where the market turned in previous data. That's unfortunately the misinformation that books and other educators, and I fell victim to that too in the beginning, looking at just where the market turned around before and thinking, okay, that's support, that's resistance. And there has to be some context as to why there was a turn there. And in this instance, this high here ran through liquidity over here, came down, tried to rally once more, and was unable to get above the previous high, even through all this. So anyone that would be long here, once we drop down below it, the concept of mitigation block is the same with a breaker. If someone on an institutional level is long, when it trades back to this level here, it allows them to mitigate that potential losing trade or drawdown, meaning that any longs here that are underwater, that means they're holding on to a lot, dropping against them. When it returns back into it, it's all for them an opportunity to mitigate. Order blocks don't mitigate. Okay, price isn't mitigating. I hear a lot of folks in the community and outside my personal community, they'll say those types of things, and mitigation, that word is thrown around a lot when it's really mislabeled. So the object is, because this market rallied here but failed to take up the high, and we have a fair value gap there, our focus is to watch this one here. Now, more specifically, if we get through this fair value gap, and I'll draw it on the chart now. You can see how we're gravitating to it now. Just like magic. Okay, so the fact that we pulled back up to this level, and it's a fair value gap, this level here, to me, is important because it can act as resistance. It can fail. In other words, fail to trade through it, which is what we would reasonably expect, because longs here, they're underwater, they're going to want to do what? Get out of it. Not that it causes the market to go down because of selling pressure. It's allowing, the market's allowing those individuals that are using things outside of retail to get out of that long position. So what I like to do is, I like to read the interpretation of each PV array, where they lay out in the chart. And because we are in a day or a morning session that has seen a large range expansion overnight in the London session, it's going to be a hard sell for people to want to be long. That doesn't mean that the market can't go high, but I want to see a lot of things in my favor that would support a run. If I were being honest with you, I'd like to see it run up and take out the 65 level, 39.65. I'd like to see that. It may not do that, but I'm watching that today because I'm very leery to trust what's going on so far this week. And I mentioned on Twitter that this week was going to be, more difficult than most of you are prepared to navigate because you're either new or you're not used to this much manipulation. And there's a lot of that right now, lots of it. So what I'm watching is, do we respect this fair value gap with the mitigation block? Because the narrative would be this: we go up here to allow smart money to offset their longs that they had here that were unable to get off. Now you're probably thinking, okay, if they're smart money, how did they end up in a position where they're losing? Because they're human. They're going to do what? They're going to speculate just like any of us would. And they may do something wrong. They may have a bad day. They may not be firing on all cylinders. I mean, they're not artificial intelligence. The AI is the algorithm that's delivering these price movements. It's not the buying and selling pressure. But the participation of this group of traders, they're looking for these types of things in price action to instigate some reason to be long or to get out of they're late just like any of us would. And they may do something wrong. They may have a bad day. They may not be firing on all cylinders. I mean, they're not artificial intelligence. The AI is the algorithm that's delivering these price movements. It's not the buying and selling pressure. But the participation of this group of traders, they're looking for these types of things in price action to instigate some reason to be long or to get out of their position, or to get short or get out of their position. And so, while that's not a lot of movement here, as a new student, you want to start with those small little incremental milestones, looking for things that draw to why price should even reach to a specific level. Why should it react or behave a specific way? That's not a lot of movement here as a new position to instigate some reason to be long or to get out of their position. Or to get short or get out of their position. And so, while that's not a lot of movement here, as a new student, you want to start with those small little incremental milestones, looking for things to draw to why price should be reached to a specific level, why should it react or behave a specific way. Now, with this wick here, can you see this wick? When we trade above that, I like to use the consequent encroachment of that as well, because we can have a retracement down, and it has 92.75. And this level to me would be important. I want to see it. It can stab through it a little bit, but I want to see it trace down there. I want to see the body stay above it. And make this thinner. Okay, I think we've got enough here on the 15-minute time frame. We do have another imbalance here. Look at this right here. This is for folks that are struggling with my fair value gap. Look how this candle's trade down. The next candle will be trade up, and then down. The next candle will be trade up, almost completely closing into that previous candle's low, and trade down. That's efficient delivery. There's no fair value gap here. It opens here, trades up almost to that candle, then trades down. The next candle will be open, we trade up, and leave what? That small little gap right there. See that? So if we do manage to get above this fair value gap with mitigation that's bearish, this would need to act as support, and then we would need to power through this one if we're bullish. This one here is just the first point of interest. I'm only interested in see initially what we're doing because we're not rushing. We're still in the opening range. It's not even been 30 minutes since we opened. So we're only trying to get a feel for what it's likely to do, but not getting excited because why? We had a big move overnight. Every retail trader in the world is going to be wanting to do what? Chase it. Chase it where it's been going down. So you have what? Stop loss orders that are resting right above this wick. They ran to that, to a fair value gap I've outlined with the logic as to why it should go to that one because we have a mitigation block over here. So it's not just simply a, oh, this looks like a fair value gap. Let me just put a rectangle on it and call it a fair value gap. No, there has to be some context as to why it would be even returning back to that level. Just because there's a gap, for instance, there's one up here. There's one right here. Very small portion of it here, very, very low. It's the low in that candle, 33 even, and the high on that comes in at 32. So it's a quarter of a point of a gap, but it's a gap nonetheless. The fact that we are in this area down here, and this one here, why would I be interested in those, and not suggesting something up here? Because if you look at the run from this low that we've created for the day, from the high overnight, where is these two fair value gaps? In the lower portion. So I'm wanting to justify if smart money tried to go long here and they're utilizing this fair value gap and mitigation block to mitigate that long position or positions, they are thinking what? If it's true, if we can't get above this, it's being tipped, the market's tipping its hand that longs shouldn't be favored. So therefore, we could potentially grind eventually down into this low again today. I don't know that yet. I'm still observing the fair value gap, that mitigation block, and if we drop down even further, this is where I would want to see it stop. Right in here. It can touch, the wick can touch this candle's high. That would be if it did it all in one candle like this, that would be referred to as my immediate rebalance. Next candle, when you have a big up candle or down candle, the next candle opens and trades all the way back to the previous candle's high or low, creating no gap at all. That's an immediate rebalance. Usually when you see that, that's one of the sharpest, quickest, takes off runs, and it doesn't give you a chance to get into it, which is important when you watch these big runs like this, because, not that this is a big run, but it's significant because we've had a lot of range movement intraday. Yesterday, there was so much speed in how fast the market was moving. And I'm training you to look for 5 handles initially, and that's happened in like seconds. It's like boom, boom, they're there. So you have to be really, really careful right now. Just to further, I probably confused some of you when I mentioned this range and what I was referring to. That's 50%. Okay, so this one here is still in a discount. So I want to see, does it have a reluctance to get to even 50% of that range, which would be what, equilibrium, or above it, which would take us into that fair value gap, which would be what, premium, relative to this high and that low. We don't need an indicator to show us that getting up to this level here would be short-term overbought. So I don't need indicators to tell me that. I'm looking at the range and determining where I am in regards. And I'm eyeballing this. I'm not drawing this. You need to do it because you're learning, but you can rough eyeball it after you've been doing it for a while and see, okay, this is about midpoint, and this fair value gap would be premium. So what I'm suggesting here in terms of narrative, what I'm trying to flesh out in terms of what I think is likely to occur, is the fact that this fair value gap we've outlined and that mitigation block, smart money was what? Potentially long here. They went underwater. So they're in the business to make money. When the algorithm allows price to reprice back to an inefficiency and mitigation, they'll do what? They will potentially long here. They went underwater, so they're in the business to make money. When the algorithm allows price to reprice back to an inefficiency and mitigation, they'll do what? They will kill their long. Longs, and those longs being neutralized is indication to me as a trader, if it can fail here, that the better side is still looking for lower prices. And it would have done what? It would have gone up to take out the sells, I'm sorry, the protected buy. And those longs being neutralized is indication to me as a trader, if it can fail here, that the better side is still looking for lower prices. And it would have done what? It would have gone up to take out the sells, I'm sorry, the protected buy stops that were trailed in any shorts overnight. Retail would be trying to go short, thinking that this is resistance because it went there and stopped on a lower time frame chart, because everybody's using 1 minute charts now. And this run here perfectly takes out any trailed buy stops, but it goes to a level that's, in my concepts, that makes sense. It's inefficient, mitigation. So far we've seen movement here. It's already moved what would have been considered what? 5 handle run or more. I mentioned that the wick, it would trade down into that. If it does go lower, I want to see it go there. Now, some of you might look at that as, that's a model. That's enough for me. It makes perfect sense to me. And if it repeats these conditions in the future, you can practice with that. I'm dropping into a 5 minute chart. Now notice
Oh yeah, we
5 minute
definitely have
chart,
SMT
it
here.
doesn't look like a fair value gap. That's one of the, I get this question many times from new students. How is it when I drop down the lower time frame, the fair value gap that I have noted, there isn't a fair value gap on the lower time frame? That's fine. You would sometimes see that because these intervals are going to be much more busy. They're going to fluctuate a lot more. So they're going to overlap. You got 3 of these 5 minute candles that make up one 15 minute candle. So the fair value gap that I've outlined on that previous chart in the 15 minute time frame, you can't really see a fair value gap here except for the small little separation between this candle's low, which is 3909.5, and this candle's high, which is 3908.75. So it's 3/4 of a point, or 3 ticks. But that right there, that small little gap there, can be refined. So if you were looking at the 15 minute time frame, fair value gap, and drop down, you would refine it to that area right there, because that is 3/4 of a point, or 3 ticks. But that right there, that small little gap there, can be refined. So if you were looking at the 15 minute time frame, fair value gap, and drop down, you would refine it to that area right there, because that is the actual fair value gap. So that's calibrating your PD rates. You go from higher time frame down to lower time frame. You can see how we go right into it, hit it perfectly, and then we drop down to the consequent correction of that wick there. So from high of fair value gap, 09 3/4, which is this candle here.
Oh, that's why he's using the other contract.
So that's plenty range to just get your 5 handles and move to the sidelines and just wait. Using the logic that I've outlined here. This would be mitigation. Smart money would be doing what? They would be killing their longs. That would be underwater as it dropped down below. And we are doing what? We are not even returning back to equilibrium yet. So in my opinion, it indicates weakness. All these things are so far supporting the idea of weakness. Now what I'm looking at is the dollar index. It's really not showing anything that's clear or decisive. So it's not lending any kind of intermarket analysis yet. It looks like, honestly, it could go either way. I'm looking at a 1 minute chart, and we've already ran up on the hourly, just falling short of 105, at a high of 104.959. British pound looks really heavy here. Euro just marking time at 105. NASDAQ, let's see here. Go So we have a discounter right here, and it's an overblock there. 2 down closed candles, and fair value gap there. So that would be an interesting deviate rate on the downside for those that are watching NASDAQ. All you talk about is ES, ICT. I don't trade ES. I want to talk about NASDAQ. So that's a level. Be mindful of that. What is that?
Drops right to 830
That
opening.
low comes in at 12,182.5. So you can use that to study that. Back to ES. Look at that. It's almost like it's supposed to work. Fair value gap with mitigation failed to get to equilibrium of the previous range. Is there any imbalances in here? Fair value gaps of that kind? No. Just the order block. We have a low that took out sell side here. But no inefficiencies. So what we're watching is this order block. Let me draw it out. I'm using the open because it has a stubby little wick. If it had a longer wick, I would use the elements I've been teaching you with the wicks. I forgot what I'm doing here, okay. Alright, so we have this range, and now how far can it go down and still not take out that low? Mean threshold, which is half of this down close candle. So you go back over to your fib. It's technical science. 38.79 3/4. So that's kind of like the last line of defense. If it were to go any lower, let me drop this here. If it were to trade through that and start showing the bodies going through it, that would be, in my opinion, indicative of wanting to revisit and maybe run out that low. So let's talk about if you were utilizing that mitigation block and that fair value gap and waiting for the market to go to what? A short-term premium. Well, wait a minute, ICT. You said that this here is equilibrium in the overnight dealing range. So as long as it's below this, we're weak, right? But look inside this price leg here, from that low all the way up to the high here. There's several price swings. From this low, looking back, forgetting this one here because that's just a small little reaction. We've already mentioned the purpose of why that would be used, which would be trailed stop losses on shorts. Above it would be buy stops. Above that, the 15-minute fair value gap, which is this blue one here, and it falls below equilibrium of the overnight dealing range. From this high, going to the left, higher than that high, where's the next immediate swing high? You can't use this one because it's lower than that high. That's not a swing high. That's a swing high, right here. So if we use that frame of reference, there, this movement up to that fair value gap here, within this dealing range, which is also in what? A discount still relative to the low here and the overnight range. Now, I know some of you that are brand new, this is completely confusing to you. Trust me, the core content, go through those lessons where I'm talking about price swings and looking at how price fractal, price swings within price swings. This is how you build narrative. This is how you do it. Okay, it's not just simply plot an indicator or an indicator that's supposedly has my name plastered all over it. It's not going to do this kind of work for you folks. Okay, I know there's folks out there that are making things for TradingView and other platforms, the ICT fair value gap and the ICT new week opening gap indicators. You're going to have lipstick on your chart, but unless you know how to use it, it's going to do nothing for you. It's going to confuse you. You're going to have more things than I have on my chart. If you use all those other indicators, there's going to be fair value gaps all up in here. I'm not looking at them. I have a process. I have to go through a process of what I'm walking you through here, which is the logic, how the algorithm is going to refer to the specific fair value gaps. It's not just because there's a fair value gap, we're actually going to go there. That's what separates me from everybody else that's trying to be like me, to sell mentorships and courses and such. And I hate sounding like I'm a hater, because I'm not hating. I love the fact that people are gravitating to my concepts, but a lot of them are overzealous and they're trying to be educators when they don't know what they're doing yet. And you're actually hurting your own image, and you're also presenting misinformation about my concepts that you don't know. Like, you don't know it yet. But this fair value gap is in a premium relative to the dealing range from this swing high to that low. Now think about what I was outlining earlier. The market has had a big move overnight. We do not go in chasing the market lower because it went down overnight. If we want to get short, we have to do what? At least allow the market to do what? Trade to a premium. So how do we identify a premium? We have to look at the price leg that we moved from or within recently, which is this movement down. I showed you, let me show another fib so we can keep it in context of what I'm showing here. So From this high to that low here, this 50% level is equilibrium. That swing high happens to be where? Right at equilibrium of the overnight range. Then we have a fair value gap on the 50-minute time frame here, because I'm looking at a 5-minute chart. Remember, we dropped down. It traded up into that fair value gap. At the same time, it traded up into a 15-minute mitigation block. And the logic was, we want to see, does the market reprice lower from there? First objective would be what? Trading down into the wick up here. Then I said if we go through that, we have the order block. And then here. How could you use that as a model? How could you use that as a, if you wanted to trade this and be short, because now we've watched buy stops that would be trailed here, because as the market went lower, traders are going to do what? They're going to want to jam their stop loss. And when it started to break a new low here, buy stops will be placed right there. The market does what? It trades up into a short-term premium relative to this high to that low. And we're still in a discount market relative to the range overnight. So it's indicating weakness. So you have several things there in your favor. You did wait for it to go to a short-term premium. You did go to a inefficiency, and it's at an area where it created what? Mitigation. So because this range here is indicating overnight, that range, we haven't even made it back up to equilibrium. So we're still heavy. We knocked out buy stops. The market routed to a fair value gap and mitigation. Consequent correction of this wick, target 1, target 2, order block, and then you could get this as another objective, which is not done so. And now we're working off of this order block. And so far the range hasn't been all that much, but this is still tradable. Now earlier, right here, I was not streaming at the time, but this down close candle, using the logic I've outlined here, this could have been another student of mine's model where it traded at this open down into that order block there, anticipating a run up into that fair value gap. That would be their trade, buying it at the order block level here, buying it, stop under the low of this candle, rallying up to here, and get out and be done. Trading with the logic that it's oversold without the necessity of having an indicator. Retail's going to do what? Chase it lower. They're going to want to go short. And also utilizing the regular trading hours. Remember, we were talking about how it could potentially go up to, I recall, was it 39.14? I lost my train of thought. Yeah, 39.14 and a half. Okay, so that could be a draw for price up there. Initially, that's what we were talking about. And back down into electronic trading hours on the 5-minute chart. So 39.14 is right there. Okay, so that was a draw it could potentially trade back up to, as using the regular trading session or the opening range gap, because that's what that is. And I know I'm throwing a lot at you, but you know, it's 3 decades, so I've struggled to try to condense this where all the things that I utilize, you want to learn it, I got to teach it to you, but they all have to have their own individual labels that we keep track of what I'm looking at when you use it. But that could have been a nice little long for someone that would be trying to trade against retail mindset, which is they're trying to go short because it's been going lower, and then rally up into a fair value gap with a mitigation block and a draw to 39.14, which would be the last hour of trading yesterday low. Lots of ways to skin a cat. Let me see here. If you're following along on Twitter, if what I just outlined in terms of how both sides of the marketplace using my concepts can be, I know it sounds like an oxymoron where it can't be so, but I've said it many times that my students, myself and my students, we can be trading the same market 2 different directions and still find profitable trades. Did that explanation, was that helpful to you, at least in that regard? And I'm looking for tweets as a response when I'm asking that. Here is a 15-minute fair value gap. That's that gap here. Okay, we trade back up into it here. And now I want to see, does it strongly reject that fair value gap and aggressively start moving lower? Or does it power through it? And if it does, then we would look for this fair value gap to act as support. So you have to be really, really nimble and patient in an environment like this. You don't want to go in here trying to force your will on it, impose your will on it, because it doesn't work. Don't tell me you took trades. That's the rule. First rule of Fight Club. You don't talk about Fight Club. If you start telling me you're taking trades, it's going to get in my head, and I'm going to be worrying about what I say next, because I don't want you trading. I want you learning how to read price action. That's what my mentorship is. My paid mentorship was how to teach and read, or not how to teach, but how I trade using price action. But the mentorship is how you are trained to read price action. That was the promise. The promise was you're going to learn how to read price action better than anybody else is going to teach you, and you'll understand precision elements that are outside the scope of retail logic. This is no different. You're not paying me, but the same expectation is being held here, that you're not to be trading with this. You don't know what you're doing yet. You really shouldn't be doing anything with demo either, because you're reading the tape. You're reading what these candlesticks are doing. All right, so I'm looking at dollar. Dollar looks like it wants to come down a little bit. There's a bit of a diagonal trend line on the dollar index, and I don't like that. I don't have any faith in diagonal support and resistance. So that means it could potentially trade down a little bit lower on dollar, which would give some lift to get potentially above that fair value gap here on ES. And take a look at the NASDAQ. I want to show you something here. I get questions all the time. How do I add the NASDAQ chart at the bottom of my TradingView chart? You go up to this little plus symbol here. Okay, click on that and type in the symbol that you want to utilize as a compare. And you don't want to do that. I clicked too fast. You want to go to new pane and then apply it underneath it, okay? And then you can keep it on a line chart if you want. In this case, you would look at it with the low, plotting on the low. You can see the divergence between the low here on ES and the low here is lower than that one on ES. We don't have that lower low on NASDAQ. Now, if you don't like the line chart, the best way of doing it really would be just doing the candlesticks and setting your candlesticks up as you would your normal chart. Everybody asks all the time, what's your color scheme? It's no magic between what colors I'm using. Colors don't mean anything. It's what you see in the candlesticks. Or sometimes that's not in the candlestick. So we have this divergence here. ES went lower. The NASDAQ failed to go lower. So that's also another contributing factor as to, and I failed to mention, I apologize, but it's hard to read this stuff live and talk about what I'm thinking about at the time and still make the lessons helpful to you. I'm not going to be able to always pull up everything because I'm trying to articulate what it is I'm feeling inside that makes me trust where it's going to go next, why it shouldn't do certain things. And I have to obviously think about what it is I'm expecting to see. Then I have to formulate a way to provide a statement to explain what it is I'm thinking the whole time the market's going on. Like, it's not hindsight. I do all this real time. But in a perfect world, obviously, most of you already do this anyway because you've been trained to do so. You want to be referring to the highs and lows comparatively between the Dow Jones. The symbol for that would be YM. The symbol for June contract is M, and then 2023. So if you want to plot that down here, instead of the NASDAQ symbols here, NQM. M is for June. We were using H, which is the symbol for March. In the third Friday of June, this contract will expire and we will roll over into September. So the symbol for September would be the letter U. Okay, so there's only 4 symbols every year for the futures contract. It's H for March, M for June, U for September, and Z for December. So that way you know your contract. So the symbol for September would be the letter U. Okay, so there's only 4 symbols every year for the futures contract. It's H for March, M for June, U for September, and Z for December. So that way you know your contract rollovers. It's always the third Friday of each month of that contract month that it expires. But I like to roll over when I start either seeing one of 2 things. If I see the volume explode more in the next month out, which is why I rolled over from the March contract to June, or if open interest, like if I haven't been trading the market and it's something I want to go back into, trading another market that I haven't been touching for a while, I'll wait for open interest to be larger in the next month out, and then I would roll over. Rollover is simply taking the present nearby contract, which is still March, but we roll over to the next month. So all trading would be rolled over to the next contract month. All right, so so far we've had if you look at the March contract, let's pull this up real quick. Let me finish my thought. I'm sorry. These lows here in ES were not matched. In a symmetrical market, this low here on NASDAQ should have went lower. It didn't. That also builds a case for why it moved from here up into that fair value gap that I mentioned, and we've seen it deliver. So let's take this off now. I want to show you the ES March contract. Okay, and this price is trading at 38.60 and a quarter. So 38.62 essentially, and it's trading in the June contract at 38.94. Okay, so that is a normal carrying charge market. Not that this is like a livestock or a grain market, but even in these indices, if there is an inversion where the nearby contract is more money in terms of its price, whereas it's not being shown that here, it's more higher. It's 38.90 here, whereas in the 38.60s. So there's like a 30-point premium in the June contract. That's normal. But if there's ever a time when the market has a higher price in the nearby contract and it gets cheaper going further out in the future, then we are in a market that is poised to go up strongly. We don't have that here. I'm just tossing that out there. There's no extra charge. So dollar did in fact go lower, like I mentioned, because diagonal support and resistance sucks. Trend lines are garbage, and I know that's probably going to offend some of you that use them, but trust me, they're subjective, and you can find 50 different ways to put a trend line on the chart, and it's not consistent. Whereas fair value gaps, points of reference where stops, they're not ambiguous. They're there. So far, we've hit that fair value gap here. Probably don't have future. It's more like a grain market, but that is a normal carrying charge market. Not that this is like a livestock. So this price is trading at 38.60 and a quarter. So 38.62 essentially, and it's trading in the June contract at 38.94. Okay, so that is a normal carrying charge market. Not that this is like a livestock or a grain market, but even in these indices, if there is an inversion where the nearby contract is more money in terms of its price, whereas it's not being shown that here, it's more higher. It's 38.90 here, whereas in the 38.60s. So there's like a 30-point premium in the June contract. That's normal. But if there's ever a time when the market has a higher price in the nearby contract and it's cheaper going further out in the future, then we are in a market that is poised to go up strongly. We don't have that here. I'm just tossing that out there as extra, no extra charge. So dollar did in fact go lower, like I mentioned, because diagonal support resistance sucks. Trend lines are garbage, and I know it's probably going to offend some of you that use them, but trust me, they're subjective, and you can find 50 different ways to put a trend line on the chart, and it's not consistent. Whereas fair value gaps, points of reference for stops, they're not ambiguous. They're there. So far, we've hit that fair value gap here, and we want to watch. If we trade below this low, how we manage to trade at this level here? It can trade down to mean threshold, which is this down close candle's midpoint. I'm using the high to the low. It can touch that with the wick, maybe even go just through it a little bit with the bodies. If a body trades through that and starts a new candle, to me, that's indicating heaviness. Heaviness is when the market's likely to continue going lower. We don't have that yet. We're still inside of a small range, which is exactly what we were expecting anyway, because why? We had that big movement overnight. All the excitement, all the movement was overnight. So now everybody's arm wrestling, trying to figure out what it's going to do next. And this is where people get chopped up, you get beat up, you get frustrated because it's not moving the way you want it to move. You want to see a big move go one way or the other. You don't care. You just want to see movement as a trader. But you have to know when to anticipate these problematic periods where the market's going to be very fickle. Fickle is like, it doesn't want to do anything. It's just going to say, nah, I ain't going to do nothing for you. And it'll frustrate you because you want to trade. You want to see your targets hit. You took off for work, or you stayed up to watch this because there's a live stream going on. But you need to know when I'm not doing this anymore, I'm not teaching anymore, you're going to know these rules and these procedures and protocols. You will lean on them because you've seen the effects of following them is beneficial. You're not surprised when the market goes into chop. We can predict when that's going to occur. That's not a problem, okay? We also can predict when there's going to be big movements. That's easy too. The hard part is for me as an educator is to teach you, number one, be patient going through these lessons because you don't understand how much you're learning right now. You really don't. But you're going to understand months from now how impactful knowing when to anticipate consolidations, choppiness, because that's going to do what? That's going to help you stick to rule number one, which is preserve capital. Your job as a trader is not to make money first. Your job is to keep the money you have. Everybody else does an efficient job of blowing out. If you believe the statistics, and I believe them, 90% of people that trade with real money, they're going to lose their account expediently because they don't have these skill sets. They don't have patience, number one. And if they do have a losing trade, which all of us do, all of us have drawdown, all of us have series of losing trades and getting it wrong and missing trades. You're going to have that. But the retail trader, and 99.9999% of every educator out there does not teach when not to trade. And I have been a big proponent of that because that's where I got beat up. When the markets are moving, I have tools that can get me in there in stunning fashion and hold for amazing, amazing point or pip hauls. But when I was new, I didn't know how to avoid specific times of the market or conditions. Just because we're in a kill zone, okay? We're in a kill zone and there's a high impact news event. Oh, great, wonderful. That doesn't mean it's going to move. Why? How did I outline that for you today? All the movement was overnight. It's one-sided. And when we open up, they utilized that news event this morning at 8:30. Was it impactful? It moved around a little bit. It moved down, created the lower low here, the net low. And then retail's doing what? Think about what they do typically. 90% of retail traders are doing some kind of breakout strategy. They want to have some kind of confirmation, they think, that if it goes through a level or if it moves above a certain level, they want to be long. Or if it goes below a level, they want to be short. They think that once a move starts happening, they want to maintain a position on the basis of momentum. And that's exactly what I'm teaching my students and you listening, how to capitalize on that, because that logic is flawed. It can work. Like you can use breakout strategies with my concepts that teach you, like if you know how to trade the right direction in the right time, you can use a breakout strategy and it'll work for you. In fact, if you go through the core content, I'm actually teaching you how to sell short on weakness and buy on strength. I don't like those entry styles, but you're going to find that if you're going to be a higher time frame trader, that's usually going to be the mechanism that you're going to use to get into the trade. because you don't have the benefit most times. If you're running a business, if you're in school, or if you're working, you can't trade these lower intraday time frames. You're going to be utilizing that entry strategy where the market puts you in, but you'll be focusing on a time when the market's predisposed to move in a great, magnificent manner, higher or lower, not just simply, it moves a little bit. No, you want to have a higher time frame trade that's going to be moving for weeks, not just a day. So in this respect, we're looking at the sell side here that was this morning. Oops, that did not go where I wanted it. Bottom left, and okay. So now think about what was going on overnight. Market just kept going lower, made a short-term low here at 650. 8:30 news, we drop down. First 15 minutes, it does what? It goes below that low. Think about what retail traders would see here. This is a bear flag to them. It drops down below a low. Retail traders that want to sell short on a breakout, they're short right there. Where's their stop loss going to be? Above here. That's a lot of movement. Oh, maybe. Maybe not. Maybe they're trading a micro. Maybe they're trading with options, something to that effect. The logic is, above this high, that's a trigger for they don't want to be short anymore. So what's going to happen? It's going to trick them in going short. Those sell stops that trigger in misinformed traders, street money, dumb money, not smart money, they're short here. Who was taking and who would take the other side of that trade? Smart money. Aiming for what? The fair value gap I outlined for you this morning. And it would be above this high where the buy stops would be resting. And this is where they would mitigate any positions that were long. They could get those off here. We haven't really seen any indication that that is in fact the case, because we're still inside this small little range, which is what? The type of environment that I told you at the beginning of this live stream, that's what we're expecting. And I didn't say it just today, that's in the rules that's in my YouTube channel and all the lectures. After big candles, big daily candles, big movements, big days, okay, in this case here, we had one-sidedness overnight in London. Huge one-sidedness. You have to be very, very careful not to go in expecting it's just going to keep going lower. Now, in my 30 years of experience, I've probably seen maybe 2 or 3 times it's done something like that. But if you're trying to get short, and I'm not suggesting that you should be, but I'm saying if you are trying to be short, you have to wait. You have to wait until it trades to a premium. If you are not doing that, you are absolutely gambling and you're chasing price. That's the definition of it. You're chasing price. You're thinking like a retail trader, like it did here when it traded lower. They want to be selling short below that low. It's already went significantly lower from overnight with no real runs on liquidity prior to this one here. There's been no stop runs here at all. It's all been displacement lower, rebalance, trade lower, or leaving fair value gap. The sell side here has been taken, putting retail traders short. The logic is smart money would buy those sell stops. As they want to get short as a retail trader, they want to try to break out to the downside because they think the banks are collapsing and it's Armageddon. It's going to keep this going straight down. The algorithm's going to do this. It's going to give that to them, allowing smart money to do what? They can buy that. Right up to the buy stops here and the fair value gap that I've outlined this morning. So smart money buys retail sell stops and sells to the buy stops above here in this level. Because not everybody's going to put a stop loss right here. Who's going to put a stop loss up here? Large funds, investment banks, larger traders that want to be trend following. They have more money than you folks. They can withstand a little bit more of price movement than you are. You see 2 handles movement against you and you're freaking out. That's the difference. Okay, there's a difference in the food chain here. The difference between what I'm teaching you and what you learn anywhere else is that we're not looking at patterns. We're looking at the context and the logic as to why price should go where it's going. And if you can't outline with a great deal of confidence what you're expected to see in price action, why that would be even reasonable to anticipate, and the logic as to why price should go where it's going. And if you can't outline with a great deal of confidence what you're expected to see in price action, why that would be even reasonable to anticipate. Like, if you can't see a storyline behind why the market would do specific things and how it could take out less informed money, why it would be advantageous for that to happen. Because if the algorithm's going to run from this low up to here, that movement offers opportunity. It's doing two things. Number one, it's allowing efficiency to this imbalance here. It's offering efficiency in terms of providing more liquidity for sellers at a higher price, with these buy stops above this high being taken out. Because there's a buyer and seller at every transaction. That movement offers opportunity. It's going to run from this low up to here. That movement offers opportunity. It's doing two things. Number one, it's allowing efficiency. To this imbalance here. It's offering it's doing two things. Number one, it's allowing efficiency to this imbalance here. It's offering efficiency in terms of providing more liquidity for sellers at a higher price, with these buy stops it's offering efficiency in terms of providing more liquidity for sellers at a higher price, with these buy stops above this high being taken out. Because there's a liquidity for sellers at a higher price, with these buy stops above this high being taken out. Because there's a buyer and seller at every transaction. So what we're doing is I'm teaching you, which is what I refer to as my market efficiency paradigm. The market is efficiently delivering price most times. There are times when it delivers inefficiently. At every transaction. So what we're doing is I'm teaching you, which is what I refer to as my market efficiency paradigm. The market is efficiently delivering price most times. There are times when it delivers inefficiently. Inefficiencies like fair value gaps, wicks, those inefficiencies will be revisited. Maybe not immediately, but they will be revisited. So we look at how the less informed traders that use retail concepts and logic, breakout strategies, trend lines, harmonics, Elliott wave, that type of thing, all those gimmicks, I'm just going to be honest with what they are, they have no bearing on what makes the market go up and down. The market's going to go to one of two things. It's going to go to an inefficiency, or it's going to go to liquidity in the form of stops, be it buy stops or sell stops. That's the only two things it will do. If it's not doing that, it's going to go sideways. Now, think about what I just explained. I've said this before, but there's so many people that are watching my videos, because there's a lot of them. And if you're new, the question usually is where do I start? Start with the 2022 mentorship. It's 40 some videos. It'll get you right into the marketplace looking for a specific setup. That way you can backtest it, study it, look at old examples of it, and you'll be quickly convinced that there's something that you can see repeating week after week. When you have time, if you want to go through all the other stuff on the videos, do it. Who cares? I don't care. But I'm teaching this live to you, and you really want to be in these live sessions, or at least watching them as soon as you can get your hands on them, because this is the teaching. Okay, this is the part that makes it realistic to you. Because I can talk about things in a chart that's pre-recorded, and you're going to think like some of the trolls, oh, it's cherry picked. You know, you form-fitted that. But I don't do that when I'm on Twitter and I'm doing it here. I'm outlining it live. I don't have a safety net. I'm either right or I'm wrong. And I have a track record. Look how many times I'm doing it right. That's the track record, okay? I don't need to open up my books to you. I don't need to do that. I'm telling you what the market's going to do beforehand. If I didn't have an audience this long, it would be apparent that I don't know what I'm talking about. There is no algorithm. There's no way to time the marketplace, and there's no reasonable way of discerning what price is going to do next. Then it would be what? Random. And these markets are not random. That's what I'm trying to communicate to you. Can I take you in front of hardline proof that here is the algorithm? Here it is. I can't do that. I can show you in the chart using the logic that, in my mind, should convince anyone with reasonable common sense that there's not a buying and selling effect going on. That there is no algorithm. There's no way to time the marketplace, and there's no reasonable way of discerning what price is going to do next. Then it would be what? Random. And these markets are not random. That's what I'm trying to communicate to you. Can I take you in front of hardline proof that here is the algorithm? Here it is. I can't do that. I can show you in the chart using the logic that, in my mind, should convince anyone with reasonable common sense that there's not a buying and selling effect going on here. But that's what we're told. We're told that as traders. We read books, we listen to other traders. They make money using whatever they're doing. There's people that make money with Elliott Wave. I'm not saying they don't. I'm not saying that there aren't people out there making money with harmonic patterns. They do. But that's not what makes markets go up and down. That's not. And it's not buying and selling pressure. It doesn't matter. If the market's going to collapse or go parabolically higher, it doesn't matter how many people's buying it. It's going there. Think about it when you look at a forex pair. If a central bank comes out and says, you know, their currency's overvalued, they're going to reprice it lower. Who's stopping them? The buyers are going to keep it from going down? No, no. When the euro and the Swissy were depegged, did the buying and selling pressure have any effect there? No. It was a massive destruction. Gone. Brokerages were closed down. When markets go into limit up, if you're looking at commodities, like say you're trading the grain market or something like that, and the market goes limit up or limit down, how many contracts were traded when that happened? Oh, you ever thought about it like that, did you? Right. And that's the things that I started thinking about, like, wait a minute. All this attention on volume. Volume is not the answer. That is not the answer, folks. So market profile, another gimmick. Yes, people make money with it because you can make money flipping a quarter too. All you need is a catalyst to do something. People make money at casinos too. Most don't, but some do. Some people win the lottery. Some people buy scratch-offs and win. The likelihood is low. But sometimes that happens. But if we put 1,000 traders in a room learning Elliott Wave, you're not getting 1,000 profitable traders. You're not. And that in itself should cancel any idea that, hey, this is the be-all, end-all. What I'm teaching you is the market. We're not a cult. We're not a team, okay? And you don't have to like me. But what I'm teaching you is the actual market. So don't come here to try to be my worshiper. I don't want to be worshipped. I don't want to be anybody thinking of me like I'm a hero. I'm not. If you're on the other side of my trade, I don't feel sorry for you. So I want you to understand that. That's the person that you're looking up to. I have no compassion for you. If you made the mistake of taking the other side of my trade, I do not care if you lost money. I'm teaching you so that way you don't fall victim to that. There's a way of doing this without all of the mumbo jumbo gimmicks. Again, in case you missed it and you have your journal ready, these are the only two things that you need to worry about. Is the market likely to move in an expansion, higher or lower? If the market's not predisposed to do that, then it's doing what? It's going to consolidate. Should you trade in consolidations? No. You've seen me outline certain. These are the only two things that you need to worry about. Is the market likely to move in an expansion, higher or lower? If the market's not predisposed to do that, then it's doing what? It's going to consolidate. Should you trade in consolidations? No. You've seen me outline certain things in this small little consolidation, but I'm not going to lose my mind worrying about these small little tiny micro fluctuations. It's not worth it to me. I wouldn't be doing anything this morning, but I'm showing you how you need to prepare So that way when we're not together in the future, when I'm not doing live streams and such, you'll have this information in your journal. You'll have this video to refer back to. So the market's either going to consolidate or expand. Now, if it's going to consolidate, when does that usually occur? After big moves, because large ranges beget small ranges, and small ranges beget large ranges. So small moves bring in the likelihood of a big move eventually. When can the big move happen? Your economic calendar. Just like a TV guide, okay? When you go on your cable TV, you want to see when the next sports team that you follow is going to play, go to ESPN. When's the Knicks playing? When's the Heat playing? When's the Ravens? The Yankees, or whatever. You can pull up and see, okay, this channel, at this time, this is when that program's coming on. Well, the markets are programmed, folks. They're scripted, whether you like it or not, they're scripted. And these movements are timed. And you're looking at the volume thinking, that's the reason why. No, it's not. That's when everybody is being induced into taking or getting removed from the marketplace, because the market's moving regardless of how many buying and selling is going on. That's the big con. That's the scam that everybody buys into when they first start trading. And it's uncomfortable to suggest that it would be completely controlled, but why should it be? Why should you wrestle with that? I don't think anybody should wrestle with the idea of it. You should be thankful that they're 100% manipulated, because that means that your currency, that these stock markets can't be influenced by some kind of terrorist act where, oh, they come in and they did heavy selling. Saudi Arabia, they're rich. They have a lot of money. America has a lot of enemies. You don't think that China, Russia, Iran, they all could come together and short the markets and kill our entire stock market? They could. If that's what you believe, buying and selling pressure could happen and cause these markets to do that, why hasn't that ever happened? Because it can't happen. That's not going to happen. Now, eventually, I'm sure somebody's going to, see a big stock market crash, and somebody's going to get faulted for it, and they may even use a narrative, something like that, to put us into some kind of a WAR, you paying attention. But it's just nonsense to believe that.
Yeah, it's facts. Because any stock market crash is just gonna have something to blame on.
Terrorist act where, oh, they come in. I don't think anybody should wrestle with the idea of it. You should be thankful that they're 100% manipulated, because that means that your currency, that these stock markets can't be influenced by some kind of terrorist act where, oh, they come in and they did heavy selling. Saudi Arabia, they're rich. They have a lot of money. America has a lot of enemies. You don't think that China, Russia, Iran, they all could come together and short the markets and kill our entire stock market? They could. If that's what you believe, buying and selling pressure could happen and cause these markets to do that, why hasn't that ever happened? Because it can't happen. That's not going to happen. Now, eventually, I'm sure somebody's going to, see a big stock market crash, and somebody's going to get faulted for it, and they may even use a narrative, something like that, to put us into some kind of a WAR, you paying attention. But it's just nonsense to believe that these markets are left open to any kind of potential for that to occur. I don't lose sleep over the market being muscled by people like that. These markets are controlled. Now, just like a casino. You can have a card counter come in once or twice, run the tables and you game them for a little while. But most people aren't card counters. They're not professional gamblers in that respect. But they have a house edge. These markets have a house edge too. And just like the wrestling that you used to watch and I used to watch and still on TV now, the outcome is predetermined. And I'm sorry, I don't care where you work, I don't care how long you've been doing it, but that's how I do this. I know what these scripts are. I'm telling you where they're going to go and why it's happening. If it wasn't like that, I wouldn't be this consistent. I wouldn't be telling you on Twitter, in live streams, when it's happening, minute by minute, candle by candle, telling you exactly where it's going to go to next. There's never been any other approach to trading in retail that delivers this measure of precision, this consistently every single day. And that's not a brag. That's not a brag. It's just simple logic. Are you paying attention? Are you paying attention to the fact that these things repeat over and over and over again? Because that should give you comfort, knowing that just like your boring job that you go to, you can't wait to escape, you can turn this hobby into that eventually if you put the time into it. And going back to that equation where it's one of two things. It's either going to consolidate. When's it going to consolidate, Michael? Ahead of a major rate announcement, ahead of FOMC, expect what? Consolidation. Big money's not going to position in front of something like that. In front of a CPI number. Okay, something like that. Or after a large move, the next session, the morning session, there it is. They're going to use the sentiment idea that the smart money sits on their hands and waits for the retail crowd to go in and chase what's already been going on overnight, like we have here. Is the market going anywhere right now? Sideways. It's exactly out of the rules that I've given you on my YouTube channel. I taught those rules in my mentorship in 2016. They're in videos that haven't been edited. I taught this in 1996. These very rules. They have been with me since then. You have to understand that there is a rule of engagement. When do we engage? When do we anticipate certain things? Well, if it's not going to be those instances there, and then we have a medium or high impact news driver, how do we know that? The economic calendar. They're not hiding it from you. That's the wonderful thing. They're not hiding that from you. They're telling you, this is when we're going to release data to the public. That data has absolutely no bearing on the marketplace. It's just a smokescreen. When it doesn't favor the outcome, matching what the report suggests, then they'll say, well, it was already baked into the price. It's already priced in. And then when it does cause a movement that would be justified in the expectations of why that market report came out, and the market does a specific thing that should be expected to do it. In other words, if the report is bearish and the market tanks, oh, well, there you go. That's the reason why the market went down. That's not why it did. But they condition you. It's called priming. Priming. Giving you something to expect over and over again, 2, 3, 4 times is enough for most humans. Okay, well, it's going to be the same thing next time. And then you're trapped. So the economic calendar, you need to know what that is going to be providing you. And you can look at it weeks in advance, months in advance. When is the CPI number in April? How about in May? How about in December? All that stuff's scheduled. Just like your favorite sports. Used to be when I grew up, it was Monday Night Football. I can't stand football. But everybody would be watching football at Monday nights. You plan when you're going to engage. These high impact news drivers, if we don't have a move, like it's large range move, or we have an overnight move like this, and we have a medium or high impact news driver, then we are likely to do what? Have a low resistance liquidity run. Oh, you went and said it. That's what I'm teaching you to look for. This, be watching football at Monday nights. You plan when you're going to engage. These high impact news drivers, if we don't have a move, like it's a large range move, or we have an overnight move like this, and we have a medium or high impact news driver, then we are likely to do what? Have a low resistance liquidity run. Oh, you went and said it. That's what I'm teaching you to look for. This is a high resistance liquidity run signature. Meaning that yes, I can see where it's going and I can outline it and you can see it happening. But number one, it's not a lot of movement. Two, it's very, very frustrating waiting for it to happen. Like I'd rather wash my cars. Wash my cars. I had somebody tell me, there's no R in wash. Listen, I was raised by Virginians, okay? And that's just the way I was taught, okay? I know there's no R there, but I'd rather wash I would rather cut the grass than do anything with this today. But I am teaching you how to anticipate this. So that way you can see there is logic. You can predict when the market's not going to do something. So therefore you can do what? Not trade. Don't even open your charts up. Have a life. Do something else. And then you can also know by having these instances understood, if it's not under these conditions, what are we looking for then? We are looking for medium or high impact news drivers to provide a smokescreen to trip up less informed traders to be our liquidity in low resistance liquidity runs, where the market just goes and just easy, salad days, easy trade. And then you can also know by having these instances understood, if it's not under these conditions, what are we looking for then? We are looking for medium or high impact news drivers to provide a smokescreen to trip up less informed traders to be our liquidity in low resistance liquidity runs, where the market just goes and just easy, salad days, easy trading. That's what that means. Easy, easy, easy. But every day is not a low resistance liquidity run. So the equation is this: is the market that you're sitting down in front of likely to consolidate? How do we know it's going to consolidate? I've already mentioned those rules here. Go back and I'm going to repeat it here. If it doesn't meet that criteria that it's likely to consolidate, then we are looking for medium or high impact news drivers to offer a smoke screen and then a low resistance liquidity run. That means a nice easy run to liquidity or inefficiency. So now we have in the next equation, are we buying or selling? Where's the market been? Where is it drawing to on the weekly and daily chart? Where's the stops that have not been tapped yet? Where's the inefficiency? Where is it drawing to on the weekly and daily chart? Where's the stops that have not been tapped yet? Where's the inefficiency opposed to the most recent price direction? Well, go back to this example here. We went down overnight. It's likely to consolidate, but more specifically, we know that the retail traders are going to do what? They're going to chase it going short. They trap them here, take them up to the inefficiency, and buy stops. 2 birds, 1 stone. Then enter what? Consolidation. Buying here, buying on the order block, into that area here. There's your 2 trades for today. SMT diversions, the NASDAQ failed to make that lower low here. That qualified the likelihood of getting up into that range. I mean, just look at where we're at here. I told you we'd go down the middle of that order block there, mean threshold. That in itself, selling short here, target, consequent correction of the wick, order block, mean threshold, order block. There you go, boom. That's 30 handles or so. In a rough market, it's chop. I outlined it, showed it to you. I'm not interested in trading it. Am I saying that you shouldn't? No. You might see this and say, you know what? I'm not afraid of this. This makes perfect sense to me. I'm going to trade in these types of markets. I'm going to trade in consolidation because I won't have my face torn off with a big run that came out of nowhere, so I don't see that yet. And then over time, you'll learn how to do that other approach to trading, which is where I think the better strategies are when you are trading with expansions, where the market just quickly gives you what you're looking for and you can be done and go about your business. I don't want to be in markets like this where it's really just, it's daunting to watch this. It's like watching paint dry. So the equation is consolidation or expansion. Okay, if it's going to be expansion, is it bullish or bearish? That goes back to the weekly chart. Is it likely to expand up or down on the weekly chart? We're not trying to predict the closing price. We're just likely to see more movement up or more movement down based on the weekly chart. The next candle for the weekly, is it more likely that it's going to make a move higher or lower? Where's it going to go to? Is there stops it needs to go to in efficiency? And that logic, we use that through the entirety of the week. Specifically, Monday, Tuesday, Wednesday. We're looking for the setup by then. Now, if we're bearish, because we expect the weekly chart to expand lower, we go in looking for discount arrays. Anything below market price, what's market price? Where it's trading right now when you sit down in front of your charts. Where's the inefficiencies below that? That would be in line with the expansion lower on the weekly chart. So we're in a sell program. We're looking for shorts. But we have to know what it's aiming for. Where's the sell stops? Is there any fair value gap below market price? Does that range offer opportunity for you to get at least 5 handles or 10 handles you can use as a filter? If it can move 10 handles, chances are you probably have a really good opportunity to get 5 handles painlessly. If you know it can move 10 and you're only trying to get 5, that's very forgiving. You can be a little off on your entry and you can be a little off on your exit and still get the meat on the bone. Dollar is ripping higher, trading above its relative equal highs formed at 9:30 and 10. If you're looking at a 1-minute chart, that's going to offer some heaviness on ES. So since we're at the mean threshold here, that order block, remember I was saying if we have a body that closes below that, that's going to offer what? To me, I would interpret that as heaviness, and then we'll be revisiting this low here. The sell side now exists here. Okay, give me 1 second. So we have one of 2 things happening here. If we cancel out the idea that the market's in consolidation, it's going to expand. Is it expanding lower or higher? You determine it from the weekly chart. What are you doing on the weekly chart? What I've outlined here on this 5-minute chart. Where it should gravitate to. All these levels I've outlined, I told you beforehand, and it's going to them. That's the same thing you're doing with a weekly chart. Is it, let's see, what you're fearful of is you don't have time or experience watching price action. See, I'm taking you into the charts, looking at this stuff. When it's boring, these are the times that you need to be learning, because this is where you're going to lose money. Everybody can make money in big moves. If you're on side and a big move comes, everybody gets lucky, and that's what everybody shows on their social media accounts. You see it that way. But most times, a lot of traders don't have an idea what it is they're doing or how to filter out potentially losing days. And you got a lot of people out there that'll say terrible things about me and say I'm cherry picking. I'm putting things on Twitter that I don't delete. It's a track record that's ongoing. In my private mentorship, in the commentaries, which I don't upload and I won't upload them, I was doing what you see me doing on Twitter daily, 90% accurate. And if I'm not telling the truth, my mentorship students can come into a comment section and say I'm a liar. Go right on the Twitter and say I'm a liar. There should be thousands of people saying I'm a liar. You won't see that. You're going to see people saying, no, he's not
I have
true.
watched core content.
I seen it just like you're seeing it right now. But
Dude,
you have to
I got like a whole notebook for
determine
it too.
whether you're going to be submissive to the process that's required. You're going to have to put a lot of time into this. And you have to do exercises like I'm putting you through right now. And so I guarantee you, most of you...
It's kind of what I want to do for the 2023 mentorship though, is have like all the notes in there. Once I'm done going over it, like I have notes in Notion, but then I want to transfer those into this journal. And then I think that's what I'm going to do at the end. I mean, I could do it like day by day and like do these as I'm going, but I think I'm just going to go back over No, I don't think I would rewatch it again. Maybe just like a few lessons, but I think I'll go back over and then write the notes down into that on paper.
Probably started this
Again.
video, turn it off. You're like, this guy tell me anything, and you're going to fail. You have to know this part. Nobody writes books about this kind of stuff. Nobody sells courses about this stuff because nobody would pay, and that's why they fail. That's why they fail. You want to know where you're going to mess up. Wouldn't that make sense? Wouldn't that make sense in anything else? If you're going to pay money, invest time and energy into something, what could go wrong? Where will I hurt myself? Think about it. If you joined a gym and paid for a personal trainer, one of the things they're going to tell you to do is do it this way so you don't do what? Hurt yourself. Lift with your knees and legs. Don't lift with your back. It's always in everything we do, but when we come to trading, it's got to be something different. The guy or the gal that's teaching me, they got to teach me the way I want to be taught. I know how I should be taught. I know how I should learn this. Then you already know. Don't come to me. Don't come to anybody else. You know. You're the teacher. But if you discern whether or not the market's going to expand or in consolidation, if it's not consolidation, you go to the weekly chart. Is it going to expand higher or lower? If it's expanding higher and you're bullish, you're in a buy program. That means you're going to be looking for inefficiencies, fair value gaps, SIBs, above market price, or buy stops. If you're looking at the weekly chart and you think that the weekly candle is going to expand lower, you are in a sell program. That means you're going to be looking for inefficiencies, fair value gaps, BISIs, below market price, or sell stops. Now, folks, listen, please listen. How complicated is that? It does not take acrobatics to accomplish a simple process of saying, okay, we talked about how does the market consolidate. When does the market consolidate? What do we use the economic calendar for? When are these trades going to form? It's all programmed. It's all scripted. Your work, the requirement that's required for you to do this is you have to sit and study old moves. You have to do that. You have to do it and enjoy doing it because you're going to do that the rest of your life as a trader. You want money. You want to make money. You want to profit. That will not happen consistently without you doing these types of things because this is what leads to that. You have to know where everybody else loses, you avoid that. I'll say it again. Where everyone else fails, you
I would agree 100%.
you are sitting still.
This is college right now.
Everybody's in this
I'm
stuff right now.
attending. And the people that say that he yaps, I don't think they actually listen to the stuff he's saying. Because, like, literally every point throughout this lecture has had some sort of value. Dang, we're only halfway through. I mean, there are times when he does, like, kind of say some things, but then he'll tie it back to something. And
Maybe live streaming. They're in here trying to trade all kinds of stuff. You see something in the chart, that's a religion. The Rorschach, you see whatever you want it to be showing you. It's a simple process. Simple. Think about what I taught in the 2022 model. And there's 40 videos from last year. It's on my YouTube channel. If you're new, and it's the first time you watch a video from me, how should you begin trading? Well, you don't start with live funds, and you don't even go into a demo account. You study price action. That's what mentorship is with me. I teach how to read price. I do not teach you how to jump into a live account. I do not teach you to go out there and trade with these live fund accounts. Okay, I'm interviewing students that have done that. But in my mentorship,
that's
I've
why I'm
never
patient.
said, go out there and trade with no money.
I have a very broad time horizon.
You probably aren't. You're probably impulsive. You're in a hurry to start making money because you're broke, you need more money, you need secondary income, or you just can't wait to have the action. But you have to have, at some point you got to listen to some voice of reason. Someone that's been here before. I've hurt myself, financially hurt myself, emotionally, psychologically, and physically hurt myself in these markets, doing the things that you're trying to do right now and thinking that you're going to be exempt. You won't be exempt. There's a way to do this properly, painlessly, and without losing money. You have to do it by going through old data, studying it, getting a feel for what is a low resistance liquidity run signature. What does it look like when the market created these high impact news drivers? Because you can go back and look at old calendars. You can see where the old reports were and study what did they do. That's my backtesting. My backtesting is not going into a forex tester or a futures tester and playing like in market replay. That to me, that's a walk forward. That's a walk forward test of a model without using real time data. My backtesting, the way I teach my students is you go through old data and you find the patterns that I'm teaching you that price will follow. They're not retail patterns. I'm teaching you how to discern the narrative, why price does certain things, when it will do it, how it will do it. All the questions that I get asked most times are all answered by you simply sitting in your charts. But see, the problem is this. You are afraid. You're afraid that you're going to put time into this. Half-assed. You're going to think and defend it and say, oh no, I did it. I watched all your videos and I scribbled some things on a notepad. But you did not go through and study old price data, study how much time it took for the prices to move, how much drawdown did it take, how much time did it require before it moved into your first partial, and then you conditioned yourself by seeing example after example after example of that. When you do that, and you have a long log of examples, of case studies, you will know what you're looking for because it'll make sense to you. It will leap off at the chart. You'll know exactly what PD array, if it's a breaker that you like, if it's an order block, fair value gap, institutional order flow entry drill, optimal trade entry, turtle soup, implied fair value gap, where your trade setups form. Are you going to trade away from a new week opening gap when you're bearish to the next lower new fair value gap? Is that going to be your criteria for looking for your setups? Some of you might not want to do that. Most of you probably would love to do that now because you've seen the power and the effectiveness of that pattern, not pattern, but that concept of using those specific 3 levels. I don't tell you how you should trade. And study old price data. Study how much time it took for the prices to move, how much drawdown did it take, how much time did it require before it moved into your first partial, and then you conditioned yourself by seeing example after example after example of that. When you do that, and you have a long log of examples, of case studies, you will know what you're looking for. Because it'll make sense to you. It will leap off at the chart. You'll know exactly what PD array, if it's a breaker that you like, if it's an order block, fair value gap, institutional order flow entry drill, optimal trade entry, turtle soup, implied fair value gap, where your trade setups form. Are you going to trade away from a new week opening gap when you're bearish to the next lower new fair value gap? Is that going to be your criteria for looking for your setups? Some of you might not want to do that. Most of you probably would love to do that now because you've seen the power and the effectiveness of that pattern, not pattern, but that concept of using those specific 3 levels. I don't tell you how you should trade. I give you the tools. I teach you the logic on how to read price action. And you find your perfect model for you. And once you find it, you don't tinker with it. You don't mess around with it. You don't try to make it more fancy or more complicated. You don't do that. You don't try to add other things that I've taught. If it doesn't require it, don't even refer to it. Consolidation or expansion? Consolidation, we do nothing. Expansion, is it bullish or bearish? If it's bullish, what fair value gap or inefficiency above price, or where are the buy stops? That's the draw on liquidity. If you're bearish, you're in a sell program, you're looking for inefficiency below price, BISI, or sell side liquidity. That's it. That's what you're targeting that. That's how the market's going to move. That's it. There's nothing else that's going to happen. There's absolutely nothing going to happen outside of those conditions. Period. End of story. That's the way it is. That's the gospel. Now, how do you trade it? That gets to what PD array you like. Can you see an order block? Do you see the fair value gap? If you're bullish, say your expansion is on the weekly chart, you think it's going to go higher. Whatever market it is you're looking at, because it's not just ES, it's every asset class. But if you think it's going to go higher, you have a draw on liquidity. That means some fair value gap above price, or old high or highs, where buy stops are going to be resting. That's the draw on liquidity. You think you're submitting yourself to the idea that the market's going to gravitate up there. Why? Because the market goes to inefficiencies for the purpose of providing efficiency, or it's going to go to liquidity. Orders that are hardline in the market sitting there resting above old highs. What's above old highs? Buy stops. So what you're looking for is from that point at time when you're expecting prices to go up there if you're bullish, you want to see something as a discount that to buy off of. A down closed candle that has a fair value gap, boom, there you go. That's a high probability bullish order block. If you see that during a time window when I'm teaching, that this is where the algorithm will start spooling. See, it's not the buying and selling pressure. It requires immediate feedback, always working in your favor. You can't take a losing trade. You can't accept the fact that you've done something incorrectly, or your learning curve is a lot more demanding than someone else. You cannot cry
Like
and say,
glitch there.
just stuff doesn't work. And then say, well, there's no algorithm because I can't make it work. When you now see there's people all around the world making real money. And I told you, I have students that are absolutely killing it. And I'm honestly telling you many times that not all of my students do well. Nobody has a 100% strike rate in teaching everything. There's going to be people that come into this lazily and they will defend it vehemently. Oh, I wrote in a journal. I watched all your videos, ICT. I watched them. But what did you do with it? You can pay for cable TV and get the Food Network and have the favorite Gordon Ramsay program on there, and they could walk you through step by step. This is the recipe to make this. Look, I'm above average intelligence, I think. But I know enough to know, even because I'm watching that, I may have all the ingredients. My oven may be set properly. My result is not going to be the same thing as Gordon Ramsay. Okay, just because I'm watching, just because I paid for the cable television, just because I sat down and I wrote down the recipe and I recorded it and I go try to follow everything step by step, I know enough that I'm not going to get a Gordon Ramsay result simply because I watched and I scribbled some things down and I paid my price to observe it. It's going to require me doing what? Doing that same recipe, same procedure, process, over and over and over again. Not every oven's going to cook the same way. I've discovered it in our new home. This is a home that has propane. I've never had propane before. It's always been natural gas. And it cooks differently. The stovetop cooks differently and the oven cooks differently. And to be honest with you, I miss natural gas. But learning this is no different. And weak-minded, half-assed wannabes that come here and they try to learn and they can't do it and they cry, oh, this doesn't work. It's a fraud. It's a scam. No, you're a failure. You are failing you. How is it that everyone else, even the ones that didn't even pay me, are using the logic I'm teaching on this YouTube channel, and they're getting funded, they're making money, they're making ends meet, they're seeing progress, and they see precision. And many of them are actually taking the same things I'm recording my executions on, and they say, oh, look, here's the same trade, I took that same trade, here it is. I'm not telling you where I'm getting in. I'm giving you the logic of where the market's going to go. And my students know how to read between the lines. Oh, we're aiming here? Okay, so we're in expansion, we're in a buy program, we're going to be looking for a premium array. It means there's some kind of SIBI or a fair value gap or a buy side liquidity we're going to aim for. Oh, that's easy. So what do we want to do to get into it? Oh, we'll just buy a fair value gap. We'll buy a bullish breaker. Oh, suddenly it starts to make a lot more sense. You mean to tell me I don't need to put all those things in those 1,500 plus videos into every one of my trades? No, I don't. But those videos are teaching you how to be independently thinking about how your model is going to serve you. And you have to be willing to put in that time. And I'm sorry, but some of you don't have the patience to give yourself the required time. And that's unfortunate. That's impatience, that's a lack of discipline, and frankly, laziness. Oh, you can't call me lazy. I just did. I just did. And if I was standing in front of you, I'd say it to your face. That's exactly what it is. I've seen it so many times. The ones that really vehemently try to defend, oh, I've done it, I did this, I did that, they are the worst in terms of what they've done. The most laziest ones. And they never provide evidence, the proof, the time they put into it and what they did. Show me what you were doing. They don't do that. Because believe me, if you were doing all the work I teach you to do, you have logs of case studies that you've studied. And bottom line is the failures here, like everywhere else, are the ones that do not put in the work. You're just lazy. You wanted lottery wins, easy money, every trade win. Nope, doesn't exist. Look at the bodies of the candles at the mean threshold of that order block. Is that random? Think about what I said. Did we close with a body below that mean threshold? Nope. And if it did that, oh, you can't call me lazy. I just did. I just did. And if I was to give you all the, oh, just by between the lines. Oh, getting in zone. And they say, oh, look, here's the same trade. I took that same trade. Here it is. It's the one failing you. Learning this is no different. And weak-minded, half-assed wannabes that come here and they try to learn and they can't do it and they cry, oh, this doesn't work. It's a fraud. It's a scam. No, you're a failure. You are failing you. How is it that everyone else, even the ones that didn't even pay me, are using the logic I'm teaching on this YouTube channel, and they're getting funded, they're making money, they're making ends meet, they're seeing progress, and they see precision. And many of them are actually taking the same things I'm recording my executions on, and they say, oh, look, here's the same trade, I took that same trade, here it is. I'm not telling you where I'm getting in. I'm giving you the logic of where the market's going to go. And my students know how to read between the lines. Oh, we're aiming here? Okay, so we're in expansion, we're in a buy program, we're going to be looking for a premium array. It means there's some kind of SIBI or a fair value gap or a buy side liquidity we're going to aim for. Oh, that's easy. So what do we want to do to get into it? Oh, we'll just buy a fair value gap. We'll buy a bullish breaker. Oh, suddenly it starts to make a lot more sense. You mean to tell me I don't need to put all those things in those 1,500 plus videos into every one of my trades? No, I don't. But those videos are teaching you how to be independently thinking about how your model is going to serve you. And you have to be willing to put in that time. And I'm sorry, but some of you don't have the patience to give yourself the required time. And that's unfortunate. That's impatience, that's a lack of discipline, and frankly, laziness. Oh, you can't call me lazy. I just did. I just did. And if I was standing in front of you, I'd say it to your face. That's exactly what it is. I've seen it so many times. The ones that really vehemently try to defend, oh, I've done it, I did this, I did that, they are the worst in terms of what they've done. The most laziest ones. And they never provide evidence, the proof, at the time they put into it and what they did. Show me what you were doing. They won't do that. Because believe me, if you were doing all the work I teach you to do, you have logs of case studies that you've studied. And bottom line is the failures here, like everywhere else, are the ones that do not put in the work. You're just lazy. You wanted lottery wins, easy money, every trade win. Nope, it doesn't exist. Look at the bodies of the candles at the mean threshold of that order block. Is that random? Think about what I said. Did we close with a body below that mean threshold? Nope. And if it did that, what would it mean? It would be heaviness, meaning it would revert back to this sell-side liquidity. Because the bodies didn't do what? What the engineer said needs to happen. What did price do after that? Oh, 20 handles higher. Where do we look at now? You extend your fair value gap over, and you identify the high here with buy side. But where's the entry? You have to read price for weeks and months before you even consider taking trades. That's the part that you don't understand. You're trying to rush in there to do something. It won't make any sense to me unless I'm trading with live funds. Okay, go fail. Go fail, call me a fraud, and go trade something else. I don't care. I don't have time for you. The people that are going to be learning how to do this, listen, you're meeting people that are making significant annual salaries that people in professions make. They're not doing a whole year of trading to get these types of results. Like obviously that's not typical. I can't say that you're going to get that. I can't promise that. But doesn't it at least inspire your curiosity to do it the right way? If I'm telling you, here. I've already said it multiple times. I guarantee you this. Listen, okay? Get your soundbite recordings ready and all that business. Inner Circle Trader Michael Joe Huddleston guarantees you will be able to read price better than you would ever learn from anyone using any other methodology, course, gimmick, tool, indicator, anything. You will not find anything more precise than this. I'm out here in social media waiting for somebody else to come out here and do anything better than I'm showing you. I'm showing you to the tick precision daily. Crickets and failed live streams. That's what you're seeing. A lot of talk, but ain't nobody bringing anything better than this. You need to put the work in and fall in love with it. It's a lifestyle. You cannot be listening to Mickey Mouse mentors out there telling you that this isn't going to work for you. Because if you listen to that and you take that in, you'll believe it. And you'll never do the work to show you, the person that's most important, that you can. I don't need to be out here on Twitter. I don't need to be here doing live streams. I don't need to teach. I don't need to be doing this. I know it works. My students know it works. And you're seeing people with real receipts. The companies themselves that they're getting paid through. Because they can say, oh, he's faking his broker statements. You think these funded accounts are going to do these mock-ups where they're interviewing people where they paid out money? You think they're going to script that? Think about it. At first, I'll be honest with you, I didn't like any of this funded account stuff. I didn't like it. But it makes a perfect argument to anyone that's out there saying, oh, they photoshopped their results. And you're still seeing people saying, oh, it's fake. These companies that other people are trading with and getting withdrawals from, they're interviewing these students of mine. I'm not just taking their word for it. I'm seeing their receipts. They're being interviewed by the very companies that gave them the money. Pray tell, how on earth is that fake? How's that gained? Huh? See, I told you this year, I'm canceling all of your excuses. I've had profitable students since the 90s, folks. I can make traders make money. I can do that. I can do that for you, but you have to do all these things. And if you don't do it, you will fail. You will fail. And you're going to take that same logic into some Mickey Mouse operation somewhere else outside of me, and you'll try their garbage, and you'll fail there, and you'll be like the cynics out there in the world. Oh, everybody loses money trading. It's a game that nobody can win. Nobody can time the market. And you're a statistic. That's what you are. And I'm trying to prevent you from becoming a statistic. All you have to do is pay attention and show up every day. Cost you nothing, but you get a PhD. I don't know, maybe I'm just an old buddy-duddy. I just like things to be blunt. And sometimes that comes across as rude or arrogant. And that's not my aim. Believe me, I can be arrogant. I could do a lot of things that would be very arrogant. And I could show off. That's not what I want to be. I don't want to be that. But I do want to be a voice of reason. I do want to kick you in the ass when you need it. Like, you need to be shook up sometimes. Sometimes you do things lazily. Sometimes you just, you shouldn't be in here pushing a button, just trying to see what's going to happen. Think about why you're doing that. Why are you pushing that button? If there isn't anything in your model saying that you should be entering, what are you really compensating for? You're bored? Someone hurt your feelings? You want to flex on somebody that says SMC, ICT concepts are a fraud, ICT is a fraud. You want to go on social media and say, look at this trade I did. That's all the wrong reasons. Either your model's in price or it's not. If it's not, you do nothing. If it goes past the time of our trade windows, where we like to look at where price formations produce these setups, then you do what? You turn your charts off. Go do something else. As long as the sun rises tomorrow, and as long as these markets are here, opportunity will be here. It will be here. Okay, I promise you, it will be here. Don't be afraid. Okay, don't be afraid that it's going to take you a couple months or the rest of this year to learn this. But ICT, your Twitter scared the shit out of me. You're telling me that it's Teotihuacan, the end of the world as we know it. Oh, that's always a given. And then the sun could go into supernova, and there it is. We're done. Is it likely to happen? Probably not. But if you're going to live your life like that, good grief, just crawl under your bed and just wait to die then. But you have to at least take the initiative and do all the things I'm telling you to do. And yes, it's hard. It's hard, absolutely hard, because you're conditioning yourself to do something 90% of everyone else fail at. And you know that statistic coming in. What are they failing? They're failing to find something that matches their personality. They're failing to understand what makes markets go up and down. And they're failing to have sound risk management. Those three things. If you just simply applied that to anything trading, flip a quarter, you could be profitable doing that. It sounds impossible, but it's true. So we've already tapped the bottom, or the low of that blue fair value gap. We've done that here. We rallied down to the main threshold of the order block that I outlined. I said that we have to see a close. If we close below that, and that would indicate what? Heaviness. The body's respected that. Now we're back up here. Why should it be returning here? What's in this area over here that would be useful? If we didn't have these wicks, now this is important too. This, you want to screenshot this before I start saying anything. Screenshot this actual portion of price action right now. I'll give you a second to do it. If this singular candle here with the wick that touches the fair value gap, if that was the only wick here, and we didn't have this one, and this one, and this one, I would look at that wick and run consequent encouragement on that. And if it hit that, then I would expect it to just gravitate back lower and just be in this range longer. But because we have all of these wicks, that consequent encouragement to me, it's already been utilized multiple times. Here, and now we're into it here again, and here again. It's not of interest to me. Can it be referred to later on? Yes, I would like to see it. If we go higher, I want to see it act as support. I don't want to see bodies trade down below that. If we go higher, I don't want to see it close below the consequent encouragement of that wick. Meaning that I favor a run into that fair value gap once more, and more specifically, the next level is that rejection block, which is the up close price on that candle here, the green one. So that level, that's the rejection block. Okay, I would want to see it trade up to that and watch it trade through it. And then if it comes back down, I want to see this fair value gap act as support. Now, is that difficult? No. You just aren't familiar with seeing that like I have for 3 decades. Once you see these things repeat over and over and over again, you're conditioned to anticipate specific things. Is there a breaker in here? No. So why are you worrying about a breaker? It's not there. Do you see a volume imbalance in here? No. So why are you worried about a volume imbalance? You only are looking for what the price itself is showing you. That's all. That's all you're doing. I've given you very specific PD arrays, things that produce results that can be measured in price movements in the past that you can build confidence on. Will you do them in the future and do it wrong? Yes, I do. But they will serve you most times better than if you didn't use them at all. It provides context to price. It gives you the storyline. Where's the turning points? Where's the real support and resistance? Where's the point of retracement? Where's it going to go to? Where could you reasonably expect the retracement to stop? Think about that. That's everything that every friggin' book out there won't touch because they don't know. You don't think that there would be dozens of books, encyclopedias on price action the way I'm teaching? If everybody else knew this, if this was rebranded, why the fuck isn't it in all these books? Because it's not. It's not there, folks. I don't care how many ass-hurt little people that can't run their own businesses, can't sell their shit on their own merit. They got to come up with this nonsense to justify why they suck. They suck. They can't do what you're learning to do. They can't call it live. They can't call it minute by minute. They cannot do it. But they're going to shame you so that way you don't become better than them. Just like your friends and family. If you tell them what you're doing, I promise you, you're going to get the opposite of what you expect to hear. You want to hear your brother, your sister, your cousin, your mother, your father, your boss, your coworkers. Oh, that's a great idea, Bruce. You know what? You're going to do well. You're going to do well at that. If anybody was going to do it, Bruce, you're going to do it. No. Carl is going to tell you, you're going to fail. You're going to be working here the rest of your life just like me. But I'll be employee of the month. Well, screw Carl. Don't listen to Bruce. Your family members, they don't understand what you're doing. Believe me, not one of my family members, even my uncle that got me into this, it was funny watching him when I was a teenager, cheerleading it because he made money in the sugar market in the 80s. He's like, Michael, a lot of my older students know this story. I'll just make it real brief. Michael, when you get out of school, get yourself a college degree, become an electronic technician, because that's what he was at Westinghouse, And do what? Learn how to trade futures and options. The richest people in the world, Michael, trade futures and options. Now, this is my uncle who made money. He ended up buying a condominium in Ocean City, which is not a big deal, but back then that was a big deal. So, of course, as a typical teenager, 14, 15 years old, I'm like, oh, stock market? Yeah, I'm not interested. Let me go watch my martial art movies and go to my martial art class and hang out with my friends. That's what I was interested in. I didn't worry about money because a kid ain't interested in money. But then when I started doing this very thing in the 90s, and he saw me doing well, he actually turned around from becoming a cheerleader to, why are you doing well? And I've done this longer. And when I was paying room and board, because I moved out with my grandparents and moved in with them because I wasn't prepared to do much. I basically was a hospice nurse for my grandparents and a student and married too young. So I was doing too many things, plate spinning, failure in every aspect except for taking care of my grandparents. But when he got too sick, when my grandfather passed away, my grandmother had to go to a nursing home because we couldn't take care of her anymore. Incontinence became a factor. My aunt and uncle said, you can stay with us until you get on your feet. Great. So I'm in school trying to get my computer science up to par so I can get my job as a systems analyst. That was what I was trying to do. And I got involved in the trading. And one of the critical points in my development was when I told my uncle, I said, look what I'm doing here. Now, this is the uncle that introduced me to trading. At 14 years old, all he talked to me about on Sundays at my grandparents, trading. He bought his wife, my aunt, a Fiero, not a Ferrari, a Fiero GT, which was a cool car back then. And I loved to sit in it. And I was like, I want to have this. And they had their house. Everybody else rented, and they own a home. They're paying a mortgage on it, but they had a swimming pool. And to me, we had to go to an apartment complex up the road, which was Maple Crest at the time, to go swimming with somebody that was either a friend or a schoolmate that would be, a resident there. That's the swimming we did. Or we went to a creek. That's the way it was. But here I've looked at him. I'm thinking to myself, you have all these things. I want to have those things too. And it inspired me to do things that would have otherwise been like the rest of my friends. They just didn't care. They didn't want to do anything really. They were lazy. And they all live lives that show that today. They never really put any kind of real effort into building past what would ever be considered just the average wage earner's lifestyle. And I started showing my uncle, I said, look what I'm doing here. Here's the 50-day moving average. I'm using it as my bias. If 9 days ago the moving average was lower than it is today, that means I'm bullish. Then I waited for a 60-minute oversold condition on a stochastic, which was the lines that you set those stochastics was 5 and smooth by 3-3. That was the settings I used. And I looked for a bullish divergence type 1 or a trend following. They call it hidden divergence. And Nick Van Nice was the inventor of that. He's the one that brought it to the community. He never gets credit for it. It pisses me off that everybody else knows what a hidden divergence is or type 2, but he's the only person that ever brought it out. He did that in the 90s. He never gets credit for it. But that was my bicycle. That was my bicycle. And I only wanted to go long because I didn't understand selling short. So I started showing him the results of doing that. And as soon as I would tell him that I'm trying to buy either wheat or I'm trying to buy live cattle or I'm trying to buy crude oil or copper, he's going in with his real account, fading it, going the other direction. Well, I don't need to tell you how that ended, but he got really argumentative, where I was looking at we're going to learn how to do this together, and it's going to create a better bond between the nephew, the uncle, and it just complete the circle. He introduced me to the idea of trading when I was a younger kid, and here in my 20s, I'm actually now doing it, and because my analysis was right, and he was fading, he wanted to be able to say he beat me. That's what it came down to. He wanted to be able to do the opposite of what his nephew, the kid that he was encouraging, but no longer was encouraging. I was able to do something he was unsuccessful at because he only got lucky in sugar. After that, lost. And I understand why. He's a book smart guy. He graduated with a finance degree, specializing in business administration, specializing in finance. That's where he went to school in University of Baltimore. And he is analytical to a fault. He wants black and white binary. It only can be this. And he's a natural contrarian. And I tried to tell him, this is how you use your personality like that. This is a model to do that and do well with it. Wouldn't do it. Wouldn't touch it. Even though I was showing him proof. This is what it looks like. This is what it will do tomorrow. Boom, it did it. Never touched it. Failed. So, when I got my oldest son's mother, who was married at the time, I didn't know it. And yes, I had a relationship with her that resulted in having a son. He's my oldest boy. He and I had a conversation. I said, listen, I want to hide from this woman because she's a gold digger. And I said, let's put some money into an account together, but the name will be in your name. Okay, that's great. I said, so what we'll do, anytime I need something, you just pay for it. You're not giving me cash, but if I need something, you just pay for it, okay? Great, no problem. Well, we put money in together, and I was supposed to be deciding what we do, and that didn't work out. When he got involved in making his own decisions, and he lost half of what we put in, he took his half out, which was the remaining balance. Now, talk about a screw job. Yeah, that's exactly what family did. It was my half that we lost. His half never got any, there was no losses there. He gets to take all his money out. So that's what I'm telling you about money with family and trading with family. You can't mix those together, folks. Your best friends, even, you can't do that. You can't do it. So love them from a distance. Do what you got to do. Keep it to yourself. And there it is. Now, you can create partnerships. I've had partnerships over the years where everything is off the books, if you want to say it that way. And you can develop really good friendships like that. You can be an angel investor with your skill set and never bring any money to it. And when you need help with something, they're there to scratch your back. And unfortunately, I had to live like that for a number of years because a gold digger knew I had a skill set that was going to lead to a better lifestyle than her husband was providing her. And my friends at the time did me a great disservice by telling her where my pursuits were. So she had insight that I didn't know she had. And yes, I take full responsibility of having. And unfortunately, I had to live like it. Good friendships like that. You can be an angel investor with your skill set and never bring any money to it. And when you need help with something, they're there to scratch your back. And unfortunately, I had to live like that for a number of years because a gold digger knew I had a skill set that was going to lead to a better lifestyle than her husband was providing her. And my friends at the time did me a great disservice by telling her where my pursuits were. So she had insight that I didn't know she had. And yes, I take full responsibility of having relations with her that resulted in my oldest son, who I love. But we raised him with joint custody. And I had to do a lot of things to live away from her reach. And maybe you wouldn't do those types of things. Maybe you would do something entirely different. But my son did not want for anything. Did not want for anything. And when I was working at Domino's, I was doing that so she wouldn't get more than she should have gotten. At any time, I could have stopped. And I shared on Twitter years ago a picture of me when I stopped in on my birthday. I'm sitting in my Domino's uniform. And I'm taking a bite of my birthday cake, ice cream cake, and my mother took a picture of me. And the face that I'm making, you can, like, at that day, I was thinking to myself, do I really want to put myself through this?
I want to see this. Michael.
Like, I don't think I'm doing the right thing. And every time I thought about her getting more from me, because she was an opportunistic person. This is not a sexist remark, okay? She was calculated in what she was doing. And only when she got pregnant, she told me she was married and she had a son. I knew nothing about. That's some low, greasy shit. And here I am, I'm 20 some years old, fresh out the box, ready to run, and I have all this. So, I had my son 5 days a week, except for Thursdays, which was her only night where she didn't run around doing her thing, and she'd have him then. So I was not a deadbeat dad, and I had all the problems that you might consider that's a disadvantage for you. I'm a single parent, ICT, I don't make enough money, and I have this problem, I gotta go to school. Listen, there ain't nothing you're gonna tell me that I didn't have to, I had adversities too, man. Believe me, I had all that. It wasn't easy for me. And I can see how the Lord laid my steps in accordance to how he led me to where I am right now. Everything happened for a reason. And while you're going through it, you feel like it's the worst thing that could ever happen. You're being held back. You're being hindered. Sometimes it's a good thing. Sometimes it's better for you not to be so successful right away. Sometimes it's better for you to wait and defer what you know you can do until a better time. Sometimes it's a good thing. Sometimes it's better for you not to be so successful right away. Sometimes it's better for you to wait and defer what you know you can do until a better.
That is some motivation.
Time. My uncle, I wish he would have been more successful trading. I actually gave him access to my mentorship. Didn't use it. His pride won't let him do it. Think about that. Most of you out there that are still emailing me know you can't join that private group, so please stop asking. I'm not trying to be ignorant to you, but I'm reminding you, I'm not selling a mentorship. You're not joining it. You can't get into it. That community is closed off. But most of you would chew your own arm off to be able to get in there. And I gave that to my uncle. I said, listen, just join us as part of the community. Nope. He signed in one time, and that was it. Never, ever, ever signed in again. That's a bitter person. That's bitterness. And it makes no sense to me. It makes no sense at all. Like, I would literally drive to his house every single day because I love him. He's been like a father figure to me. He's not just, you hear me saying all these things, you might think I have a poisonous, venomous view about him. I don't. I feel sorry for him. I would literally drive to his house, buy a setup, set his trading room up with my own money, fund him with my own money, and sit down with him and teach him until he knew how to do this on his own. He won't do it. Tell me how to make that make sense. It doesn't. It means he's bent. It's warped him. And I've seen that in other people that have nothing to do with me. Just other traders that just get out there, and it just eats them up like a cancer. Mentally, they just can't do it. They have no discipline. They are the problem. They can't see it no matter how much you show them that they're the problem. And that's, unfortunately, I think that's what most of this industry's failures are stemming from. It's not just the fact that the retail stuff is garbage. How we are to think about ourselves, how we conduct ourselves, how we are to handle adversities, stresses, losing, doing things incorrectly. That is the factors that leads to people not being successful in this industry. And that's why I like a lot of books that are revolving around psychology, substance abuse. I've never drank alcohol, and I don't take pain pills, despite what many people say. I'm pretty straight air. If I take an Advil, I feel that, one Advil. And it's rare that I need to do that at all. I don't take medicines. I should, I guess, in some medical professionals' opinion, maybe some of you as the listeners, because I'm bipolar. But I refuse to take a medicine like that because it would alter my state and my ability to focus. And it would change who I am. I'm not going to do that. So you have to take the good with the bad with me. And sometimes I'm going to not be Mr. Stable, okay? I'm doing my best. I think I'm doing pretty good today. But usually, sometimes I'm not very successful with it, and I go off the rails. But you're getting truth even then. You're just getting it much more passionately delivered. But you don't realize what you're bringing to yourself when you get involved in this. You think it's just the charts, and it's not. It's what's going on in your personal life. It's what you're feeling, your fears, your impatience about the success that you so painfully want to happen real quickly for you. In these candlesticks, they are going to be perfect vehicles for you to manifest impulsiveness. Are going real quickly for you. In these candlesticks, so it's what's going on in your personal life. It's what you're feeling, your fears, your impatience about the success that you. It's what's going on in your personal life. It's what you're feeling, your fears, your impatience about the success that you so painfully want to happen real quickly for you. In these candlesticks, they are going to be perfect vehicles for you to manifest impulsiveness, to manifest impatience, to manifest fear and greed. So the reason why I tell you, and I preach this really hard, that you should not be learning how to trade with a live account. I don't care if anybody tells you, put the smallest amount and trade with a small amount because you can't learn to trade without putting money in it. Wrong. I don't care who you are. I don't care how many people follow you. Period. That is the stupidest advice anybody should ever receive or give anyone else. The only thing you're going to get from that is the development of fear and regret. Oh, I wish I would have done it with real money. 20 bucks. 20 bucks is nothing, okay? Would you go down the highway and just toss out 20 bucks every morning at 9 o'clock? It's not a lot of money, but would you do it? No. That's what you're doing when you trade with a live account without knowing what you're doing. It seems like a silly analogy, but that's what you're doing. You're throwing money away, doing it consistently the same way, not knowing what you're doing. If you're telling me, or going to make the argument, that you're not going to learn how to read what price is going to do without having a measurement applied to the candlestick that you're looking at, you need money to do that? You need money to be able to see if that candle isn't performing like you want it to. What are you looking at then? Because I'm giving you very specific PD arrays, things that you are going to absolutely go in there and study. You look at a measurement applied to the candlestick that you're looking at. You need money to do that? You need money to be able to see if that candle isn't performing like you want it to. What are you looking at then? Because I'm giving you very specific PD arrays, things that you are going to absolutely go in there and study specifically. It's not ambiguous. These are very finite levels. They're very specific. There's a reason for why I'm talking about them. And are they respecting price? Are they gravitating to them? Are they repelling them? You need to have a live account with some kind of risk on this to see that. That makes no sense to me. It makes zero sense. You need to learn how to be indifferent to the result of every trade. Because if you don't lose this fear that you have right now of being wrong, the only way you get over that is by looking at price action when there's no trade on. You're not even pressing a demo. Because in the beginning, men, your pride is going to get bruised real easy. And you're going to have that measuring up factor step in. You know what it's like when your girlfriend talks about their ex. You know exactly what I'm talking about. You start doing that with your trades. And unfortunately, that's the worst thing you can do. Remove any measurement of success or failure by having no trade placed. None. Reading price, interpreting what price is likely to do next, studying it. How do you feel while you're watching price? Do you feel anxious? Do you feel restless? And unfortunately, that's the worst thing you can do. Remove any measurement of success or failure by having no trade placed. None. Reading price, interpreting what price is likely to do next, studying it. How do you feel while you're watching price? Do you feel anxious? Do you feel restless? Do you feel like you're impatiently waiting for something to happen and or bored? Are you bored? Not in the sense that you're bored not learning what you're doing, but you're bored like you'd rather be doing something else instead of learning how to do this. Because that's a real thing too. And if you don't want to be looking at these candlesticks, you're going to fail. Okay, I mean, that's what we do as traders. We look at price action. Whether you're looking at indicators or whether you're looking at just naked charts, you got to submit to that. That's part of this whole business. And you'd be surprised how many students have come to me over the years. They're like, I can't do this. This is I don't have it for me. Okay, that's being responsible. That's you being realistic about it. It's not the fact that these things don't work. It's just the fact that you can't do it. Well done for being responsible. But that's not what's in vogue now. What's in vogue is failure because they don't want to put the work in. They have not done what they were instructed to do. They haven't done it long enough. So therefore, laziness, it doesn't work. No, you don't work. You're not working hard enough. Because there's people around the world, all different walks of life, that are taking this information, the same information, and doing extremely well. That's undeniable. You can't argue it. You can't beat it. You can't defend against it because it's facts. And they're doing trades that I don't put them in. So where did they get the information from? Their own model using what was instructed of them. Taking it and making it theirs. And that's how I teach. You can't do it any other way. Now, if I have a model that says, hey, this is the only way you're going to do it. This, and that's it. Some of you could do that. Some is not my goal. I want all of you to have the same opportunity to be able to make your own unique model with this information. And worrying about, oh, they're going to change the algorithm. Oh, they're going to change things and make it impossible for this and that. Listen, the only way this stuff stops working is when there's no more trading entirely. That's it. As long as there's trading, this is going to continue to work. I've said it many times in the past. I've tweeted it many times in the past. This is not going to stop working. Period. There's going to be an open. There's going to be a high. There's going to be a low. There's going to be a close. There's going to be a gap that forms on Sunday sometimes. There's going to be a gap when it opens back up at 6 o'clock. There's going to be an inefficiency in price delivery. That is what you don't understand because you're an infant in this. You're so new. You have no idea because you haven't done any real research in old price movement. These things have gone on forever. You just have never been brought in front of the chart and looked at it and identified it as such. And that's what I'm telling you. You have to do that. Yes, you got to stop hanging out with your friends and your girlfriends and watching stupid TV programs and movies and wasting time playing video games. Go into these charts and take time studying them. Look at old moves. Break them down. Explain it to yourself like you're teaching someone else. Say, this is what I see in hindsight. I'm going to explain what took place here using the logic that I teach in price action. Now, you see me do it live, minute by minute candles. You do the same thing you see me outlining, but you have the benefit of hindsight. And then after you're done annotating your chart, reasoning with why it did what it did, who was going to fail, who was going to lose money, who did the market move against, why, and how could smart money be an opposing liquidity to that move that would be profitable for them, and how did it hurt retail. You go into your old moves like that. That's how I back test it. That's how I teach my students to back test. It's not pushing a market replay and watching a trade pan out. That's a walk forward test. That's not what I'm saying. Before you even get there, you got to spend time in old price moves, annotate your charts, walk out the whole details of what you see through the benefit of hindsight. And you're going to see these recurring things repeat over and over again. And then you'll be confident when you see me tweeting, note this fair value gap here, and note this buy side. What am I saying when I do that? Did I say buy the fair value gap and take profits at that buy side liquidity? No. But you know damn well, if you've been around for a long time, you're expecting me to do a trade recap later on, or screenshot this and do a victory dance, because it's drawing to where I told you to look for, keying off of that fair value gap. That's not a signal. I'm not going to place you in a trade, but I'm teaching you how to anticipate. I'm building your anticipatory price skills. That's the first step. You have to know where it's going. If you can learn that skill set, I promise you the entry stuff is easy. When I do my trades and I'm building pyramided up positions, I'm literally using every potential trading entry that you could utilize in that fractal at that time. It matters not if you use the very first one I use. Go back and look at my examples on Twitter. Every time I do a trade execution, I don't put it in my private mentorship. I put it out where everybody can see it. Look at what I'm doing. Every one of those is an example of an entry. Which one makes most sense to you? And don't look at it from this perspective of, well, this one would have a smaller stop loss, so that's the one I want. No, which one makes more sense? What are you seeing in that example of me entering the trade, and when I'm building up the positions and I'm pyramiding, adding more to it? Which one of those entry points makes the most sense to you, and why? And that's where you want to start. That's where you start. That's the very point at which, that's the first beginning step to how you work in your entries. But we're not at entries yet. I promise you, we will be pushing the button. I will be pushing a button in this in front of you. I will be doing that. But before I do that, you have to understand, why am I even interested in buying or selling? It has to be going somewhere. It has to go somewhere. It has to be a reason for it to be wanting to go there. There has to be a logic behind it that I've already taught. I can't be making something up as I go along. And these are always the same arguments. He's always got something to do something in any market environment. You're damn right. Because the market doesn't just do one thing. It's not a one-trick pony. I want to be able to trade when I know the market's going to create a high on Tuesday or a low on Tuesday. How about when it makes a high or low on Thursday? How about when it makes a high or low on Thursday on the New York session? I have macros for all that stuff. I have a playbook. Okay? I have a playbook that if I was an NFL coach, they would be breaking in my house to get this. Okay? It's not, it's not literally here, it's in my head. But the point is this. I have a game plan for more than one way to beat the shit out of these markets. I don't want to be stuck with just one approach. I'm not a one-trick pony. And I promised you at the beginning of the year, I was going to show you things that you haven't seen yet, even my private students. Different entry models, different approaches to entering the market, analysis concepts. I got weapons you guys have never seen before. And you don't need them. I've already given you enough. I've already taught you how to trade. But what you need to do is do this. Sit here and watch price. And if I wasn't talking and jawboning to you, you'd probably be bored to death and probably pissed off because I'm jawboning about what I'm talking about. You're not prepared to be here then. If you can't sit here and listen to this, because this is what you're going to have to endure these things. If you're going to be a trader, you're going to eventually have these problems that you're going to contend with. The wrestling matches in your mind, or if you share your results with somebody else, how they make you feel. Who cares what anybody else's opinion about your results are? You shouldn't be sharing with anybody anyway. You think they're going to cheerlead you on? Wow, look at you. You're a goat. If you need that, that's a character flaw. That means you're weak-minded. I don't want people calling me the goat. I don't want anybody cheering me on. No worship, no none of that stuff. I'm not a king. But this industry is going to show you a lot about yourself that, unfortunately, is going to be really uncomfortable for you when you discover you probably aren't as equipped as you thought you were. It doesn't mean you can't trade. It doesn't mean you can't develop into a profitable trade. It just means that you're going to have to fix those problems, those kinks in your armor. They need to be hammered out. And unfortunately for men, that doesn't happen real fast. Which is why you see a lot of people on social media making pseudo wars and competitions and no none of that stuff. I'm not a king. But this industry is going to show you a lot about yourself that, unfortunately, is going to be really uncomfortable for you when you discover you probably aren't as equipped as you thought you were. It doesn't mean you can't trade. It doesn't mean you can't develop into a profitable trade. It just means that you're going to have to fix those problems, those kinks in your armor. They need to be hammered out. And unfortunately for men, that doesn't happen real fast. Which is why you see a lot of people on social media making pseudo wars and competitions, and I'm better than you and you're better than nobody else, and yada this and yada that, because they have a character flaw. And you can't help people like that. They have to wrestle through that themselves. And why would you open that up for yourself? If you know that you're feeling this impulsiveness about wanting to go out and show your results to somebody else on social media, whether it be me or anybody else, ask yourself a question. Why do you want to do that? What are you wanting to get from that? If you're needing encouragement, that means that you're not satisfied with the continuity and consistency and frequency of what you're doing. Because I don't need anybody to tell me this stuff works. I know it does. I share it so that way you can be encouraged by it. I'm a teacher. I'm teaching you. I teach my students to cheerlead themselves when they watch price go to the level that we've outlined beforehand. That's not gloating. That's not bragging. And I'm making a moment emotional for you, so that way you can say, oh, wow, I sat through this. I watched it deliver. Wow, it really did that. And it makes it an anchor point for you mentally, so you remember it, and you'll be more inclined to do what with it? Journal it. This was a great day today. On beforehand. That's not gloating. That's not bragging. And I'm making a moment emotional for you, so that way you can say, oh, wow, I sat through this. I watched it deliver. Wow, it really did that. And it makes it an anchor point for you mentally, so you remember it, and you'll be more inclined to do what with it? Journal it. This was a great day today. I watched this price action move here, blah, 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 blah. And there it is. Now it's in your journal, exactly where it needs to be. And on the weekend, you're going to go back and read it in your own words and say, it was really interesting to watch how this happened today. I'm so happy to see how it unfolds. You're giving yourself a cheerleading session. You need to do that. You don't open up the opportunity for some trolls or pseudo competitors or people that just have no interest in helping anybody else. They just want to detract, discourage. There's no place in that. Well, no place in your trading or in this industry for that. It doesn't make anybody better. It just shines a light on them as a pathetic piece of shit. So why give them the opportunity to do that? You're not going to get what you want, really. You might get a couple people, especially in our community, we'll be like high-fiving, that's wonderful. But really think about it for a second. Why do you need that? Why would any of my students need to do that? The only reason why that would happen is that you haven't seen enough of it for you to be bored by it yet. I have a lot of students that are there now, and that's why there's not a lot of them worrying about whether they believe you or you believe them. They don't care. They're doing it. Do you honestly believe the folks that I'm interviewing that are making the money they're making, do you think they really give a shit whether you believe that they can do it or not? Is it having any impact on what they're going to do tonight, next week, by the end of the year? It has no bearing. They don't care. They have found what they've been looking for. Nobody's detracting them. No one's going to convince them that they didn't do the right thing by sticking with it. And I promise you, they're not in a position where they got to feel like they got to constantly prove anything to anybody. They're living it. They look in the mirror and they say, there's my evidence right there. You're the person that did that yesterday. Wow, you did a great job. But the weak-minded individuals that feel like they have to be reminded, they got to be pinched that it's real. That's normal in the beginning. It's normal for you to feel that way. That you got to feel like someone else can confirm what you're doing. It's real. Like, yeah, you really are trading. Yeah, you really took that money out. It's not a dream. It's happening. That's understandable in the beginning. But if your steady diet is you got to constantly keep going through social media with it, if you're profitable, you don't need to do that. Because your profits are going to tell you everything you need is going to either be you're losing and you're off your model and you're not doing what you're supposed to be doing and you're getting immediate feedback, or you're following your model, you're making money, and who cares what anybody thinks? You're doing it. You don't need anybody at all to co-sign that you're doing it right because you're making money. That's a goal for all of you. You need to get to that point. And there's a goal before that where you get to see where price is likely to go next, and you're bored by it going exactly how you want to see it happen in your charts. I love sharing it with you on Twitter and live. I love it because I know what it felt like for me when I started feeling like I was close to it, and I would get these once in a while beginning moves of consistency and continuity in my analysis. That was sharing. That's a goal for all of you. You need to get to that point. And there's a goal before you, because your profits are going to tell you everything you need is going to either be you're losing and you're off your model and you're not doing what you're supposed to be doing and you're getting immediate feedback, or you're following your model, you're making money, and who cares what anybody thinks? You're doing it. You don't need anybody at all to co-sign that you're doing it right because you're making money. That's a goal for all of you. You need to get to that point. And there's a goal before that where you get to see where price is likely to go next, and you're bored by it going exactly how you want to see it happen in your charts. I love sharing it with you on Twitter and live. I love it because I know what it felt like for me when I started feeling like I was close to it, and I would get these once in a while beginning moves of consistency and continuity in my analysis. That was, I needed to have that sounding board where I could bounce an idea off of somebody and say, look, this is what I've been doing. Do you feel like this is something that I should pursue? But I didn't have that. So I had to do what? Stick to my journals. And most of that in the beginning stages was me failing and learning from them. I didn't look at the failure as a denial. It just meant that I had to spend more time doing it than I thought I was going to have to. And because I'm impulsive, I'm obsessive, and bipolar, I had a real hard time wrestling with that. And it wasn't until I started attacking the mental side of things that are not really trading. It's the shortcomings as a human being, the things that we want. Like, I have a deep-rooted desire to be affirmed by a family member that's passed away. I can't get that. And as much as students that tell me, they're thankful and they're appreciative of, what I do and how much time and effort I put into this. That's great, and I'm thankful for that. But I'm not satisfied. I'm pursuing something that I'm not going to obtain, which is frustrating for me. And that was a real struggling point for me as a developing student. Because I didn't know how to deal with that. I allowed it to take me off the rails in my trading. I allowed it to blow my accounts because I would just say, okay, I'm just going to go in there and risk it all because I'm at a point where it needs to be a win so big and astronomical and unrealistic, or I'm willing to lose the entire account just to be out of it right now. And each time I did that, what I was asking for was trader suicide, like suicide by cop. You couldn't do it to yourself, so you go out there and run in front of a cop and have them draw down on you. That's what happens. And you might listen to that and think to yourself, wow, that sounds morbid, or some of you probably be laughing about it, thinking, that makes sense to me. But that's essentially what's occurring when people blow their accounts. It's like that numbness that a gambler gets when they're in a casino, where they're just throwing down bets and they just want it to end. They don't have the discipline to get up and walk away when they know they should. So they want the game to remove them because they don't have the discipline to get up and walk away and stop. I didn't have the discipline when I was new to turn the charts off and walk away. I was afraid I was going to miss the move because I lost 3-4 times already. The next one's really going to happen now, and if I leave, it won't be able to get me back to break even and make more money. So because I didn't know how to submit to that or understand what I'm teaching here. Look, what's the market doing right now? Is it going up or down? It's consolidating. Isn't that what we outlined this morning? Sideways. When does the market consolidate? ICT has taught you. ICT has walked you through it. It's right here. Do you want to trade in this environment? I don't. I don't. But there are some of you that may see this and say, oh, there's a setup here. There's a setup here. There. When I show the chart like this is how I have my charts like this. I'll come back to that psychological thing in a second. But if you're a scalper and you have your charts like this, suddenly the outlook's more impactful. Like, yeah, this is a move. Look at this move right here. I'm not chasing moves like that. I can trade all these little minor fluctuations, but to me, it's not worth it. It's too much babysitting a stop for such a small, insignificant minor move. In a condition I already know it's likely to do what we're seeing here, and I've kind of like presented that to you before we got to where we are here now. But the point at which when a trader gets to where they throw all logic right out the window and they submit themselves to their emotions or the whims of their psychological weaknesses. Here's what's going to happen if you trade with live money before you know how to trade. Okay, and I promise this is going to happen to you. Nobody will be exempt from this. Or if you have a vendetta that you want to prove something in the public and you really don't know how to trade, and you don't have any discipline, and you don't have any risk management, you're going to do impulsive things. You're going to have max loss days. You're going to throw away a good winning day trying to be better than you need to be. Make a little bit of money here, make a little bit of money there. You're not satisfied with that because you want to prove something to the world, and then you lose it. That doesn't show superiority. That puts a bullet point right on what everybody else watching you sees. You're not really all together. You're not as professional as you pretend to be. You're not a good trader. You're reckless. You gamble, and you have no self-discipline. If you're in that condition, you blow your accounts because you're trying to have a experience that's outside of trading and profiting. You want to have an Olympic event. You want to make something like it's a movie. Like you've made yourself the main character in a movie that's not really going on, but you're sitting in front of your charts, and you have this mindset that when it goes up here, the crowd's going to cheer because I'm the underdog, and the villain that I'm up against is going to fall by my hand. It's silly, I know, but think about it. Some of you men, that's exactly what the hell you're doing. You're looking at these charts manifesting some kind of B-movie plot. And that's the reason why I presented a lot of things I did on Baby Pits, because I knew my audience was men, predominantly. And that's true, ladies. That's the way it was on Baby Pits. I had a few ladies in the collection of people that were following me over there that I knew about, but predominantly they were mostly men. And I did everything male. Sniper this, military that, because that was my hook. It got you looking at something. Oh, and then because I'm showing you something, and it had the music, and it had the sniper theme things, and that would make the males do what? Pay attention. And anybody over on Baby Pips that was trying to draw a crowd for themselves hated me because I was effective in drawing a crowd. And someone would literally go on the social media forum of Baby Pips and cry like kids. I don't know why nobody's paying any attention to me. That's a character flaw. And when you trade with live money without knowing what to do, when you're not conditioned, where you're bored at reading price action, you know what it's going to do. And it sounds It sounds ludicrous to people that come in this industry and they buy the bullshit that's in these books and says, nobody can time the market. Nobody knows where the market's going to go. I fucking know where these markets are going to go. I'm proving it every single day. I know when it's not likely to do something, so I'm not going to do anything. How much more of a testimony do you need when I'm doing every day? That's not arrogance. That's just reminding you that that's logic, that's fake. They want you to believe that you can't do this. They want you to believe that it's random. They want you to have their faith in all these indicators and these bullshit approaches to reading things in price that have no bearing on why price goes up or down. But if you go in and you're trading with live money and you have not been conditioned to anticipate where price is going to go, why it should go there, and you have not seen months of being effectively accurate, not once in a while getting it right, okay, let me go in here and start doing a funded account challenge. No. You have to know exactly what you're looking for most times. What does that mean? 70% or more. If you can't be 70% accurate, you have no fucking business trading with live money. And that's just the truth. I don't care what anybody tells you other than that. That's exactly how it should be. Because if you can't see what the market's going to do 70% of the time, you don't know what you're doing. And 70% seems extremely high, but it's really not. If you factored out all the times where you fell victim to trading in environments like this, if you took all those trades out, go back and look at all the bullshit you've been doing in your trading. How you lost your money, how you blew your accounts, it's environments like this. So if you listen to good old ICT and understand that this is how we stay out, we don't trade in these environments. How better would you have done if you take those big losing or blowout days or account blowers, take that out of your trading? You'd still be in the game. Again, nobody's writing books about it because they don't want people feeling bad about themselves. They want them to buy books and get excited and hopped up on goofballs that they're going to get rich. I don't present things like that. I don't do it like that. And that's why people don't like listening to these rants. They don't like listening to this stuff. Oh, he goes on and on and on. Teach ICT the better way. Give me 2 sentences, and then that's the better way. And you're still going to lose your fucking money. And you're going to wish you had these points in your understanding. So you're in a hurry. You're making perfect excuses for getting out there before you're ready. You teach ICT better. It's so right to the point. Yeah, get to the point of losing your money. There's a lot of people out there trying to teach what I do, but they're not equipped. You just know part of it. And the folks that have tried that with other people, smart money concepts through this guy, that gal, this organization, this multi-level company, and they wreck themselves. Then they find me and like, oh, something's different. Now I'm making money. Now I can find it and it's making perfect sense now. Well, what's different? What's different? The person that created it all is talking about it, teaching you what matters most and what to do, what not to do. But when you got there with a live account and you know what you're doing, this weird experience comes over you where you get to the point where you know subconsciously that you're not equipped to be doing what you're doing, but you don't have the discipline to stop. So you start pressing the button and you just want some kind of miracle to happen, some reason to inspire you to keep going back to the studying part of it because you don't want to. You don't want to do that. It's hard work. It's boring. All these people are getting withdrawals from their funded accounts. All these people are winning competitions. All these people are showing their profits. They're buying this and they're showing that. I want to do that. That's trading. No, that's people living on social media. Are you trying to be a trader on social media? Or are you trying to make money? Are you looking for your equity curve on social media to go up more than the equity in your account? And I'm telling you that hits it right on the head right there. So many people want to be viewed as a baller on social media than doing it just for real in their own accounts and being satisfied with that.
Yeah. That I remember. I think this is the lecture that made me not. I think this is the lecture that made me go away from trading live funds. Or like trading at all. And like stop posting. Like temporary on Instagram. It's March 15th.
You're on social media. Are you trying to make money? All these people are getting withdrawals from their funded accounts. All these people are winning competitions. All these people are showing their profits. They're buying this and they're showing that. I want to do that. That's trading. No, that's people living on social media. Are you trying to be a trader on social media? Or are you trying to make money? Are you looking for your equity curve on social media to go up more than the equity in your account? And I'm telling you, that hits it right on the head, right there. So many people
Put him in the coffin.
want to be viewed as a baller on social media than doing it just for real in their own account and being satisfied with that. That's how you know if someone's really making money. Because if they got to constantly reward themselves in front of everyone else and show the world what they're doing, that's all they have. How frequently are they doing it? Not much. And that's what keeps them motivated, because they don't like what they're doing, because their successful results are not consistent. And they'll go into a live account, and those individuals that rush in here to try to trade with real money before they know how to read price, they'll have that gambler's numbness come over them. And it's a real thing, folks. You get in this mindset where, hey, I don't want to stop trading because I don't have the discipline. And I'm going to keep pushing the button until it takes me out. In fact, there's been several times when I was younger, I literally screamed at my chart. Screamed at it. F you. Take all of it. I'm not stopping. I don't care. You're taking all of it before I stop. Now, does that sound like someone that's balanced and should be risking their money? Absolutely not. But I guarantee you, some of you probably won't have the courage to say so, but you've done that. You literally cussed at the market. You personified it like it picked your pocket. And you dared it to take the rest of it. And it did. And then you were mad about it. I can't believe I lost my account. They did it to me. No, you knew that was going to happen. And you knew you should have stopped trading. You should have turned the charts off and walked away. But gambler's numbness came over after you, and that's just the way it is. That's what happens. Because internally, what's going on is you're wrestling with, okay, I have a losing trade here. I don't feel motivated. So I don't want to go back to the charts. I don't want to study. I don't want to backtest. I don't want to look at what I've done wrong because it's too painful. Well, guess what, Dorothy? That's what it's like in Oz. Okay? You're going to have those problems that you have to deal with. You have to go back and look at your journal. What did you do wrong? Okay, that wasn't that fun. But what did you do right? You focus there. You focus there. Because you have to be your own cheerleader. ICT is not going to be there. I'm not going to be, I don't know when you are doing those losing trades. I don't know when you're in there over leveraging and trying to make something happen because you want to get on a leaderboard. You want to make a big withdrawal, 5-figure withdrawals. I want to be able to prove that this stuff works. I'm not expecting you to prove it. I didn't ask you to do that. But all of you are having these vigilante type B-movie plots that you want to come out here and prove that you are a warrior. You're the main character in a Steven Seagal movie. I know, I used to do stupid shit like that when I was 20 years old. Music playing in the background. Yeah, man. I got nobody to share it with because we don't have the social media back in the 90s like you all have. It was just me fantasizing, like, yeah, here it is, I'm going to win. There it is, the music's going to be playing, and boom, hit the credits. There it is. The audience is going to love it. Who's the audience? Me. Me. I couldn't even talk to my uncle about it. I told you a story. So who did I have? No one. Not one person. So I understand if I would have had that, like you all have social media today, you'd be out there sharing everything. I'd be out there sharing it too. If it was available to me back then, I would have done it. And it probably would have been more detrimental to my development than not having had it. That's why I'm telling you, don't do it. I know my own character flaws. I know the imbalances I have chemically that I can't do anything about because I won't take a medicine for it. I don't think it's medicine. It's a drug, and I don't take drugs. So the drug I like is winning. I like getting high on winning, and you can see I love it because I share it every day on my Twitter and when I'm doing the live streams. I love it. I love it. It's contagious too. That's why my students talk like me. That's why my students trade like me, because they love fucking winning. It feels good. And when you do it and you see other people do it, you want to be a part of that. Call that a cult? I don't care. I call it a circus. It's fun. It's carnival. Everybody gets to do what they want to do. No one's forced them into it. And they all have fun while they're learning. And you have to motivate yourself that way. You have to. You can't let gamblers numbness go over top of you. When that happens, when you feel like you just want them to end it for you, you have to dig deep and say, that's it. I'm down big for the day, but I'm not out. I'm turning off the computers. I'm turning off the charts. Even if you got to go tweet to me and say, ICT, I got it. I'm feeling it. I'm in drawdown. I'm done. I turned the charts off. I'm going to do something else. I'll see you in a couple days. What did you just do? You made yourself accountable. You've done the best thing you could do, which is identify where you're at. This is how you prevent yourself from blowing the account. I'm telling you, every single person that's blown their accounts, and there ain't one of you out there that's traded with real money that haven't blown an account. You have. If you say you haven't, you're a fucking liar. Okay? I've dusted shit, probably 10 or 11 accounts. I've done that. And guess what that means? I had a lot of learning to do. I had a lot of learning. I had to come up through harder times than you. And you have all these advantages. And you have somebody talking to you that has been there and done it. And it's irritating when I see these young people bitch about how, oh, he just talks and talks and talks. You're a moron. Seriously, you're a moron if you don't want to hear how to prevent yourself from failing. You're a person that's acting like you know everything. And you want to cherry pick what information you want to get when you have no idea the benefit of having had it, because you don't trade with real money. And when you start trading with real money, all these things are going to be real important to you then. And I hate when I see students that had that mindset, came to me, didn't want to listen to the dry, boring shit, where the real learning is, they lose, they hurt themselves, and then they go back and listen to the stuff, and they're like, what I fell victim to, you taught in this lecture. If I just would have did that, this wouldn't have happened to me. Exactly why I said it. I don't like hearing that you didn't listen to good advice. I don't like hearing that. Because I feel like I missed the mark when I know I didn't miss the mark. All of my lectures are all predominantly psychological and risk management. Unless I'm pointing to the chart, I'm nonstop telling you exactly how you are going to survive or do yourself in. I'm not afraid to say these things and not be popular. I don't care. I don't care. I've been out here teaching with a demo in paper trading the entire time, and yet people still find themselves profitable, still find themselves able to read the price action. I've never cared about anybody's opinion on how I do it. How I do it works. You have to align yourself with what I'm doing, how I'm teaching it, and if you can't, good luck to you. I promise you, you'll do something else, and then you'll come back here, and then you'll discover if you just would have listened, you could have avoided all that pain. You could have avoided all that time wasted. Let me ask you something. Let's say, for instance, that Michael Huddleston, the guy talking to you right now, let's just say that I had a PhD, okay, piled higher and deeper. And say, just for instance, that I was a big wig at some bullshit investment bank, okay? And say that I had a speaking circuit where I went around and I talked to Fortune 500 companies and brokerage firms and all that bullshit. Okay, say I did all that stuff, and I talked to you about these types of things. You know what you would do? You'd be all ears. You'd be writing down all that bullshit. Why? Perception. And that's why you chase all these social media people. Image. You fall victim to that. I'm giving you the real work. I'm telling you what the market's going to do.
Damn.
A speaking circuit where I went around and I talked to Fortune 500 companies and brokerage firms and all that bullshit. Okay, say I did all that stuff, and I talked to you about these types of things. You know what you would do? You'd be all ears. You'd be writing down all that bullshit. Why? Perception.
That's what social media is. Perception. You don't even know who I am. I don't even know who you are. Is my screen off here a little bit? I feel like it is.
And that's why you chase all these social media people. Image. You fall victim to that. I'm giving you the real work. I'm telling you what the market's going to do, why it's going to do it, how to avoid hurting yourself with it. That's the real thing. Goldman Sachs ain't conditioning their students and traders to do that shit. You're learning from the trenches over real price action live that there really is a technical science. Give me a second here to take a look at the other markets here. I talked and let my monitors go to sleep. All right, so dollar index has swept its 104.92. That was sell side on a 1 minute chart. Let me pull up a Dixie chart real quick. So we've taken sell side here. Small little imbalance here with buy side. So we'll see if it wants to draw up here. That'll be a little bit more weakness on ES if it does that. If it fails to do anything like that or goes up there and then rejects, that right there, that sell side right there looks really good. But how are you going to see it go above this figure that you got, which I'm not going to draw that in time. If it goes above that, comes back down to access support, we will be looking for a higher run on dollar and weakness on indices. So let's go back over to ES. We'll stay in the 1 minute chart. Got this running here for a second. Hold on. Okay, so that's what we're looking at. These lines here. I was trying to figure out where those blue lines come from. I don't know what I'm putting in here, but it's based on the 5 minute chart we've been jawboning about. Got this running here for a second. Hold on. Okay, so that's what we're looking at. These lines here. I was trying to figure out where those blue lines come from. I don't know what I'm putting in here, but it's based on the 5 minute chart we've been jawboning about. So that wick here, I'm going to take that off. That consequent encouragement. Order block, I'm taking that off. Mean threshold, I'm going to keep that here because we're in close proximity to it, but I'm going to add consequent encouragement to this wick right here. I don't know how many people are listening. Like, I don't want to look at how many people are listening to me when I'm live. I don't do that when I'm doing like Twitter Spaces either, because I like to pretend I'm doing just the recordings where I can just talk freely and not feel intimidated, because I am very intimidated by having a large audience. I might sound like I'm real extroverted, but I'm an introvert. But I'm certain that I lost a lot of viewers this morning with the conversation I had, and that's good. That means I'm filtering out the ones that shouldn't be here. All right, so I'm going to take this line here, make it blue, and when we drop down to the 1 minute chart, you'll see it and know what it is. All right, and then we'll add one little line here for south side on this low. I'll make that dotted, so that way we can differentiate what it is. We have a city here, south side and bounce by some efficiency, and we'll see if it wants to work in here and here. We've tried multiple times to get beyond that fair value gap, and we've not been successful in doing that yet. Dollar index is pulling back down into it. Dollar index has a volume imbalance. I don't want to change the chart.
No shot.
There's a volume imbalance on the 1 minute chart using the 1217, 1218 1 minute chart on DXY. So have that on your chart annotated. It might drop down into that. I'd want to see its support there. To get beyond that fair value gap, and we've not been successful in doing that yet. Dollar index is pulling back down into it. Dollar index has a volume imbalance. I don't want to change the charts, but you can do it on your own. There's a volume imbalance on the 1 minute chart using the 1217, 1218 1 minute chart on DXY. So have that on your chart annotated. It might drop down into that. I'd want to see its support there. So south side here, and then you have consequent correction of this wick, which you're down into there with this city. So we'll drop down to a 1 minute chart, and we'll just finish out our session with this time frame.
First got depressed.
Side. It's also, we have one over here as well. Digging below that will get us into the levels we just mentioned on the 5 minute chart. I'm looking at Twitter for your feedback when I asked this. The discussion on how to interpret and forecast consolidation days or consolidation sessions. I understand that I probably haven't scratched every itch today, because I've talked about a lot of things that probably aren't comfortable or maybe viewed as boring. But at least, did you garner at least that insight on how we can anticipate and forecast consolidation days? Was that clear, at least in that regard, on today's live session? I'm looking at Twitter for your response, by the way. 5 handles. Okay, so think about that right there. That's already 5 handles. And it hasn't even taken the sell side below that low yet. So we had a 5 minute city that it traded up into. We'll go back to the 5 minute. All of this here. So we traded up into that, rejecting, going to the sell side. So what did it do? It went up into an inefficiency, reaching down into a low. What's below that low? Sell side liquidity. So why would it want to go up here? When the algorithm goes up like this, it's going into this inefficiency. Why would that be useful? Smart money can go short in here. So if they're short inside of the inefficiency, it's not the same as like this high here. That's buy stops being taken when it ran up into that fair value gap again. When it went up into inefficiency, what it's doing is it's allowing traders to have the view or the perception of how I'm teaching you to use that as a means of being short, because it reprices back to an inefficiency in price. So going short there, where's an ideal exit point using the market efficiency paradigm? In other words, who's getting hurt? Who can we use to facilitate a profitable exit or entry? That's the market efficiency paradigm. You know how smart money cannibalizes everyone else out there. Well, getting short here and targeting that low. That low is a target or draw on liquidity, and being short here on that city, that would be a catalyst for getting short. So inefficiency to liquidity. Dollar's really fallen off. So I'm watching to see if we just poke below that low and then dig up higher into this inefficiency there. Down into the 1 minute chart and was wicking up in here. between that and just getting to that low, that's 5 handles. If you start looking for those types of moves in the beginning, first of all, you're going to see there's a lot of opportunities to find 5 handles using the ES. But trusting that you can find them consistently, that takes time. It won't take you much time to get to that point, but you have to keep showing up every day and looking at old moves and studying how it's delivered. And when this gets to a point where, how do you know? This is one of the questions I'm going to start asking, and I wish I would have asked the 2 students that I've already done interviews with. How did they know? At what point did they get to where they felt they were ready to trade with real money? And unfortunately, it didn't dawn on me until just now. You would think that's a really good question. I didn't ask it. I guess in a way I was kind of asking, but I wanted to be more specific. Like I want to be very clear about how, when I send the outline to them, like in the email, I have a lot of people that already email me, and I'm answering them in order of time, so no one's going to jump ahead. So I'm just saying, hey, I got an email sent to you. Did you see it? I just haven't got to you yet. Okay, so one of the questions I'm going to add is, like, what did they feel about themselves? What was the convincing thing for them that led them to the decision of trading for real money or going with a funded account? Because I don't ever teach that. There's no lecture where it says, if you do this, this is how you know. You just know, and you make the decision on your own. So I'd like to know that from everyone that I interview going forward. Like, what was that deciding factor? Because I'm sure most of you would probably love to know what that is too, and not knowing what it would be for you yet. I mean, obviously, if I know what I'm looking for, but what does that really mean for everybody else? Like, what does it feel like? What is it? How do you articulate that? I'm interested in knowing what that is for everyone else. Maybe you don't have an interest in that, but I think it's important. Lots of layers in here. If it would have ran through this low, like when it was right on here, so far it looks like it's the same. Low comes at 75 even. On this candle here, it's 75 even, so we match that low. If we were able to go through that, and looking at what the dollar's doing right now, I feel confident to say we're going to go up above the fair value gap. But we didn't do that, so I'm going to hold that in my pocket. But that's what I would have expected. Like if we went through here and it had what we show on the dollar now, I would be telling you we're going to go up here next. But I don't have that here because we didn't take that liquidity out. So that's something else you want to add to your journal. Like, some of the questions I get, they'll ask, like, how do you avoid taking something? Like, what keeps you from taking a trade, or what would cause you to not really see or trust? I guess the better word would be used that way. Like, what would prevent me from expecting this buy side to be taken with dollar going down? What would prevent that? The fact that we didn't go below to take the sell stops here. I would prefer, even if we went to take below that and then did what we see here, then I would look at the city here and treat it as support to send us up in here. But I don't have that here, so I would be waiting for either that to occur or sit on my hands and do nothing and expect just the consolidation to continue. And again, that's something that books aren't being written about. It's not a popular subject matter. No one's making YouTube videos about those types of things. But that's the stuff I want to incorporate, because that's over 30 years. Those are things that I had to wrestle with. A lot of the questions that you ask, they're all questions that I had of myself, my own development. And you don't realize the importance of certain questions that are being asked because you haven't got that far yet in your journey. When you get there, and if you've never heard it or if it's not available to you, believe me, you're going to ache wishing someone would share how to deal with it. And I'm just that kind of guy. And you get it up front, even though you're kicking and screaming about it most of the times. But it's going on 12:40. So I'll hang with you for another 11 minutes or so. I'm going to kill it because I'm fasted and I need to eat something. So I think we've had a pretty good overall live session. I know it's not the kind of live session you want, but trust me, we will have the kind of live sessions that you're wanting to see, where it's energetic and price moves and it's like gangbusters. Hang on here, let me see something. Let's go to a 15-minute chart. Let me see this. See what we've done there? Price delivered to the downside, opened on this candle, traded up, bear shorter block, traded down, next candle here only up this far, left a fair value gap. So the market has moved from this low here up into that fair value gap. So now we're going to watch. It's in lunch hour. So because we're consolidating, we've tried multiple times to work up here to take that buy side out. We haven't been successful in doing so. And usually lunch, we go into seeking liquidity that has not been tapped into. We've only done one raid on sell side down here. We've had one buy side taken here, and we had buy side taken here. And we're in consolidation. We've left this low, didn't take that out, and we repriced up into this inefficiency here. Left a little tiny little mohawk here. Now I'm thinking, let's watch and see if it wants to deliver down into this low, and maybe into the constant quotient this wick, and maybe reach for the sell side, and that would be a lunch macro. And the reason why I just outlined why I would favor that versus going to the buy side is because we've already worked up here. Watch one buy side taken here, and we had buy side taken here. Buy side out, we haven't been successful in doing so. And usually lunch, we go into seeking liquidity that has not been tapped into. We've only done one raid on sell side down here. We've had one buy side taken here, and we had buy side taken here. And we're in consolidation. We've left this low, didn't take that out, and we repriced up into this inefficiency here. Left a little tiny little mohawk here. Now I'm thinking, let's watch and see if it wants to deliver down into this low, and maybe into the constant quotient this wick, and maybe reach for the sell side, and that would be a lunch macro. And the reason why I just outlined why I would favor that versus going to the buy side, because we've already worked up here multiple times, and we only had one sell side taken here. We didn't even do it on this low. So they punished the shorts by coming back on them multiple times on the buy side. So the only people that haven't been messed around with today is anyone that's long that went down here and bought the sell side or bought in here and here. Their stop loss is in here, or maybe they trade up just below here and they feel like they've dodged the bull or something to that effect. And we're gonna watch it and see if I can get it in the next couple minutes. Drop into 5 minutes. Now you can see how that fair value gap on the 15-minute chart doesn't look so clear, does it? Well, you always work from your higher time frame down, and you transpose those higher time frame inefficiencies into your lower time frames, and it clears up a lot of the things that doesn't look so clear to you in the charts that are lower time frame. They say that they're noisy. They're not noisy. It's the same price. Price is still doing everything it's doing in the 50-minute time frame. You're just recording its fluctuations on a smaller time frame interval. So far, dollars reaching a little bit higher here. I'd like to see it get above 105. If it does that, we should have no problem getting into that 38.74s. 50-year-old bones cracking. So I'm going to do a poll. If you were looking at this day here, and you've probably been watching price action throughout the morning, maybe you've been watching here and trying to fade me or going along with the ideas that I've outlined. Either way, it doesn't make a difference. Knowing with the benefit of hindsight right now, would you say that this is a day that you would have felt good about participating in, or would this be one of those days you had regretted being a part of? Even if you were right about certain things, would this be a day that you would have been better suited to be doing something outside of trading? And I'm asking that on Twitter, so you can reply to me there. Just send it to me directly. I'm scrolling through looking now. Jan Zasso, I don't know what you mean by that. You have a real long question. And I'm not trying to do this as a main thinker because I don't like to usually look at Twitter while I'm doing this, but I'm going to write it down, so I don't mind doing it right now. But you posted you would really appreciate teaching on where the next weekly CS likely going to expand. I don't know what CS means, so I don't know what that means. I'm trying to think. I don't have anything that could abbreviate a CS word I can think off the top of my head. You got to rant all morning, FBG. Dollar index on your hourly chart. You want to take a look at the 8 o'clock from Friday, 8 o'clock in the morning. Your time should be always New York local time, by the way. 8 o'clock in the morning, that candle is a city. It's a fair value gap. We trade up into that. I'm just hanging around in it right now. And there's a lot of buy sides sitting at 105.34 on the dollar. So I'm watching to see how we behave here. On dollar, we just dropped down into a 1 minute bullish order block and fair value gap. So we'll see if it wants to rip higher and send us down into consequent encouragement of ES. Very good. I'm seeing some of your responses. This is a day that you'd rather be doing something else, like golf. I can't stand golf. I understand why people would play that, but if the weather's nice, I can see how that'd be cool. Hang out with your buddies. I just can't imagine beating a small dented ball around on beautiful grass. It doesn't make any sense to me. It would be better to do something like that than be trading a day like this. And yes, it's wonderful to see students at least appreciate that. If you know when you're going to anticipate a day like this, and I think we've effectively done that today, outlining why it should be like this, it's better for you to feel comfortable. Not, I mean, like if you go out and you do something else, you're with your spouse, you're with your significant other, you're doing something with your kids. I can be honest and tell you, there's many times I didn't understand this, but I felt every day was going to be a big mover. And when I said to my children, or if I said to my wife, look, I'm taking the day off tomorrow, I'm not going to do anything with the charts, I'm not going to trade, I'm leaving my phone home, nothing. It's all you. And I was miserable doing whatever I was doing with them. And it sounds horrible, but it's because I didn't know what I'm teaching you today. So this way, when you are doing things apart from the marketplace with your family, or if you're doing something else, another hobby or something, you won't. Seeing some of your responses. This is a day that you'd rather be doing something else, like golf. I can't stand golf. I understand why people would play that, but if the weather's nice, I can see how that'd be cool. Hang out with your buddies. I just can't imagine beating a small dented ball around on beautiful grass. It doesn't make any sense to me. It would be better to do something like that than be trading a day like this. And yes, it's wonderful to see students at least appreciate that. If you know when you're going to anticipate a day like this, and I think we've effectively done that today, outlining why it should be like this, it's better for you to feel comfortable. Not, I mean, like if you go out and you do something else, you're with your spouse, you're with your significant other, you're doing something with your kids. I can be honest and tell you, there's many times I didn't understand this, but I felt every day was going to be a big mover. And when I said to my children, or if I said to my wife, look, I'm taking the day off tomorrow, I'm not going to do anything with the charts, I'm not going to trade, I'm leaving my phone home, nothing. It's all you. And I was miserable doing whatever I was doing with them. And it sounds horrible, but it's because I didn't know what I'm teaching you today. So this way, when you are doing things apart from the marketplace with your family, or if you're doing something else, another hobby or something, you won't feel guilty or miss it, or feel like you're going to come back and regret having taken a personal time away from the marketplace. It'll give you freedom to just trust it. Who cares what it's going to do? It's probably going to be a really lackadaisical day, lackluster, doing nothing, and it allows you to have the confidence to say, I can step away from this. It's not going to hurt me. It's not going to be a big move. I won't miss anything. And that's one of the benefits of knowing this, because it helps you conquer FOMO, fear of missing out. And you can't appreciate that for those of you that try to avoid these lessons or these boring, drawn-out lectures. You have to be sitting here, watching the price action, and then listening to what I said about it, and thinking to yourself, oh, this makes perfect sense. But only the people that sit here and listen to it and see it happen like this can appreciate it. So then we go forward, when I say we're likely to consolidate, you know right away, oh, that's one of those days where I can go do something else. And you won't feel guilty about it. You won't fear missing anything, and your attention elsewhere won't be divided. You won't be wondering, man, I wonder what whatever I'm usually trading is doing right now. That was a haunting thing for me. Like I think, especially because I'm obsessively compulsive, it would make me short-fused, and sometimes I would snap at my wife or my kids when they were just asking me to do something, and I'm thinking about, man, I bet you're doing this or that right now. And they would break my attention from worrying about something I can't even see because I don't have anything in front of me to look at. That's how obsessive I am. And some of you might have that. You have it or you don't. But the way you beat that and the way you cope with it is knowing when these market environments are like this. So that way you don't feel any of that impulsiveness about feeling, I have to be a part of it, I gotta be plugged in, I gotta check my phone, I gotta keep my phone with me. No, plug into your family, because that's one of the biggest regrets I have. I lost a lot of time with them doing stupid shit, worrying about these candlesticks, when many times it was just like this. And there were days where I thought, because in my ignorance, I thought I had something else forming. I wasted time. Sporting events that my kids were doing, that I should have been there cheering on as their dad, I'm looking at days like this. thinking, oh, it's going to be a big move. I'm going to be so profitable, and I'm going to show them. They're going to be thinking, wow, at least you make a lot of money. You didn't come to my game and watch me, Dad, but here, look at this. You made money today. Good for you. That was how I was rationalizing. That's not even the right way of looking at it. So you can be extremely misguided, even if you are successful in this. So you have to make sure that the family's first. And that's why you should be going anyway, right? You want your family to benefit from it, but are you really benefiting from it if you're miserable when you're not doing it? At least by having a skill set like this and knowing when it's likely to be choppy, listless, not doing too much.
Dude, like, these are the type of things I didn't pick up, like, the first time watching it. In my...
So you can be extremely misguided, even if you are successful in this. So you have to make sure that the family's first. And that's why you should be doing it anyway, right? You want your family to benefit from it, but are you really benefiting from it if you're miserable when you're not doing it? At least by having a skill set like this and knowing when it's likely to be choppy, listless, not doing too much, you won't feel all the problems that usually come with when you be trading all the time. Well, as much as I love talking, we are 1 minute past, or almost 2 minutes past the time I said I was staying with you. So I'll walk you through as much as I could for today. It's doing pretty much what we outlined. It was sitting sideways. Hasn't done much in terms of movement that would be terribly exciting, but we did see some fluctuations. I would be more interested, and this is for your own study, I would be more interested in the 2 o'clock to 4 o'clock. I think you might see something then. Why? Because the market's been going sideways here. Most people are going to be bored by it and do what? Go to the golf range. Go whatever. whatever they do outside of trading, I don't know. But in the last hour or so, maybe the last 90 minutes, we'll probably see something that is much favorable in terms of price delivery than what we've seen thus far for today. So I'm going to count you to go take a look at that later on today. Get yourself something to eat, stretch out, walk around, get some exercise, and then around 2 o'clock or 2:30 going into the 4 o'clock hour, study ES and see what you find in your price action study. Any observations, send it to me on Twitter. I'd love to see it, but that's going to be it for today. I'm going to take a quick look at tomorrow's economic calendar. I don't recall off the top of my head what there is or isn't on tomorrow. Bear with me 1 second. All right, we have unemployment claims tomorrow and Philly Fed manufacturing index. So there might be a little bit of a flurry tomorrow morning. I think what I'll do tomorrow is I'll start streaming at around 8:15, and we'll watch the delivery of the unemployment claims, and we'll carry that into like maybe 9:45, 10 o'clock, and that'll be my second live stream for the week, and that'll be it for this week. And I think that'll be it. Okay, so enjoy the rest of your day, the rest of your evening. Make sure that you have taken some notes, because I've really shared some things in my opinion, in my experience going through all this stuff for as long as I have. What I shared isn't in books, and I wish it would have been taught to me, and at least given me a different perspective that you really won't have unless it's being explained to you on how to just let go, let the market have these kind of days when you're not a part of it. It's okay. You're not missing anything. These types of days can be missed, and it's okay. Your career will be fine. The importance of knowing how they form, when they form, is when the conditions that create these types of environments or trading days, when you don't have that, then you have the likelihood of a low resistance liquidity run. You don't have that in this condition here. So it's important to know and it's okay. Your career will be fine. The importance of knowing how they form, when they form, is when the conditions that create these types of environments or trading days, when you don't have that, then you have the likelihood of a low resistance liquidity run. You don't have that in this condition here. So it's important to know what it is like for it to be next to impossible for a low resistance liquidity run to exist. So it's important that you take that away from today, and that way when we go forward into our future live sessions, when it's not bringing these types of conditions, you'll see that we can call pretty much every minute ebb and flow of what's likely to occur in this market or any other market. So with that, have a good day, take care, and don't forget to share your observations, even if it's later on in the day or tonight. Show me what you see in the last 2 hours to 90 minutes of today's trading session. And so I'll talk to you next time. Be safe.
Wow. Just got like a whole boot camp series done.
Guys, give me a heads up on Twitter. Well, good morning, folks. Good morning.
It's gonna be a good live stream. Going to annotate, and then I gotta do notes. One, 2, 3, 4, 5, 6. around like 6 pages of notes. So like, I'm saying like, the front of the page is 1, and then the back of the page is 2. It's like 3 front and back pages. Wow. The more you know. The more you know. Okay. We can throw on some background noise here. A little bit of background noise, eh?
One way. That is not, well, it could be either way. Bullshit. I know exactly what I'm looking for, and I'm communicating effectively for those that are fucking able to read and comprehend what I'm saying. If you're pushing buttons, taking trades, you're gonna look at, oh, well, he said this, and I got confused. You can be fucking confused. You're impulsive, and you want to push a button and trade. Because you think you're hearing signals. You think you're hearing a little nudge behind your teeth. You're gonna do that. No, don't do that. Don't do that. You're gonna fall victim to impulsive, pushing the button type responses like everybody else does. That's not market wizardry. That's not knowing exactly what the fuck you're doing. It has nothing, it's nowhere near that. You're emotionally gambling. You're looking for something that makes you feel better about what you're doing. Whereas a trader, when we go in and we speculate, we don't care how the outcome is going to make us look to other people because we're not trying to share our results with other people. So guess what that means? Image has nothing to do with it. But you're trading for social media equity curve. Like everybody out there trying to be an influencer. I'm an influencer that can't wait to stop influencing. Like I can't wait to be done. I can't wait. Then I'm going to see me step back in. Everything they've ever said about me, I've proven is bullshit. Making millions of dollars teaching, I'll stop. At my height. There ain't nobody saying I can't do my shit right now. I can do that motherfucker if I want to. I don't want to. I don't want to. And you should be thankful that I don't want to. I'm not building a brand where I can do affiliate with these 100 accounts. Fuck these 100 accounts. I don't give a fuck. I don't have no interest. If my son wants to do it, I would never have brought it up. But he wants to do it. Okay, great. I'm not gonna have no affiliate link getting some kind of fucking money off of it. Fuck all that bullshit. No signal services, no mentorship, in my group, bullshit, none of that stuff. I'm pouring everything into you this year. All you have to do is show up every day. You'll see receipts. You'll see proof that it works. I'll call it beforehand. It'll be fucking clear as fucking day by the end of this year. You'll know exactly what the fuck you're doing. Now, let me explain something to you. This topic. You're not gonna be a market wizard in November. That's not gonna happen. What you're gonna know in November is that way you have a real clear understanding about what you're working towards. What's the end goal for you? What is the end goal for all of you that see everything I'm looking for? What is that? It is that you will confidently know when not to do anything to be still and know that there's no reason to be missing anything. That's the number one thing. That in itself will protect the majority of you from blowing out your funded account or blowing your regular trading account. Everybody that blows their account always can see in hindsight that they pushed really, really hard when the market wasn't doing shit. You have an outcome that you need to have happen. On social media equity curve, you need to make yourself feel better because your spouse or your significant other has caused you some grief. You're sick. You missed some days at work. You're behind bills, or you're just in debt. What's it going to do? It's going to cause you to do reckless bullshit. You're going to know not to do that by the whole before that, really. But by November, you'll know when not to do anything. You'll know when not to do anything. You won't go in the marketplace. You won't do these things. And you'll know what you're specifically looking for when you're going in environments where it's low resistance. You'll know exactly what constitutes a high resistance or low resistance climate that you're trading in. You can trade in high resistance, but you'll also know that you'll be using far less leverage. And you're going to have to demand a whole lot of patience that you would otherwise not require when you're trading in low resistance. But the market's really quickly running over, it goes right to objectives. That's what you're wanting to focus on. You want to focus on those types of signals. They're fun. They're easy to know when you're going to be there because those signatures are, like, they're very telling. And you see it when I talk about it in my executions. I'll say, all right, I'm looking for a lot of movement, or I'll tweet and say, okay, I don't want to see it be a straight run into this now. That's a low resistance equity run. When we are quiet and we're waiting for price to just chew through simple market structure, that's high resistance. It's high resistance. It's not moving quickly and efficiently through into your objective. So it takes a different type of mindset to go through that. Now, when you're first learning how to trade, you think that all trades are going to be like low resistance quick run. You get in, it runs because it owes you something, right? It owes you that profit. The fucking market doesn't owe you shit. It doesn't owe me anything. But these books and influencers make you feel like, well, hey, you sat down, you watched that chart for the last 20 minutes. You damn well better pay me something. It owes me something. That's the mentality. Especially today. The last 25 years, that's the mindset of most everybody. You owe me. You owe me. No, you have to earn that shit. And by discerning the difference between high resistance and low resistance equity runs, you'll be able to effectively trade, and you'll grow to appreciate and want to trade more so in low resistance equity run signatures, where the market is quick, just runs, and has these really nice big candles, just takes off and goes right where you want to go. I know how to teach you. I prove to you that I can see it happening before it happens. There's a logic there. That's what you're going to know come November. You'll know that. You will absolutely know it. Will you lose in some of your trading? Sure. You'll lose, and there's nothing wrong with losing. This money management, which we'll talk about also this year, will prevent you from blowing up. You don't have to be fearful of it. You don't have to worry about missing moves. You don't have to be in every trade. And you don't have to be in every market. You can pick one market that you feel confident in, that you like, and then that's all you need. It makes it so much easier. You know what those key levels are. Think about what I'm teaching you. New week opening gaps. New day opening gaps. Just that alone. The enormous, making up shit, like, the enormous responsibility of managing all that shit on your chart and templates, because new data opening gaps, there could be a lot of them, right? So, how much can you do trading 12 pairs? Well, wait a minute. I see. What there's no new week opening gap? Here's what you're not doing. When you look at Aussie dollar, this is the part where you write down in your journal. If you look at Aussie dollar, that currency pair has what? It has a commodity currency in it, Australian dollar, which means it trades on the futures market. That futures contract's going to have an opening gap. You use the price on the futures market, and you use that in reference to what the pair's doing while the futures contract's printing too. I was teaching you with real-time examples this week and last, where I'm using intermarket relationships and intra-market relationships. So I'm blending other assets, positively and negatively correlated markets, how they influence each other, how they dance together. All those things come together and give you a tapestry that you can really see everything. For legend, I can't remember which one it was. There was a Batman, Chris Nolan, I think it was the last one, where he was doing Morgan Freeman did something with the cell phone, and all of a sudden, all the monitors in front of him was like giving like an actual view of some shit. Okay? That's kind of like what this feels like. It feels like that. To put it like a little bit of a cinematic flair on it. When you're able to see behind price what it's likely to do. Think about it. When I first introduced the idea last week or so, I said, you want to look at the opening price on Sunday and the closing price on Friday, and then split that range in half, and also do it in quadrants. So you have a number of specific price levels. I also taught you that if it works towards just half that lower end and fails to go on the upper end of it, that means it's what? Decidedly weak. And vice versa, if it's coming down, if you can only dig into the upper portion of it and not the consequent portion, to the midpoint, that means it's bullish. By itself, it doesn't mean anything. But if you have the narrative that you think the market's going to go higher or lower, and you see that unfolding, it gives you a real advantage. It also teaches you if we're moving away.
Wait, what do you say? What do you say? What do you say?
To put it like a little bit of a cinematic flair on it. When you're able to see behind price what it's likely to do. Think about it. When I first introduced the idea last week or so, I said, you want to look at the opening price on Sunday and the closing price on Friday, and then split that range in half, and also do it in quadrants. So you have a number of specific price levels. I also taught you that if it works towards just half that lower end and fails to go on the upper end of it, that means it's what? Decidedly weak. And vice versa, if it's coming down, if you can only dig into the upper portion of it and not the consequent portion, which is the midpoint, that means it's bullish. By itself, it doesn't mean anything. But if you have a narrative that you think the market's going to go higher or lower, and you see that unfolding, it gives you a real advantage. It also teaches you if we're moving away from the new week opening gap, then we're probably going to trend tomorrow, which is what I talked about yesterday, real time. Told you we're going to have a large range day. We had a large range day. You can't fake it. It's there, real time, explained to you. And you have a whole year of this shit coming. Which led me to how I was going to close this session tonight with you. I have a lot of weapons. I have a lot of tools, concepts, approaches. I literally could make a trading model every day of the week for each month this year. And nothing else. And I'd still have shit to think about. I spent my entire life coming up with every possible fucking scenario to get me into the trades. So yes, when you see these dickheads out there talking shit, he's always got something. This is the reason why you can justify that trade. You're fucking right. Because I was afraid to get in the trades. I was afraid I had a weakness. I didn't know what strategy to use to get in, because every time I used retail shit, it was fucking failing me. Everything I tried, it failed. Steve Nielsen's fucking candlestick book. Garbage, didn't fucking do shit, but lose more money. Elliot Wade, tried that shit, lost fucking money there too. And I didn't try for a week, folks. I was doing this for a long time. 6 months minimum before I made any fucking changes. And I was doing things religiously. Nobody puts in the work like I do. Nobody does. Nobody puts in this type of work ethic in this. And when I was younger and I had more energy, every waking moment was this. It was this. I lived and breathed this shit. Markets and price is in my fucking DNA. I was made for this. This is my purpose. This is why I'm on this fucking rock. I'm talking to you. This was appointed for us to meet. You know damn well what you're learning is going to change every fucking thing before meeting me. You know it. That's why you're still listening. That's why you put up with my fucking shit all the time. Yeah, you know I'm kind of down, but you know what? Every motherfucker out there that had fucking genius behind them, there was something different. They were wired differently. That's what I believe I am. It is what it is. But if I didn't look at things the way I look at them, I never would have been curious. I never would have pursued it. These obsessive compulsive things that I was birthed with, that were a problem for me to wrestle with as a child, I channeled that shit into this stuff. And when I finally understood how these markets look, I have a mission. How do I bridge that gap that you're not supposed to see, and how I can communicate in a chart the things that don't exist in books, that other traders, teachers don't know anything about? Because believe me, folks, listen, they can talk all the shit they want now that it's growing in popularity, but if anybody knew this beforehand, it would have been out there. It would have been out there, and you know damn fucking well it would have been out there. And everybody that hears these people, and it's a small little people, small number of it, oh, ICT's renaming bullshit. Dude, you got $2.5 million in your fucking account. as soon as you give a complete rundown, a bibliography, where everything came from, what's renamed, and everything. And I guarantee you ain't getting it done. It's not happening. Sorry, but it just doesn't exist. BC. For this whole approach of looking at technical science, to take the name that Anton Creel mentioned in his little video, it's not technical science. It's just trade. No. It's absolutely fucking technical science. There is a science behind all this shit. When the daily high and low is calculated at midnight every fucking day for every fucking market, unless there's a manual intervention, that's fucking science, okay? That's fucking science. You don't see the Goldman Sachs boys going out there and telling you where the fucking low the day's going to be and the high the late of the day. You don't tell them. They ain't out here telling you anything intraday. They're going to tell you that it's noise. No, it ain't. This is fucking dubstep to me, okay? This is fucking classics. This is Bach. This is Beethoven to me. It's fucking symphony. It's beautiful. I see this shit as poetry. It's art to me. It's not fucking noise. To uninitiated, to the people outside this circle, it's fucking noise. It's a cult. Well, guess fucking what? I'm a proud card-carrying member of the fucking cult of women, motherfuckers. You got a problem with that? Kiss my ass. I don't give a shit what none of you fucking think outside our circle. I don't give a fuck. And you think anybody well here gives a flying fuck what you think? They don't give a shit. You ain't convincing them of anything. They're already in it. They've already tasted it. They've already seen it. They've already been convinced of it. And they keep getting new doses every fucking day. And that should encourage you, because I'm telling you something. I fucking wish I had this. I wish I had this fucking community. I wish I was a member of a community like this. I wish there was a fucking ICT that I could have went to and learned this shit from. I wish I had what you have right now. I fucking wish it. I wasted so much fucking time and energy and money chasing bullshit that promised market wizardry. And it was bullshit. None of their stuff ever worked. They couldn't prove they could use it. You never seen anybody out there fucking doing what I'm doing. If I say I'm precise and I'm telling you to the tick, I better damn well fucking be able to do that, right? Well, guess fucking what? It keeps happening over and over and over again. That should be encouraging, because you're in good hands. You're in good hands. You got somebody that gives a fuck how you're gonna do with this. That's not charging you anything. There's no fucking coupon codes. There's no fucking Black Friday specials with me. Every fucking day is a Black Friday special. It's fucking free. Free. And I just want you to appreciate it. Because I could have been just like I was. Capricious. Not really knowing what the fuck I was gonna do from one day to the next. And I could have went back on my word. If I was doing this, I would spend the rest of my life teaching other people how to do it. If I was that 17-20-year-old boy who thought he was a man, I would have said, no, it's just for me. But it wasn't given to me just for me. It was given to me so I could do what I'm doing. So no, you're not going to be a market wizard, you know that. But you're going to know how to find sellers. You're going to know how to engage in that. You're going to know how to place a stop loss and not fear for it. You're going to learn how to pyramid. You're going to be able to know what it is that you're waiting for, and also what changes the lay of the land where you can't no longer take a trade in it. You have to sit. And I'll teach you how to reverse it too. You're not going to know
What?
and please don't be upset, okay? There's a measure of realistic expectations that you have to maintain. You will not be able to consistently do what you see me doing, nailing the low ticks and the high ticks. Like that stuff takes long spans of time. There's so many things that I don't have the benefit of time to be able to pour into that. Just this year, it wouldn't be possible. But you don't need that, which is the reason why you see me taking partials, getting out really early, because I'm trying to condition you to do what? Be content with enough. Which is why I told you what? 5 handles. Do you see me trading with more than 5 handles? Of course you do. But I'm showing you that 5 handles is a good starting point. And if that's all you ever get good at, you're killing most of what you see in retail out there. Because a lot of people can't be consistent. Here's the thing that drives me nuts. Okay? When I see other YouTubers and streamers out there doing this, I want them to sit down and contemplate what it is that they're doing. And come up with 1 or 2 specific strategies that they know intimately. And this is what they're going to work with. And their audience will, number one, appreciate it, because they'll recognize it as its own, and they'll be probably doing the same thing that YouTuber is doing when it's time to trade on. By doing that, number one, it makes them a better trader. It makes them a wonderful medium to watch. And if they have a personality that's likable, and I like the people I said I like, they don't always rub everybody the same way. I like watching Patrick because I think he's funny, and I like the fact that he's brash about what he does. He looks and sounds a lot like I was when I was 20 years old. And I like Trades by Matt. Humble guy, he ain't trying to fucking shake up the hornet's nest with anything. Doesn't claim to be better than anybody else, and he's out there trying to find himself too. The other YouTubers I'm not going to mention because I use them for the purposes of sentiment, so I don't want to build the case that someone would think of me as belittling them, because I'm not. It's not even them that I'm looking at, it's their chat window and the excitement that their followers have when they think they see something in the marketplace. And no, I'm not going to tell you who that is, so don't ask me, okay? It would be rude for me to do that, but when I'm telling you I like someone, because I like them, I'm open about it. Like Hannah Montana said that. Like Hannah FX. I said Hannah Montana because I was talking to my son Cameron about Miley Cyrus. It was like, she's on Disney. I'm like, I don't know, named so many. She did not Hannah Montana. So that's where it came from. There's a couple other YouTubers that I'm watching come up. They're really new, and no, they're not students of mine. So it's not like, oh, they're students and you're just afraid to share it. No, it's not always people that do what I do. Like, I'm not closed-minded to the degree where, I wouldn't give my time to someone else. If they're trading, number one, and they're doing something that's noteworthy, not being a dickhead out there trying to be a clown, I'll watch them. And if it's something I think is useful to observe and watch how they manage themselves, I share that with all of you as my community. And you can learn from other people how they engage the marketplace when they take a losing trade, which is extremely brave. Like, to do that in a live stream, and then you show your face, you can see and hear every manner. You're not looking at the back of somebody's head. You're seeing their mug, their face. You can read their eyes when they are feeling the weight of their stock getting ready to hit. I mean, that's fucking courage. Okay, I don't care what the fuck you say. That is something that, in my opinion, it commands respect, because you're not hiding anything. You're out there exposing it all. Matt does that. Patrick does that, and I have a great deal of respect for him. Sitting out there, showing your cards, playing the hand that you feel is dealt to you, and then walking that in front of everybody, win or lose, and that's brass, man. It takes brass to do that. Some people just can't do it. I can't allow myself to be in a condition where I'm going to influence the outcome of someone else's money, because I can take a losing trade. It doesn't bother me. I mean, you watch me get stopped out. It wasn't a losing trade, but you watch me get stopped out, and immediately checked everything's good. Okay, boom, I'm right back in. You wouldn't do that. If you
Sell side taken, shift to market structure.
you would.
Everybody got.
I get stopped out. Okay, it's a mosquito bite to me. But for you, because you over leveraged it, because you're trying to do market wizardry, you're trying to get out of your job, pull a hat trick, and try to go into early retirement on the heels of ICT streams. When I go into the next trade, which is nothing for me, you've done damage to yourself emotionally and financially. Now you are afraid of the outcome of the next trade. And you may have watched me do 98% success week after week, day after day. And then all of a sudden, now you have that one loss, which probably wasn't all that much, but because you over leveraged it, now it's monumental. You've now laced the outcome, the result of the next trade. Now it's paramount that it must succeed. It has to succeed now, because you're damaged goods. So I know the characteristics that we as humans usually do. We do it all the time. We act impulsively. That impulsive nature is exaggerated in someone like me because I'm in balance. So I know if I see something in the marketplace, I got no problem running up a trade that would be 5% risk. And the fact that I'm in that type of trade would inspire you to do what? Well, shit, it's good for him, it's good for me. I mean, he must really trust this trade. And I might get stung. I'm not worried about coming back from 5%. 5%, I'm coming back from that in 30 minutes. You don't have that. You don't have that skill. You don't have that confidence. You don't have the weapons I got. So I'm trying to be responsible because I know the influence I have. And I'm trying to be a good steward with it. So what do? I walk you through the chart, one candle at a time, showing you market wizardry. Foresight, precision. It should do this, it shouldn't do that. It should do this, it should not do that. And market just walks on a leash and delivers what we're looking for. Most times. Not every time, most times. So when you're looking at what we're doing over the course of this year, in closing, let me say this and we're done. The idea of what you're going to be. You're not going to be a superhero. Okay? You're not going to be a juggernaut, but you're going to be a fucking savage. And that's enough. You're going to know how to find setups that yield high probability results. That's not 100% perfect. It's high probability. That means you have every advantage in your favor that is most likely going to pan out for you exactly how it's been explained. And I could literally stand in the motherfucking courtrooms and do this in front of judges, juries, whatever the fuck you want to do. I'm doing it right now because I know it. It ain't going to fucking stop. Every week, every day, and it will not stop. Nothing's fucking changing except for it's going to be better. It's going to improve. Everything's going to be more seamless. Everything's going to become faster, folks. That's the change that's coming. Everything is going to become faster and more streamlined. Data will be much more efficient. Latency will be reduced. It's only going to improve. Nothing's going to change adversely unless we're no longer allowed to trade. And that might be too Orwellian for some of you, but anything can happen. Anything can happen. And the more people that make their living or wealth doing this builds the likelihood of what? Being fucked with. So it's a matter of as long as it's going to be allowed for us to do it, it's going to work. And worrying about what if they take away the ability for us to trade? If you're worrying about that and not actively pursuing doing it, you're wasting your fucking time. It could be 20 years from now. It could be 10 years from now. What are you doing between now and then? Working? You're wasting your fucking life. This year is a divine appointment. You found this because it was destined for you to have this. You're seeing someone that I know me. Okay? I know me. I know that there ain't a motherfucker out there that's going to pour into anybody like I'm pouring into you. You're not paying me for shit. And I'm proving it every day with precision, with the theory, the logic I'm teaching you. It's repeating. If it wasn't algorithmic, listen folks, if it wasn't absolutely fucking controlled, there's no fucking way that I would know what it's going to do minute by minute. Think about that. It takes more faith to believe in fucking Santa Claus than to believe that the market is algorithmic now. I mean, it's so obvious now. It should be fucking obvious. And why it's such a divisive thing. Like, you should be thankful. You should appreciate the fact that, hey, it's fucking way off my back that, hey, it's not pure randomness, because if it was really fucking random, how the fuck could you sleep at night knowing you're risking money? You think these organizations out there that are risking billions of fucking dollars are doing it with the understanding that it's all fucking random, guys? Who the fuck knows what's going to happen tomorrow? I mean, the market could go up anywhere. It could go down anywhere. But yet, that's the horseshit that you swallow down and think, oh, man, they said it, so it must be true. Simple as that. And it should be a fucking carnival experience every day with me because I'm showing you the fucking future. We're time traveling. Every fucking day we're time traveling. You're seeing the outcome of them fucking charts beforehand. That's like having tomorrow's winning lottery numbers every day. Think about that. Think about that. What the fuck? Seriously? That's what it feels like? It should be feeling like that for you because that's exactly what it felt like for me. In my later 20s, it dawned on me. It dawned on me that, oh shit, I have the ability to be able to see the future. And then it's that moment you start looking around and you're waiting for the fucking swarming in, the fucking men in black showing up. It feels like that. And when you walk out there every day and you're able to see it and it's delivered into your hands every day, just like this, it's a feeling that I cannot describe. When I asked that guy Forrest, I said, you know, because he asked me, why does our community behave the way it does? Not all of you, but some of you that are really just fucking warriors, like you just want to throw down because somebody said something that you didn't like about me or what you're learning or you or whatever. It's going to be like that all the time. It's going to be the fucking show time. You don't need to be I'm out here doing it and nobody's keeping up with me, so just laugh at him. But when he said that, why's our community act the way it does? Like, some of you would be willing to take a bullet for me, which is insane. The idea that you would represent me in any manner whatsoever because you have a measure of respect for me that is beyond father, okay, beyond a parental relationship. And I understand that. Like, I understand that dynamic. But when I responded to him, I said, okay, try to explain to me, like I'm someone that's not a traitor, okay? Try to do this to somebody else. And you've probably already done it, and they're never going to understand it like you feel it and experience it. But I asked towards the interview, I said, explain to me in a way that you should feel satisfied. And I'm a lay person. That means I'm not someone that's versed in trading. I'm just somebody off the street. Just nobody ever sat down with me and talked about trading. And then boom, here you are, you're profitable. You just walked the full week. You did everything right. All trades on par. You're dialed in. Explain to me how you feel doing that. And he struggled to do it. And watching his face as he was reaching for words that would never come close to satisfying. And he doesn't even know what we're doing here. But he knows what it feels like to be on side, dialed in. You can't get any more dialed in than perfect. You can't improve on fucking perfect. To the fucking tick. How can you fucking improve on that? You can't. So why the fuck are you not elated that you exactly know where you are, what the fuck you're learning, where you're going with it? Because I'm telling you, the sky is not the end. It's not the limit. This motherfucking opportunity is limitless. It's fucking limitless. You have no idea how far you're gonna go. I guarantee you, you're thinking your high point is this. It ain't high enough. It ain't fucking high enough. It's gonna be way beyond that. Fucking way beyond that. You just can't see it. Your vantage point isn't high enough for you to be able to see how far you're going to go with this. And that's why I want your story. I want to know what you've done with it. Because I am placing something in your hands that nobody can. That's real empowerment. That's fucking superpower. Like, that is, you're able to read the fucking future. Who the fuck wouldn't want that power? You know what's going to happen. You have an enemy? Okay, what's he going to do? You need to make money? Where's the next thing to make money? You don't want to lose money, so you want to protect your money. Okay, what do you don't want to do this? You don't want to invest here. You don't want to do that. That's empowerment. You're not going to be influenced like the mortals in retail that are always plagued with trying to get back what they just lost because they didn't know what the fuck to expect. Think about it. Everything that we do, folks, everything that we do is around an element of time. This is what time it should do this. You're setting your fucking watch to the shit that we do in trades. You can set your fucking clocks in your home, at your work desk, on your wrist, on your fucking phone. Well, maybe not on that now. But the point is, you can set all this shit like Swiss timepiece precision. We're not guessing when certain shit's going to happen. You don't see that in fucking retail anywhere. It's like, well, you know, anything can happen. You gotta be in front of your charts when it's gonna happen. If you miss it, you miss it. You know, that's how it is. You gotta put it in the chart time because you don't know when these opportunities are gonna present themselves. That's what every fucking book I ever purchased. That's the paint. That's the painting. That's the picture. That's the narrative they try to put you into believing. And that's bullshit. That's grade A fucking bullshit. That's a lie. That's somebody that doesn't know what the fuck they're doing. That's what that is. And they're writing a book asking me to pay $60, $35, $40 for a bunch of bullshit. I wouldn't wipe my ass with that shit. It's useless. And the only reason I don't throw the fucking books away is because they're sentimental to me. I worked very hard, part-time jobs, just to afford that bullshit. And for throwing it away would mean, like, you know, I worked my ass off just to throw it away. Now, I wouldn't get enough satisfaction throwing it away. I like seeing those books and laughing at them. The writers of those fucking books and how clueless they fucking are. That's why I hold on to them. I hold on to none of them with any value that they're helping me continue being the person you see, you live with, the lectures that I teach on.
Dang, bro. At this point, I'm bound to like have dreams of ICT. I'm Michael.
None of that stuff. It's all regurgitated horseshit. It's the same stuff over and over again that does not fucking work. But how do people make money with retail stuff? They're good money managers. Because remember, if you're a good money manager, you flip a quarter, and heads you're a buyer, tails you're a seller. Limit your losses, let your profits run. That's a winning strategy right there. That's it. Believe me, just test it. Get $5 in pennies. Sit down over the weekend. Flip a quarter, okay? And move the pennies to the other side of the table you're at. And that's your bet. And do that same thing over and over again. It's really hard to lose the money. It's really hard to do it. If you limit how much you're going to bet, and you allow for, if you win, you get 3 pennies. If you lose 1 penny. And you split the quarter. Heads your buyer, tails your seller. Think about it like that. And you'll see, it's very hard to lose all of it. It's hard. It's not easy to do it, but you...
Okay. These notes are actually a little bit respectable. I'm not gonna lie, but we can do a little bit better than that.
But you don't have to manage money. You don't have to manage yourself. None of these books adequately talk about that, which is the reason why I share you with these types of lessons, because that's not manage yourself. I'm chemically imbalanced. I'm how important it is. It's fucking even worse.
All right, now it is 11:28. Let's see what time we finish this.
Think. When you watch me do these 5 things, that's not ratchet ice. That's me with all of my focus, with nobody asking me anything. There's no chat window I'm reading. I'm not looking at Twitter. I don't give a fuck about what questions are coming up with anybody else. The only thing that matters is that hand that's forming right now in front of me. My attention is dialed the fuck in on that. I'd 3 decades of conditioning for that. When I'm talking about price, or I'm talking about something biblical, faith-based, you're not going to hear ratchet ICD come out.
I'm gonna put on some music. Relax for a minute. Can't get too much of an ICT overload, you know? Oh, that was nice. I went full screen on accident. That's nice. Wait, is I don't know how to spell efficiency every single time. It's I before E. Efficiency, right, like that. Hey, I spelled it right. Consolidation theory. Inefficiency. Wait, what did I say? Did I just say something crazy? I honestly don't really know. Who will I ain't gonna lie, it's looking a lot. I like it a lot better without like a chat, dude. It got toxic. It got toxic, and I don't want my channel to be toxic at all. Like, I want it to be a sugar fest kind of, which doesn't mean I can't handle it. It's just like, why would I want it? You know, especially when I'm learning and developing. I don't want anything to influence my subconscious mind. Dog. I still have 4 pages of notes. Good damn, bro. Fill up a whole newsletter with this. Alright, this page kind of has some not so pertinent. Oh, I got you. Inefficiency? Is that right? I see what you're saying, bro. There's no. I said I started this at 11:28, and it's 12. I've been doing this for 30 minutes. Wow. Another page. Okay, real talk. What PD arrays do I just see that pop out at the chart? I do mess with new week opening gap. And fair value gap. I do like order blocks in fair value gaps. I don't know, bro. I feel like I just need to do more backtesting and give a little bit more time before I'm able to find a model, and just be content with that. That I don't need a model right now. Yeah, new week opening gaps more for like targeting, for me, or like narrative, in my opinion. I don't know. I feel like I really like the new week opening gaps because I've just seen them in my charts happen over and over again, and new day opening gaps. Like they'll offer distribution and like just an area of dynamic fair value. I think though, if I were to be straight up with it, if I were to give it 3 years of like not taking a trade at all, I think I'd be a beast. Like I'm saying, 3 years of not placing a live trade at all and just like maybe just being demo. Cause like realistically, if I'm like live trading on YouTube even with a demo account, then I feel like I would still be able to possibly generate income. But I wouldn't want to do that. Like the end goal for me is to become an actual trader. But I mean that's just like a possibility. I can give you something to backtest. Sure, but like honestly, it just wouldn't be as authentic because then it wouldn't be coming from my own eyes, and I'll likely not be as drawn to it. But like if I just look at someone else's model, try to trade someone else's model, try to find someone else's model, it's not going to be the same, you know? Like you found your model through probably your own eyes. Oh, I can. To add on to your notes, are you trying to build your social media or equity curve? I put that in. Well, are you asking me if I'm trying to build my social media or my equity curve? I would say I'm me right now. Me, I'm trying to build my equity curve 100%. I don't care about my social media following, but that does not mean that I'm not like I'm trying to be strategic with it, and I'm trying to be able to build my social media curve while also developing along the way. And being real with my journey, and not like bullshit like trying to look better than I actually am. That's why I'm doing these live streams. That's why I'm live streaming for like 11 hours or so, because I want to prove that it takes work, and through work and like actually showing up and doing the reps, doing the repetitions, and being able to maybe like inspire other people along the way. Then I mean like that's really the key. Like I don't really care too much about who likes me or not. I don't. The reason why I turned off my comments is because I don't want like people to have any sort of negative impact on me subconsciously at all. Like I want only positive things. Dang, this took an hour. This took an hour to do.
It's 100% dialed in. But when I'm in an environment like this, where there's no filter, I'm sitting in my trading room looking around at monitors that are off. I'm looking at my stereo and my speakers and TV and entertainment center here and my towers that are underneath my trading desk. Nothing's really drawing my attention. It's just I'm letting my mind go. And whatever's in the front gets to talk and say. Whatever it wants to talk about, whatever point it's being made, it's just 100% 100 mile an hour. And it's not easy to track me. It may be entertaining for some of you. I'm not trying to be entertaining. I'm not trying to be funny. I'm not trying to be a comedian. But I'm trying to communicate to you that the things that you don't pay attention to, that you think that aren't important to you because you don't have that problem, it'll be easy for you once you start making money. You'll figure out how to manage making money. That's what you're thinking. You have no idea. Proof of that is when you start making real money. You're gonna fucking short circuit right there.
I like his chart settings.
Because you've been conditioned all your life to make nothing. Give up your entire fucking day, your entire week, wear yourself the fuck out for a little bit of money, come home, be tired, no energy, no time to do anything. You gotta make sure you get 8 hours of fucking sleep to go do it all over again. Then when you start making your monthly salary, gross, before taxes, in one fucking trade, you're like, whoa, this was nice. Wow, this was such a fortunate windfall. And then it repeats. And then you feel like, well, wait a minute, what am I doing to do that? I'm going to continuously do that. And then it becomes every week. And then it becomes every day. And then it becomes each session, morning and afternoon. That kind of windfall continuously, it changes you. It challenges you. And it's going to show you where your flaws are. As a young man, I was continuously looking for a way to find validation because I lost my grandfather. My father didn't raise me, and my mother didn't want anything to do with me. So I've always spent my entire life seeking validation. And when I got it from my grandfather as a father figure, I lost him due to pancreatic cancer, and I watched this strong, big, meaty man get consumed and went down to 90 pounds. This man was 300 pounds and not a fat ass. He was big, big ass shoulders, big ass fucking back, big ass fucking arms. He was a man. That motherfucker he looked like a fucking redwood. Like he was a tree of a man. But I watched that disease consume him. And he looked like a shell. And when I lost him, I was lost. Because he was my strength. He was my direction in life. This was all before coming to Christ. I was literally clinging to him. He was the father figure that I needed. He was the discipline. He was the enforcer when he needed to correct my ass and put me on the right path. You're fucking off. Get your ass over and do this. Okay, done. Chores, I had them done. He never had to ask. And I remember asking him, I said, Pop, should I join the Navy? Because if he would have said join the Navy, I would have done it. just to please him, just to get his approval. He said, no. The country's not what it used to be. Nobody should do that now. When we were doing it, it was a different nation. It was a different way of doing it. But what they're doing now, no, don't do that. So I didn't. But I told him, I said, I'm going to be an entrepreneur. Oh, we'll see it. That's what he said. We'll see it. I didn't take that as, well, that ain't gonna happen. Meaning, if I'm gonna do it, I'm gonna fucking do it. I'm not gonna just talk about it. I'm gonna fucking do it. If I'm gonna do it, I won't talk about it. And I knew exactly what he meant. So I didn't talk about it. I set my ass.
How is this his black?
I was gonna be a systems analyst. I was going to school for computer programming and information systems, and that was my goal. I wanted to be a systems analyst. I wanted to do all of that. In my schooling, I couldn't secure a job. So I was a coder in 6th grade by choice. I was making my own games in 6th grade. But that's not where I was supposed to be. I looked at things as an algorithm even before my 6th grade math teacher taught it to me. Everything was a process. Everything was managing if-then. In my head, I manage my everyday living. If I act out on what I'm feeling, this is what's going to happen. Then I'll have to deal with that. There was always an internal dialogue in my mind wrestling with bipolarism, wanting to act out.
I feel like they're nice. They're nice, but
Emotion, embarrassed with emotion, and not understanding what that feels like wrestling with it. And you see these fucking assholes online.
bro, you had those on like standby.
You wouldn't talk the way you do. You wouldn't say those things because it's very difficult living with it. Very difficult. But as a younger guy at 20 years old, when you start seeing money come into your hands, that your uncle that went to University of Maryland has a business degree, and he's working on fucking Kentucky Fried Chicken just to make ends meet, and you can see on his face he's ashamed. And then you, his nephew, pay for his school shoes, his clothes, and his entertainment because his father and mother can't do it. I'm glad I had that experience.
Oh, why is this price chart on the left?
I felt like I'm embarrassed to do it for my uncle. He didn't ask me to. I did it because they couldn't do it. If I didn't do it, my cousin Aaron would have been wearing the same shoes and the same clothes that he wore the previous school year. And you know how it is with kids.
How do I change that? Canvas?
But apart from that, I was a dick. I was an arrogant motherfucker, and I threw it in everybody's face. I make more money. I pay more taxes in 3 months than your fucking whole family makes in a year. That's who you are listening to when I was 20. That's how I was. When you start making a lot of money, it's going to show you where your weaknesses are. So as a 20-year-old, when I said those things, what I was exhibiting was all the fucking pain I was carrying inside. And I was trying to deflect it and show it as an offense. I'm able to do this. Fuck all of you. You're nothing. You're fucking piss ants. I make more money than your whole fucking family does. I pay more taxes than your whole family fucking earns in gross salary. That's the shit that came out of my mouth as a 20-year-old. And I'm ashamed of having said those things and acting the way I did. But it manifests because I needed validation. When I was saying those things, I wasn't trying to hurt anybody's feelings by doing that. What I was wanting to actually have happen, and it was stupid, but this is what everybody does on social media. You think by taking your shit and look at my fucking cars, look at my shit, look at my fucking watch I paid too much money for, look at everything that I got, but you can't see them executing fucking trades. But they're going to show you all this other shit. Look at my house. Look how rich I am. You're a poor fucking low IQ motherfucker. When you see that, you're seeing a weak man like I was at 20 years old. You're seeing a weak man projecting. And what I wanted to hear was, you know what? That's fucking awesome. And if someone would have said that every time I did it, I would probably broke down and start crying and saying, you know what, that was a fucking dick move. I shouldn't have said that. And they would have given me what I really wanted. Validation. And that's what some of you are going into this with. You're looking to use these market wizardry concepts to make a lot of money, to make a name for yourself. So that way you can go out on social media and project your weaknesses. But you're going to do it in a way that you think it's an offense. You're going to really stick with these people that really fucking made you feel insignificant. You want to crush them. You want to just make them feel stupid. They're never going to feel more stupid than they are. The fact that they even troll other people, that's the testimony that they're fucking idiots. Because if they were really making money, if they're really successful, they wouldn't be doing this shit. They wouldn't be hiding people's fucking comment sections and on their fucking videos and making up dumb shit constantly. Spending more time with someone else. A grown 50-year-old man has more of their attention span than their own fucking wife and kids. Come on now. That's someone that's trying to compensate for something. And I was compensating for the lack of direction in my life when I was 20. I would have done anything to have anyone at that time, because not one of my family members said I was going to be successful at this. And when I started seeing success, they all turned their head and didn't want to acknowledge it. And it pissed me off. So what did I do? More of the bragging, more of the showboating, more to buy cars, more to go on vacations, more of this, clothes, buy $400 pair of shoes, I get them muddy, throw them in the fucking trash right in front of my uncle. And he cussed me out and said, you're a stupid asshole. You have any idea how much money you just wasted there? I worked my ass off all fucking week long to make that after tax, and you just fucking did that in front of me? I hear that in my fucking heart every time I think about that. That cut deep as fuck. I didn't throw those fucking shoes away to be a dick to him. I just figured, well, fuck it, I'll just not buy no pair of them. But because he saw me do something that was ridiculously stupid, I could have cleaned them. But in my mind, fuck it, I'll just buy another pair of shoes. Who gives a shit? Go to Nordstrom's, I'll buy some more shit. There it is. Done. But the look in his face when he talked about that, and then I watched that glassy, like he was on the verge of so frustrated with me and ashamed of me, the way I was acting. He emotionally said those things to me, and it was like he kicked me in my solar plexus and I couldn't breathe. And while I did leave those shoes in the trash can, when he walked back in there, I waited for him to go upstairs, and then I went in, and I was upstairs. I got cleaned up. I was renting a room from him, and I went outside, got the shoes, cleaned them up. I gave them to a friend, but I know he went out there the next morning before he left for work to make sure those shoes weren't in that trash can. Money is going to challenge and change you if you let it, and it will allow you to feel confident about being the wrong type of person. And I'm going to tell you this, and I've said it before, but I mean it. Every time when I was younger and I was trying to showboat and flash and talk down to other people, I fucking never felt powerful doing it. I always felt like
Is that better?
I wish I could have went back in time and said nothing like that.
I know we'll keep it at what it's at right now until like something crazy.
Act out. I showed out, talked my shit, spent money stupidly, thinking that people would do what? Give me respect. You know what they did? They played me. Every girl wanted to sleep with me because they knew what I was throwing around. And hey, all I gotta do is tell this fucking idiot he's fucking cool, and I can get in his wallet. There you go. And you young men think that that's not gonna happen to you, and that's exactly what the fuck's gonna happen. Because there's a woman out there, and there's a man out there that's gonna play your fucking ass like a fiddle. Because you're too wrapped up in your weaknesses that you're trying to hide because now you got money. You're gonna try to use that money like it's a fucking sledgehammer. Smash everybody over the head. I'm better than you because look what I got. That doesn't make you better. It just means you spent too much fucking money on the shit you got. That's all it means. Who's really fucking smart? These fucking people that are buying $300,000 fucking sports cars? That's fucking stupid. That's fucking dumb. 8 to 10 years from now, none of us is going to be allowed to have a fucking combustible engine, so who's going to be laughing then, right? So anyway, I just want to touch base with all of you, and I want to decompress and get some perspective on what you've been enduring, what you've been experiencing, and what you're learning, and in concert with what I mentioned this morning about maybe not knowing how far you've grown because you don't have to measure it yet. And your best testimony of your growth is your journal. The things that you're learning, you're observing, and we're only really into this now a couple weeks. We haven't even done a full month yet. And I've already changed most of your perception about how price is booked by giving you 2 specific ranges of inefficiency where the market's going to constantly go back to and revert to it for the sake of fair value. And by understanding just that alone sets up all kinds of setups that you were not even aware for. And it repeats every week. It's going to be this repeating phenomenon that takes place. And you also know that every morning at that New York opening gap, the difference between where we closed yesterday and the 9:30 opening price. What happens if there isn't a gap there? You still reference the respective opening and close price. You have to have those levels. Those levels are going to be useful. The likelihood of you opening exactly where we closed can happen, sure. Is it going to happen most times? No. And for Forex, you're going to use the futures market. Those Canadian dollar futures contracts, those Australian dollar contracts, the Japanese yen contracts, the British pound contracts, those are going to provide you that gap that you're going to have.
How many videos have you watched in the past month or so? I don't know. I mean, I will say that there is like a loophole to get into when you're just watching videos. But I also think that there's a bunch of that's beneficial. I mean, it's not like I'm just watching videos just to watch videos. I'm taking notes. I'm writing down literally everything that's going on, and I'm going over it, and I'm taking those notes over again. I don't know if that's a waste of time, but I guess we'll see. I mean, everyone has different opinions, and therefore everyone's process is going to be a little bit different. I don't like that. I do like the black and gray. I think that's like some chill price action. I'm nearing the end of this contract code. Oh, this is the last day of this code. We have a classic buy day expansion, looks like. Okay. Go to Twitter, and the next lecture is in the 21st. I think you're trying to influence me too much, Dustin. I ain't gonna lie. Like, I appreciate it, but
Question: would you build a website for a major brand with more than 200 million?
So in this video we are going
the Brits. Oh shoot, bro! I'm way in the future. Ooh! Oh my gosh! Do we have a we have SMT too? Oh, this is beautiful. We've had the stop on here. Change state delivery, market maker buy model here. Monday, smart money reversal. Tuesday, expansion. Wednesday, stop hunt. Thursday, expansion. PM session doesn't really offer anything. I'm gonna have to go. I'm gonna have to go to the other contract, but then I won't have the lower time frame, which it's cool. It'll just be more like higher time frame work. It isn't bad. It's a bad thing. Possible TGIF here? Back within that range? Oh, ES is nowhere near that buy side liquidity pool. Monday the 6th? Oh my gosh. Look crazy divergence there. Daily Sibby, I'm guessing. Oh, beautiful. Right into the premium end of that. Very, very high end. Looks like a volume imbalance there, which is a new week opening gap. So we go from having a classic buy day to having a classic sell day here. Buy side taken within that Sibby. 9 a.m. opens. Then we get manipulation. We come up. We take this high within this imbalance here. And then display slower to this inefficiency. $8.45 we open up here, and then we manipulate higher to then distribute lower. Dang, bro, I can't get it. Well, we definitely have big divergence. into an imbalance there. Hey, appreciate the sub, brother. I just can't get like crazy technical with it. No 1 minute. I mean that's chill. Narratives on the higher time frame. I think this is just like CRT, but I haven't really studied CRT, so I'm just gonna say I'm just gonna call it like a true sweep of liquidity. Alright, we're back.
Than realized. And when you're looking at the US 500, where some of you are concerned about, well, I don't see this and I don't see that. Even though you can't trade the levels and the markets because your country won't let you trade the US markets, and you can only trade the CFDs. The very candles and time that you see me referring to in the futures contract, track as best as you can in those respective candles. The levels are never going to line up. It's never going to happen for you, which is why I've had a difficult time wrestling with that, because I'm trying to bridge that for you. And it's in many ways much like what I was opening this conversation up with, how I looked at problems that Larry Williams and other traders said they have, how go and I would pursue that as a puzzle to figure out. And I'm wrestling with that right now. I'm trying to bridge the disconnect between what the US 500, the US 100, and US 30 CFDs do and how they book with that of the actual US futures market. So when we're not together, that's what I'm doing. But I'm literally going through charts and trying to come up with a way where I can make this easier for you that can't trade the futures contract. I might not be successful, but I'm working my ass off to try to do it. And if I'm able to get to something where I think it's easy for everyone to understand using it, I'm going to teach it to you. I'm not going to hold it back. It's not going to be in the book. It's going to be in a lecture that I'm teaching real time over the charts so you can see it. But I can't dilute my attention because it's very easy for me to chase cars. I have a very hard time holding my concentration on any one particular thing. And the two things that hold my attention the best is anything that has to do with price or the markets. So if I'm watching a candlestick chart book, like you can hear it. Like my focus is 100%. I will not let anything else get in the front.
Expansion up to buy side.
Wrestling with bipolarism is like, imagine you're in a room, okay? You're in a room with people you don't know, and they all have a question that they're asking you, and they're all asking it at the same time. And you don't want to offend any of them, and you want to give them your undivided attention, but you can't. So you wrestle with the uncomfortable state that makes it feel like for you, because you want to give every one of those individuals that is asking you a question your undivided attention, your respect, your consideration, but you can't. That's what it's like being bipolar. I can't sometimes fight off these impulsive either responses or remarks or train of thoughts where I go off with a rabbit trail. I'll come back if you give enough time. I'll come right back to where I ended. And it drives my wife nuts. Like, we've been together since 1997. And she's like, I still can't get over how you were talking. You're having 5 fucking conversations. 5 conversations. You know exactly where the fuck you left off, but you go off on these other things and you didn't finish the shit you started here. But if I don't stop you and you just go right back to doing it, it's hard for me to follow you. But I can see you go back to it and you finish it because you don't want to leave anything undone. But I know how it is listening to me. And this is what I tried to hide from all of you because I'm emotional about it. I feel like it's a weakness to do that as an educator. And I understand some of you might say, well, don't look at it like that. But it doesn't change the way I feel about it because I've wrestled with it all my life. So when I can talk in my best form, which has always been the recorded format, where I've filtered out all of the imbalances when I'm swinging from, both sides of the spectrum, it's rare that I'm balanced for the short period of time where I can talk focused, not reach with a colorful language that invariably shows itself here. That's the mentor I've always strived to be. And that's the one I only wanted you to see, which is why I did recording only. I knew if I was in a setting where if it was live, I would feel that way. And I was wrestling with that when I was doing private mentorship. And I was trying to do live sessions. And I was wrestling with all of that right then and there with 860 some people, all asking me very politely initially, and then got more aggressive because I couldn't answer everybody at one time. And I still get people complaining to me. I sent you an email fucking 9 months ago. Nobody responds to me.
This is the trade that I took today. I don't know if this is going to be better for Twitter videos, but let me know if you like this style videos for like trade recaps. But anyways, I called this A+ a lot of time because we swept those mini equal highs and we were inside of a bearish fair value gap. And because of the instantaneous reaction from that bearish fair value gap, and because we swept all that LRLR, it's like mini LRLR.
My attention, but I'm human. Like I'm not omnipresent. Like I can only occupy one space at one time. That's it. So because I'm central to wherever I'm at right then and there, and I'm not omnipresent, I can't humanly answer everything. Like, I can't do that. Like, I feel guilty when you all give me support and feedback on Twitter when I'm looking for it. I literally will sit there and go through and read every single comment, and I'm liking it. So that way, I'm communicating to you that I gave you my time at that moment, and I read your message. And I want you to know I read it. So when I heart it, I read your message. Like, I took time, I read what you said. If I like it, if I think it's impactful to me, if it moved me, or if it's something for the community that I want to share, I thought was funny or it's helpful, then I'll retweet it. But I wear my heart on my sleeve as a mentor, which isn't cool. That opens me up to criticisms that will invariably do what? Cause me to have an emotional response, which is typically often regular. Now, in all of the shit that's been said about me, I'm supposedly threatening people's families, threatening children, and paying for people to fucking threaten them. I am perfectly capable of.
My favorites right now are MACD, RSI, and Bollinger Bands. These indicators are way better than any of my lessons previously. It's basically a buy and sell indicator, and they need to be. I will post a video on how I am using them this week. I will also be opening a Discord server that I am traded on Twitter, so you guys better buy it. Trust me. Starboy. This shit will hit and change lives. I'm also 8 and 9 on earnings options plays this month. Don't sleep on me. See you tomorrow. Stay safe. Toodles. Yes, I see two here. This week we're going to see some new strategies.
Oh my god.
My favorites right now are MACD, RSI, and Bollinger Bands. These indicators are way better than any of my lessons previously. It's basically a buy and sell indicator and no need for anything else. I will be posting a video on how I am using them this week.
Bro, Dodgy's funny. He should have trolled ICD. So order block forming.
Fucking threatening somebody on my own. I can do that, and I don't do those things. I've never had to do those things. It's not in my character. Even in my worst bipolar fucking episodes, I've never fucking ever threatened anybody's fucking family. Nobody's children were ever threatened, and I sure as fuck did not pay anybody to do that. And for a man down in fucking Texas making a fucking narrative about this bullshit for fucking clout and attention, you're fucking stupid, dude. You're fucking stupid. And I hope you get in that courtroom and that motherfucker opens a fucking animal fest on your fucking ass. And you're gonna find out that nobody got paid by me to do any of that shit. I don't need to do that. You've done nothing to slow me down. You've done nothing to convince anybody learning this stuff that they're wasting their time. You're seeing all of these people growing in their understanding. You're seeing people fucking making money. They're bringing their fucking receipts. The companies that are paying them are interviewing them. So, it's about time to shut the fuck up. And on that note, my friends, we're gonna close this one. And I'm gonna wish you all a pleasant evening, morning, whatever it is, where you're at in your neck of the woods. We'll be back at it again tomorrow with another carnival of atmosphere, I'm sure. Overpriced and candlesticks. I think that's it. Till next time. It is a good morning. So I'm gonna probably get some complaints that there's noise in the background and the audio isn't all that good. I'm just gonna have to deal with it because it's Saturday morning and I'm just chilling. You hear the rain in the background as it falls in my pool. And you're probably gonna hear the hummingbirds still buzzing by. I was surprised even though it's like near rain, they're still cruising around out there. Coming in, getting a drink. Hear them? That's them chattering as they go by because they compete to be into the feeders that we have hanging around. So today I want to talk about excellence. Destination excellence. It's not enough for me to be correct about a trade. It's not enough for me to feel like I got one way of beating the market, one way to work in a specific range, whether it be a small range or a large range day. It's not enough for me to know how to trade just one asset class or what time of day. And I mentioned it when Corbs did my first face-to-face interview. He asked, how many things have I created? Like, I have a lot of things that the industry now uses, and I'm honored and very privileged to be in that position. So don't think I don't appreciate it, because I do. But he asked, how many things do I have that I've created? And I said, well, I have 81 specific PD arrays that I utilized over the years to frame an entry. Excuse me. And I feared, when I first started, I feared entering. I feared not having the right entry point. And as a new trader, as a new student of the markets in the early 90s, I was intimidated by the complexities that this industry brings with it. And for the folks that come to me wanting to learn how to trade and read price action and study it, I'm certain that it feels like overkill. And it was designed to be overkill because I needed to overcome fear when I first started. So that's the reason why I have so many weapons, so many tools in my arsenal. But excellence doesn't require all that. Excellence doesn't require 81 entry methods. And there's a tide that's shifting when it comes to me as a topic or a subject matter on social media. The idea that, and you may be one of these individuals, you use my concepts, use my ideas, and maybe you've gained a little bit of a following and whatnot. Maybe you've created mentorships or some kind of a community. And their impatience waiting for November to come for me to depart from all of you on this one-on-one as close as it can be type of experience. When I set sail in the second week of November, they're in a hurry to get out there and start panhandling because there's going to be a void of me doing things like this. There's a number of them out there, and they've masqueraded as really good supporters. But you can see them in their posts, you can see in how they talk, in the titles of their videos, and they're just chomping at the bit. They can't wait. They're seething. Because once I stop doing this, there's going to be a thirst for more of it. And I want you to understand that, obviously, if it was something that was part of me that wanted to have this, I'd stay here and do it. I don't want to be the center of attention. But I do want to deposit the information into your hands. That way you can go about your business the rest of your life, the rest of your trading career, and feel confident that I have given you more than enough. More than enough. But they, many times, will lead you to new discoveries. Not about trading, but about yourself. And the excellence in this industry is not from tools. It's not from the process. It's not the things that you use to get in and out of trade. It's how you, as the operator, you, the trader, handle yourself and engage the market. Well, wait a minute, Michael, you're saying that it's not the tools, it's not the things you use to trade, but how you engage the market, how you think. I asked everyone that were willing to participate in it on Twitter. Have you rushed into trading before you learned how to do what it is I'm teaching? And yesterday, about an hour after the post of that poll, it was predominantly, yes, everyone has done exactly what I said not to do. And now you know, as an individual that maybe didn't take that vote or are afraid, like somehow I can see or other people can see that you made that vote. You're afraid or intimidated. You're embarrassed. You don't want to admit that you did something correctly. And And that's one of the things that, when I sit down and talk to you, I'm reminding my children, and I'm reminding you as the audience members that are privy to this conversations I have with them, that I made terrible mistakes in the beginning trying to do things that I was not ready for. I took on the challenge of trading with real money with just a month's worth of book reading. That's it. That's it. I did a couple little things. I looked in the charts and I figured, well, this is easy to see. 1, 2, 3 tops, 1, 2, 3 bottoms, bull flags and things like that. That seems easy enough. I can go in there and do that. And then I got smacked around. My first real soiree in the marketplace, and 50% of my account was taken overnight, trading option in orange juice. So I know what it feels like to rush in and do things ahead of time, ahead of schedule. But I was hungry to get out of the rat race. I was hungry to become more than just the average everyday existence, go to work, come home, tired, and feel like that maybe, I'll be able to retire eventually. So I was impatient, just like every one of you are. And if you're saying you're patient now, you're not. That's just you trying to convince yourself, or everyone else that would see your social media post, that you're patient. I'm not patient. I may come across as someone that has the patience of a saint, but I can tell you this, I am absolutely impatient. I wrestle with it every single day. And I get impatient with people that come and they want to get to the point ICT. The point is, it's going to take a lot of fucking work to learn how to do this appropriately and correctly. And I don't sugarcoat it. I don't do those types of things where I'm going to convince you that in a week's workshop, or a month, or a couple months, or even 1 year, you're going to be consistently profitable. But in 1 full year, you will have a full baseline. You have some measure of understanding what the normalcy is over the entire calendar year for the marketplace. There are seasonal tendencies that come in. They shift in and shift out. And you have to have that, because you can't just take a small sample set of time observing price action, regardless of who teaches you, whether it's me, someone else, it doesn't matter. You can't take a very small, tiny little snapshot of time and engagement and think that you have it figured out. Let's do a little exercise here, okay? Interactive. If you're driving, don't do this. If you're operating heavy machinery, don't do this. And the girls are seeing the hummingbirds, like 12 hummingbirds flying around me right now. You'll hear them in a second when they get close enough. When the girls, when I say girls, I'm talking about my 2 boxers, I have 2 dogs. And Bella's doing great, by the way. But the exercise I want you to do is take both of your hands and hold them in front of you. Outstretch your arms in front of you. You bring it in front of your face as far as your arms can reach, and touch your 2 thumbs together and your 2 index fingers. And it should closely resemble a triangle. Okay? Now, take that triangle that you're holding with your hands and pan around to any portion of something in front of you. Whatever the landscape is, if you're in a room, do that. Okay? And I want you to think about that small little triangle area. That small little triangle area is the perspective that 1 year gives you. Now, look around, all around the room with your head panning around now. That's what your career will look like. It's dynamic. But when you're learning, when you first step into this industry, or any skill set, you have to go in with a very small sample size. So that way you can condition yourself to look for something that repeats. There's something in the marketplace every single day. Every single day, I have a model, I have an application, I have a PV array, I have a style, I have an approach that I can actually go in here and smack the shit out of this marketplace and take something home every single day, every single trading session. Now, I didn't have that. I'll call it arrogance because that was arrogance, but this is the fucking truth. In the beginning, though, I was timid. I was afraid. I was afraid to do anything because I was clueless to what was available. Now, I could understand. You can put your hands down, by the way. That small little triangle, that perspective, that's what I had when I read Ken Roberts' book, which was, at the risk of sounding disrespectful, it was a piece of shit book, okay? But it did get me excited about the idea of trading. It really did. It got me interested in trading. It turned me on to a movie called Trading Spaces, and I just fell in love with the idea. I'm gonna be a trader. I'm gonna devote my life to the marketplace. That's what I'm gonna do for the rest of my life. I can't imagine doing anything else. I fell out of love with martial arts. I was gonna run a martial arts dojo, and I said, this is me. Like I feel drawn to this. But that small little perspective of understanding a few things, but your impatience drives you into thinking that small little perspective is enough, and it's not. That's just the invitation to the party. That's the invitation to the dance floor. That's just the first chords of the song that you're gonna dance to as a career, as a trader. That's not the entire song. That's just the first few notes. And rarely do you ever hear the first few notes of any song and think, well, this is gonna be a banger. Because sometimes I've heard something that sounds like it's gonna be great, and it's not good. And other times I have songs and maybe a playlist that you guys keep asking for. I just play what comes to mind. Like, I don't have a playlist per se, but some of my songs probably aren't interesting to you. Maybe it might not be the genre that you like. Maybe you're offended when I say country music sucks. It just depresses me. I don't like it. But I have to live the life that listens to it. That perspective, whatever it is limited. And you can't take that small little perspective, whether it be training with somebody that has an idea that they're going to turn you into a master trader in a short span of time. I don't believe that's possible. Not because I didn't do it, but because I understand human nature. Human nature is, I want it right now, I want it fast. And that side of the marketplace in every industry is always going to be able to fleece the impatient. The impatient. Watch and see in November how this balloons up into shortcut ICT, turn it around in 5 minutes and all this. It's going to be ridiculous. And I want to have something in recording where you hear my voice referring to it in advance, because that's not the right way of doing it. It's going to make them money. Now, I'll have a whole lot more millionaires that they can thank me that I gave them a voice, but that's not going to turn anybody into long-term, consistently profitable traders. It's going to make them money with their courses, their mentorships, their whatever it is that you're trying to do. And I'm not trying to kick you down if you're one of those individuals. I'm not trying to say that you shouldn't be successful. I'm just being realistic and reminding you that that's not excellence. Like, you're the equivalent of a ticket scalper outside of a major event. trying to sell a ticket 2-3 times over what was really paid. You know, it's fine manufacturers, I understand that, but you will not have the character that's respected by doing what you did or will do. And you don't care because you want to make money, and that's all that matters. That's fine. Look, I appreciate that hustle because I was willing to do a whole lot of shit when I was younger too, and do things that would have otherwise made me cringe today. When you're hungry and you want to leave the rat race and you want to get out of the mundane and being typical, the average bear, I wasn't made to be like that. I had a lot of shit that I had to prove because I had parents that didn't do anything with me. I had a very sheltered childhood, and the few things that I did involve myself in, that was my entire world. So when I saw the opportunity to bloom and really experience the world, experience life by having success, and this would be my vehicle, this would be my pathway, my highway to pursue that destination of excellence. It's funny, if you could please just permit me to talk casually, and this isn't meant to sound arrogant, but I've met a lot of people in this industry, outside this industry, and those individuals that know me, it's really strange, and you're going to experience this too. The fact that I can do these things and are able to explain it before it happens, the opinion of other folks expands beyond the scope of trading, and they'll think that you're an authority on everything. So what do you think about this and what do you think about that? And many times my response is I don't know anything about that. I don't talk about it, I never mentioned it. And it could be some off-the-wall topic, even sports, for instance, because they see I usually wear a Yankee cap. And I'm not really a big sports fan. I just like the logo. And I catch a lot of shit for it in Maryland because they don't like the Yankees up here, and I just love that shit. I love it. So, Manipulation 101, AMD, I use my hat to see which one is the weakest in character. The people that talk to me about the Yankees, they have a superiority complex, just like the people online that troll me. Okay? They're the people that are not happy in their own skin. They have not found excellence. They're not residing in excellence. The people that are residing in excellence, the students of mine that have discovered their model, they don't even follow me on Twitter. They don't watch my videos anymore. They found their model. They're living their life, and they're doing exceedingly well. And I'm very proud. And I don't need them to constantly give me any feedback or report cards. They said, look, this is where I'm at now. Thank you so much. I just can't imagine where my life's going to take me, but I'm excited. And they're done. They're not working anymore. They're making fortunes of real, not demo dollars, baby. Not demo, and they're not trading funded accounts. I'm talking real cash, real money. And they don't give a shit about what I'm doing on Twitter anymore. And I don't feel bad about that. I don't feel like, but you don't love me anymore. You don't worship me. You don't raise flags and make a ticker parade about me. That's not what this is about. It's never been about that. I want you to get to the point where you can say, you know what, Michael? I listened to all your shit. Okay? I had to go through a lot of shit to figure out what it is I should be trading. And I got it. Thank you so much. It's been real. I gotta go. See ya. That's exactly what I want all of you to do. I don't want you to feel tethered to me or need to feel tethered. I read people commenting in tweets saying they're depressed or they're anxious or they're upset and they're lonely and they're going to miss me already. I don't want you to feel that way. I've given you enough right now. If I stop, you have plenty. But I have more. I'm going to share. I'm going to teach you very specific things. And once you understand them, that's where you take your attention. That's where you take your devotions. Each day, you study. And you make whatever you describe as excellence, whatever that destination is for you. It may be leaving your job and just matching what you make your job. And that is excellence. Because now you're not relying on someone else to pay you, to feed you and your family, to tell you when you can and can't. That, to me, is excellence. And then you get to that point, and you think to yourself, well, I've only had to do this much to get to this point. What happens when I now apply the new experience over 3 years now doing it? I'm going to apply a new measure of commitment to it. And I'm going to start broadening my efforts and doing a little bit more than I'm used to. Not overnight trying to make $1 million, but just slowly growing into your new self. Remember, before that ugly-ass caterpillar turned into that butterfly, it had to die as a caterpillar. And it was very ceremonial. It wraps itself up in its silken web, cocoon itself, and then it dies as a caterpillar. It closes itself off to the world. That's exactly what you're supposed to be doing. Right now, you're all bookworms. You're caterpillars. You can't fly, but you want to. And you want to be beautiful in your sight and everyone else's sight. But you have to seclude yourself. Once you get the information, whatever that information is that you want to focus on and specialize in that I'm teaching you, it may not be day trading, it may be short-term trading. It may be crypto stuff. Even though I don't like it, it might be that's where you're going to be. You may be the next legend in that asset class. Learning from me, doing the things I'm teaching, you may become the most widely respected and looked up to individual in the industry. Who says that you aren't or couldn't be? You're the one that's going to stop it. And you're the one that's going to fuel that. But you have to be able to segregate yourself from the influence of social media and negativity and things that are really just a waste of time. A waste of time and energy and effort. When you're devotional to studying, putting yourself in front of the charts, reading price action, whether it be live or in hindsight, you have to continuously make that investment. And it will yield limitless fruits. Even the smallest of experience, whether good or bad, in the proper learning environment, yields so much in the future that you can't understand or appreciate right now. The things I've learned, the painful lessons I've learned, many times come up in trade. Like, for instance, the trade I did yesterday. When I was in that trade, reaching for that 44.93 3/4, I wanted to see it trade up in the weekly volume downside. That's really what I was trying to reach for, but I knew everybody would see right away the 16th of June 2023's high for ES, and obviously above old high, that'd be liquidity, buy side liquidity. But while I was in that trade over 3 hours long or so, my mind reverted back to either painful experiences I've endured, because I've seen so much price action. so many different markets, so many different time frames, so many opportunities, so many stellar executions. Just really phenomenal entries and just managing the positions. I've seen many of that over 3 decades. But in between all that, there's a laced layer of failures, losing, blown accounts, depression, regret, all those things. And I remember all that stuff while I'm watching price action. And sometimes it can be a distraction. Sometimes it can be an encouragement where I'll watch something in price action and it'll remind me of something I did before. Now, I don't go out thinking about, oh, remember that time I was trading copper and I did this? I don't physically go into that vault in my memory and say, let me dig that out. It's just when I see something in price action, it makes me remember that event because it was impactful. It was either a win or it was a debilitating loss. And you're gonna have a whole memory bank of that. As you go forward in your career, you're gonna have that same thing happen. And for people that say you shouldn't journal, it's a stupid waste of time, it's dumb to do that. I'm an alpha, I don't do that shit, I'm out here to make money and look at me. I promise you, those individuals are not. They're not as organized as they pretend to be. You're not seeing all their trades. They're a wreck emotionally while they're in a trade. And here's the telltale sign. Look at the average length of the trade if they make that available to you. Most of them won't, especially now. Now that I'm talking about like this, you'll never see them want to share that. If you're comfortable, and this is what you want to be, when you're at your destination of excellence, you're not in a hurry. You're not in a hurry. Once you mature to a point in study that it's just a matter of time, you're going to get what you're looking for. You want to leave your job, it's going to fucking happen. You can't set a date for it, though. That's the mistake. That's the mistake I try to do. I try to say, okay, I want to be done working at this time. But now it was 20 years in advance, that far out. I had 20 years, that was my retirement. At 40, I want to retire. I don't want to be working anymore. At 40 years old. I was a 20-year-old thinking that. And at the time, and looking back now, I still think that was a realistic objective. About 6 weeks or so, maybe. About 7 weeks or so, off the top of my head, I can't think. August 8th, I'll turn 51 years old. And I can tell you as a 51-year-old, thinking about how I thought as a 20-year-old, the timeline that I first started with, that was realistic. And that's not to say that you learning from me is going to take you 20 years, because a lot of people like to troll that bullshit, but their students don't bring their fruits. You don't see anybody making $500,000. Okay? You don't see these other people out there making millions of dollars. You don't see it. So when you waste your time listening to that stuff, what you're doing is you're looking for perfect excuses.
We just came down to this imbalance here.
One of the best gifts I'm going to give you is
therefore today, expansion day.
Many of you just simply want to collect. You want to collect new gadgets, new methods. And that is in itself a deterrent from you growing. You have enough. You have more than enough. But because you're constantly addicted to the new voodoo that I'm releasing, everybody wants to be on the bandwagon when the new thing pops out and they want to have a conversation about it. That's great. I mean, I'm going to lie and say I'm not thrilled to see people's interest in it, but it becomes, it takes on this, it's a distraction. And I created it, and I can tell you honestly, the way people take things I release, they make it, like, I don't even know the word I'm looking for, it escapes me, but yeah, I guess it would be called, like, it's called, like, yeah, I'm just going to be honest, that's what it is. Whenever I drop something new, whenever I teach something new, there's a large portion of our community that just goes berserk. and initially it's funny, yeah, but I can be honest and practical and tell you that as a teacher, as a mentor.
ES just is not even as close to as animated.
Many of you would never settle in on just what you have and work with that, because you think that there's something else out there. But I mean, he released a silver bullet. It's perfect. It's time. I know when it's going to form. And for me, that was a big concern. Like, when does it form? When do these order blocks? What's the right order block? Because really what you're asking is, what is the setup that's never going to take a loss, and I can trust it's going to move in the right direction that bias is indicating? Well, here's the thing. I only have things that go in at 90%. But there's 10% likelihood I'm going to fail at it. The trade won't go exactly where I want it. It might go in a position or a trade. Morning. Guys, give me a heads up on Twitter if the audio volume is okay. You should see the ES chart. Volume good. Not that I can do anything better than I'm doing now. My microphone's volume is all the way up. I'm literally within kissing distance. So that's where we're at with this, okay? Alright, just bear with me 1 second, okay? Alright, so today we embark on a topic that many of you have been chomping at the bit to get to, which is pushing the button. So obviously tomorrow we have FOMC, so that creates the likelihood of a rather slow trading session. A lot of folks just waiting to see what the Fed will be doing tomorrow. Everyone's making their bets as to what to expect, what not to expect, and I don't know. Okay, so I don't ever try to go into the market and try to forecast the actions of the Fed. So I think anyone that tries to do that is just fooling themselves, or at least attempting to fool themselves. So while we're waiting for the morning session's opening range to complete, which is typically 9:30 to 10 o'clock, we keep a relaxed view on the marketplace. I'm not trying to go in with any kind of hard line bias yet. I want to let the market itself tell me what to look for. And all we're looking for this morning is a small little opportunity threshold objective, which is 5 handles in ES. So while obviously later in the year you'll see me do larger pulls, we're doing 20, 30, 40, 50 handle runs. There'll be days for that. Today's not one of them. So I kind of like want to beat on the drum of how I teach all of my students to start with, which is a really low-hanging fruit objective. I believe that anyone that goes into this with that mindset in terms of studying like that, not trying to get rich overnight, not trying to get rich anything at all really, just trying to carve out an opportunity that repeats over and over again, that you like, that you can find comfort in seeing, being patient, looking for it, allowing the market to present as many advantageous signatures in our favor that would warrant a price move that is, at least by definition, the way I define it, high probability. So I'm willing to submit to a longer time than I normally am this morning. Usually I do about an hour or so, and then I cut bait or whatever. I'm going to try to stay with you this morning until we get an opportunity that fits my criteria. So I'll kind of give you the nuts and bolts as to why I believe it should do what I expect it to do. I want to preface it by saying, and most of you already know this, it's been with me for a long time, this is not a signal service, okay? Let me remind you of the disclaimer as I talk. That disclaimer will be popping up a few times during this presentation today. It is not an invitation for you to copy. It is not an invitation for you to try to fix your drawdown. It's not an invitation for you to get your last little piece of your funded account challenge passed. Okay? I'm going to give you certain exercises today, and I'm also going to tell you where I believe it's going to go. I'm going to inspire you to use your demo. Okay? I don't want you to use your live account. If you're trading with anything I say today, you're absolutely doing it wrong, and you're going to regret it. Okay, so what we're doing is I'm teaching my son, who is embarking on a funded account challenge, and I won't name the company because I don't want to represent anybody, and I'm not suggesting that they're good or bad. I'm just saying that he's making an attempt to do so. That's where he wants to go with it. He doesn't want me to give him money to do it, which is great. But his concern is a new student of the markets, and he is absolutely green. He doesn't know how to do much of anything. So his concern is he's fearful of getting in. And that was one of the initial things I had in the 90s when I first started trading commodities. I was fearful. I didn't know really what I was looking for, and it was manifesting itself in my anxiety about when and what market I should be trading, what time frame should I be trading. If you're new to all of this market stuff, or even ICT content, it can be a little bit bewildering. You know, like what time frame should I use? What market should I trade? You know, what setup? What's the thing I'm looking for? And the reason why I teach the way I do is I present lots of different approaches to skinning that cat, but it allows you to bring in your own personality. Now today, unfortunately, I'm going to try to force one particular approach to getting in. And I'm going to try to utilize a fair value gap, which is predominantly the most visually easy thing to find in a price chart. Much like looking at equal lows that we target for sell-side liquidity, that's where we think that the market's likely to draw to. Much like we expect equal highs to be a draw for buy-side liquidity. Those types of things are pretty generic, and if they're not hiding from you. In fact, it's next to impossible to not see them. Meaning, all we're looking for is a clear indication that the market's likely to reach into some level of buy side or sell side. And I'm submitting to not looking at anything this morning because I want to kind of like present the opportunity in the closest manner to someone that doesn't know what I'm teaching. So I'm limiting my perspective to just this 5-minute chart. Now, you don't want to be doing this, obviously, the market just opened up, by the way. You don't want to do this if you're trying to trade with real funds. But trying to pantomime as close as I can to someone that would have a limited perspective, which is someone that doesn't look at higher time frame charts, someone that doesn't look at much of anything except for the chart they're looking at the time. Usually it's a 1-minute chart or 5-minute chart because me and other people on the internet have showcased opportunities that we're presenting on those time frames. So therefore, the audience members will gravitate to those time frames thinking that that's the only way to do it. When it's not. It's a good teaching medium for me because it gives lots of opportunity. Plus, it gives no room for any delay. Like it's right there on the fly. And this 5-minute chart may not be the time frame I'm going to use. I pulled that up to show the Monday closing regular session price, which is at 39.84. So just sticking to this time frame here, we're opening up with a premium in the sense that we are opening up with a gap from yesterday's close. So we've worked higher overnight, and if you go to your regular trading hours tab, click on that. There's the gap we're looking at here, okay? So it's a very significant gap. Whenever it's like that, I like to see a little bit of a move to the upside to draw in the public, make them want to chase it. And then typically what it'll generally do, not all the time, but generally, it'll want to move back down inside of that range. And what range am I really speaking about? Let's outline that now. So using the regular session close price here, up to the opening price this morning, to that gap, which is significant. Going into this morning, I want you to focus on the potential for just trading back into that range that's shaded here. We're not trying to make the case that it's going to trade all the way back down to 39.8450. That's not an argument I'm trying to pose to you. What I'm suggesting is, can we see a 5-handle price run from wherever we trade up to? And I'm not trying to pick the top. I'm going to let the market indicate that it's stopped, at least for the short term, going higher. I'm not trying to go long. I'm going to try to look for something that gets into that range here. So I'm giving you a directional bias that I'm looking to operate in. Doesn't mean that it can't go higher. Doesn't mean it can't go down to the previous session closing price. We're not trying to forecast that. Remember, the argument here is, how does one conquer fear of getting in? How do you conquer that? And you probably had anxiety, especially if you got lucky enough to get a funded account where you passed the challenge, and now they give you the funded account, and then suddenly you're met with this new anxiety, this new. Let me go back to the electronic session. Just be mindful that this shaded area here, that's our opening range gap. So where we closed yesterday or previous day to where we opened, that's what's being highlighted there. So I'm going to drop down into the electronic trading hours. That shaded area is what we're representing here. Okay. So when I first started in 1992, I was admittedly in a rush to get the account opened up, but then once the account was opened, I was frozen with fear, and everything I was looking at on the chart seemed like it was Greek, whereas I thought before I knew what I was looking for when I really didn't. But I was fearful and paranoid about doing anything because I was afraid of that first trade being what? Wrong. I was afraid of taking a loss. I was afraid of doing it incorrectly, and no one knew what I was doing. They didn't know I had money in the account. They didn't know me as a trader. I wasn't online. I wasn't an inner circle trader yet. I was the guy that just opened up a trading account with Fox Investments, paying $100 per round turn, per contract. Yes, it was robbery. But that's what we were told that was the normal back then. So a discount broker was like Lynn Wallback, where you paid $30-some per contract. So I was fearful, much in the vein that most of you would have, doing it wrong. But I was also afraid of, because I only had $2,500 in the account, which was extremely under capitalized. Like I didn't have enough money. So what I was thinking was, not only do I have to be right about my trade, but I also have to be right about my entry, not going into too much drawdown. Because as soon as I put the trade on, they're going to do what? They're going to take that commission right out of that. So I got to cover $100 right away. So if I'm trading the grain market like soybeans, I have to have at least 2 cents of a move, because each penny move is 50 cents. I'm sorry, $50, much like an ES mini contract. So I was already overthinking everything, and that anxiety caused me to be much like a deer in headlights. And let me also talk about, real quick. This is about teaching you how to overcome fear. It's not about teaching you to follow me and use it as signals, because I know some of you are here just for that very reason. If you're not listening to what I'm teaching, it's not going to be beneficial to you. I could get out here and push the button and be right all day long, but it's not making you better. It's not teaching you how to do it on your own, which is really what I'm trying to do here. It's the only reason why I'm even doing live streams, is to show you how to do it. And my son, who's hopefully going to learn from this, and he wasn't privy to all this stuff that I'm talking about now, because he wasn't interested in trading. He was a typical teenage kid, video games and high school antics that kids do. But my concern, much like all of yours, if you've ever experienced fear, and some of you probably are fearful of doing it wrong even in a demo account. I've had many people reach out to me that they have ruined several demo accounts not knowing what they're doing, and they're just so frustrated they can't even get to a point where they can push a button there, which is extreme anxiety. But you're placing too much emphasis on the outcome being perfect for you. In the beginning, as I'll show you today, you want to exercise and do drills. And I'm going to teach you how to cope with the initial fear of getting into a market move and not worrying about that outcome being profitable. Now, before I close this session, obviously my goal is to find something that moves 5 handles. That's obviously the intention today. But I'm also going to present opportunities where I want you to think about what you're being shown in the chart. I'm going to point to something and ask you to conceptualize what it is I'm pointing at, and does it make sense to utilize that as an entry versus the ones that you'll actually see me push the button. Now, it's a skill set that you'll obviously learn over time, but you can't just expect with a live account, whether it be a funded account or your actual funds in a traditional broker, you can't expect those types of conditions just to materialize magic and all of a sudden now you have to trade because you're using real money now, which is the reason why I'm an opponent to anyone teaching that people should just learn how to trade with real money. You don't learn how to trade with real money. You learn how to engage risk where you didn't have that before in paper trading and demo trading, but you learned how to trade with a demo. That's what a demo does. The demo is not just to familiarize yourself with the platform or broker. It's absolutely to teach you how to trade. And anyone that says otherwise is just a fool. And that's the bottom line. So we're looking at a market that has a little bit of a mixed bag this morning, much like we had yesterday. I was calling most of everything we saw yesterday.
I'm actually gonna head out. I'm gonna head out right now, and then I'll be back live tomorrow. Low-key, not hitting a brick wall, but I'm just gonna get some rest, And then yeah, we'll be back tomorrow, and I'll be live tomorrow. Probably won't be like a crazy thing. I mean, I guess we'll see. Anyways, I appreciate you, and I'll